guys. Happy Thursday to you both.
Hello.
Woo. Hola. How's everybody this morning?
Good. How are you?
Good. First day over 40 degrees in the last 72 hours or so. Feeling kind of good.
It is
Energized?
technically the last day of winter
Really?
today. Yes.
All right. See, I didn't
Gonna
know
get
that.
the vernal equinox on Friday. So it'll be nice because you get the thing Chicago hinge where the east-west streets line up with the rising and setting sun. It's a cool visual effect. That happens in other cities where, you know, the buildings line up the right way.
Is that when we go outside with like an egg in our hand or something like that and do something?
No.
Okay. I just want to make sure we don't have.
No, but you go outside with your
Really
iPhone.
voodoo shit.
Go outside with your iPhone. You take a
Okay.
picture of the sun.
Okay,
And then you
okay.
put it on your Instagram.
All right. Good.
That works for him.
Yeah.
Yeah.
Yes.
Yeah. Yours will be really zoomed out though. Your picture. You'll have like one of those boomer pictures.
And it'll be horizontal.
Yeah. Or you'll do the Tom where you'll
Do
be
it the
like,
wrong way?
Like look
Behind me?
It'll just be a big like mug, and then you got like just like a tiny little sun in the back.
Wow. Feels like pick on Tony day today. It's so ready. It's
Aw,
Sorry.
sweet, precious baby. How are you, delicate flower? Did you have to shower in the dark today?
Oh yeah,
Did you
yeah.
get your door
How was that?
fixed?
Say it again?
Did you
Shower in
have
the
to
dark.
shower in the dark?
Yes, this will be shower in the dark now for the whole month at least of March, maybe
You
into
know what you gotta get?
early
Yeah.
April. If you didn't hear yesterday morning, my pocket door broke on my bathroom. So
Send you a link. I got these.
I got a guy.
Well, just for in the meantime, because it's gonna take some time. You can't just get somebody there anymore day of. Everything takes 6 months.
Nah, I got a guy.
You got a guy?
Cuts a little hole in the way. It's a pain in the arse. I mean,
You got to get on Amazon. You can get like the motion detector lights that you charge via like a USB-C charger.
Oh yeah, that's good. Yeah, like a nightlight.
Yeah, like a nightlight
yeah.
thing. I got them in my closet. They're like this big. They're great. You get a couple of those. You just put them around, and every time you walk in, they go on.
yeah, I know. The problem is it shines into the bedroom where my wife is sleeping.
No, but he's
These
saying
are like
you
soft
position
light.
it. Yeah, they're
Yeah,
like
these are
under
soft
light.
light.
Yeah, I think it would be okay.
So I have a speaker in my bathroom that has a light and a fan and a bunch of other things and music that you can play. And
Yeah.
the light.
You don't know how to use it because
I know how to use it.
wired.
I know how to use it. I know how to use it.
You did every boomer does this.
I know how to use it. I don't know how to use the harmony system I have, but I know how to use it.
That system is the worst system I have. I can't. The technology that goes into that.
You're gonna make Shark. He's gonna
was built
text me
in
any minute now because he
1995.
wants to fix it for me.
That technology was like 1995 technology.
I put it in 2019
I know.
or
I know, 'cause
18
you're
or
a
something
sucker.
like that.
Sucker.
Technology, you can get me. I'll give you that. I'm not
they
good
got
at
you.
everything.
Your speakers are this big in the ceiling.
Well, I mean, it's a high ceiling, 18-foot ceiling. I mean, we want a little thing.
When was the last time you saw a speaker that was this big?
What is this show?
It's making
What
fun
are we
of dad
doing?
is what it is.
What are we doing?
I mean, we could talk about even the S&Ps being down 33, right near the lows.
Ouchie.
Right near the lows of not only
Yesterday.
Sunday,
Yeah.
but also the lows from November. I mean, we could do that, but
Yeah.
that's so depressing if we
Well.
do that. And Thursday for 0 days is usually the worst day for 0 days. We could talk about that.
Why is that? Just because?
Just from our research.
Sure.
shows that-
We got that question, like why? And I
But
was
like, why though?
Well, it's not because it's my opinion. Like now everybody's
Oh.
saying that, gold down $260 and silver down $8, which is 10%, is, now we need to get out of assets, you know what I mean, to raise cash. When before, when we're going higher on gold and silver, that was the hedge you needed for inflation. I mean, it's all BS.
who are
Trade
you
prices
mad?
out of
Who-
you. See, this is what happens when you make fun of my speakers.
Who hurt you?
Back to that question. That it was a good question because I
but
got
why?
that from a viewer.
Yeah.
And as like somebody that just trades and didn't really think about the why, like why would
Right.
it be worse?
Yeah.
I just assumed that it was just of the batch, like of a data set. There's always going to be, like
Sure.
everything works on a distribution.
Sure.
Some are going to be good. Some are going to be, way better. Some are going to be way worse. And like that's just normally how it works. And that's really the answer. Is that
It was random, and you had to pick. We had to have one, and that's the one that
there's going to be one that is worse than the rest.
I know, it's like the day that you pick to have a surgery. Like one of them, like it's worse. It's statistically proven. Like there's just like maybe you don't get a surgery on like a certain day. Like,
but it's like when he comes back from his golf trip on Sunday.
Yeah, right.
Yeah.
But it's like why?
Why?
I don't know. It's the same surgeons. Like it just happens to be that day. That is this. There's no
It's a bad day for a hip replacement.
There's not a lot of certainties in an uncertain thing like markets. Like you can't just be like, oh well, this is going on or this happened, so then this is going to happen.
I will give you the flip side. I will give you the flip side if you'd like to hear that. Tweeted it out last night.
The what?
I'll give you the flip side of everything I just said a moment ago, and I'll give you the other side now. First underwater close in the market in quite some time.
I saw you tweet that out.
You're a little late. While you were calling me, I was actually on the last call, which is the show that we do here at Tasty Live. I was making fun of him because a lot of times when I call, he doesn't answer, and then like I'll call him back later, and he'll be like, "Oh, I'm so sorry. I was in the sauna." In the pool.
No, usually my phone is on silent. Is usually what it is.
I was, driving Vinny to this, that. It's just like it's always something.
Sure. So then he works a half day. He's exhausted.
He texted me. He called me.
And
texted me and goes, "Oh, now who doesn't answer?" He called me at 2:45. I'm on the show.
You're on the show.
Like I used to do the show.
It's not like I'm in the sauna. It's like I'm grinding here.
Well, I used to do the show every day at 2:30, so everybody knew that every day I would do it. You couldn't call me at 2:30. I don't know what days you work, what days you don't work. That goes for both of you. But that's neither here nor there. I will give you the other side of the coin here, which I tweeted out yesterday. Said we had our first underwater close, although, as my friend Craig said, it was very slight. It wasn't a big.
It was like kind of a.
Felt it down 100. Volatility stayed bid most of the day, if not all of the day, and bid higher for most of the night. Maybe we get that sell off opening, and that marks usually an underwater close after you've had some capitulation to the downside. It marks a little bit of strength. So that's what I tweeted out.
Yeah,
that's my call for the day.
Yeah, we'll see.
It's random, like it. But take it what you want. I mean, nobody knows the future.
Yeah.
I mean, Sylvia Brown does, but
hey, more importantly, wasn't today
Wait, Sylvia Brown?
Psychic.
She was the one that she had the show, right?
They all had shows. I don't.
I'm still of the age where you would just call them up. Like on the phone.
Sure. Yeah.
Didn't one of them have the call, like a call-in show?
Miss Chloe or something. Chloe.
Boomers.
Yeah, that was like late 90s, right?
Yeah. It was the greatest time.
Yeah.
What a time.
It was the greatest time. Hey, March Madness, greatest time. We did all the Rob and Maria.
Yes, I would like to update everybody that if I win, I will be.
Oh, it's if not win.
Well,
you got to manifest that.
Are we partners?
We are certainly partners. I mean, there's a sweat equity, and then there's a skim off the top equity.
Wow.
Which has now been doubled to now include the great one, Tom Sosno, as well. So my sweat equity, which included shopping lines, just for a little extra house edge for you guys. You guys are the house. I just wanted to let everybody know.
You put it all in a spreadsheet. You click the button. It was so easy.
This guy.
So, Vanetta, we have all our bets.
Yes.
You can have any part of it before they start. It's today.
No, I'm good.
You sure? All right. We have like 300 apiece or something between the two of us. Or 200 apiece times 3 if you want to do that.
Yeah.
Yep.
600.
600, yep.
600 American dollars?
Per game.
Per person. Okay. Last year, we went 8 units.
$600.
Well, but it's a lot to outlay. It was a lot.
But don't
I
worry,
may or may not
he fronted us the money.
I fronted them all the money. They got deep pockets. They're okay. They're
I can't wait to watch. I can't wait to watch some bookie come back.
I can't wait till Tom
in the hole
goes
for 5 dimes.
when I say, Tom, you owe me some money, and he'll go like, new phone, who dis? And then, like, I lose my
I
confidence.
mean, I don't
paper
feel bad
trades.
for you. Like, he's going to get the T-Rex arms, and you're going to be hung out
I'll
to
be like,
dry.
yeah, I get that to you next week.
If Tom's ever owed you money, he will pay you, just not on time.
Yeah.
Sure.
He gets great pleasure in it.
I mean, you're gonna have to go up to the coffee shop and like start like knocking cups off, and you're like, would be a real shame if stuff got broke, and like you're gonna have to just go in there and like intimidate all the hipsters
Oh
at
my
his
God.
coffee shop.
Yeah.
Like,
Oh my God.
Oh, that would be good if I show. That would really. Actually, that is some
Do
leverage.
that for you too.
yeah, that is some leverage.
Hey, Tom,
like,
you don't pay me, and this Guido shows up at your fancy schmancy hipster coffee shop.
Right.
Chains out and a baseball bat.
right, might be a real shame.
Yeah, it'd be a real shame.
Some were to get broken.
Oh, so good. So we have the top 3 seeds minus the spread.
Okay.
Everything else, money line dog to win a unit. Then we've got a half a unit each on the first half unders and the game unders.
Okay. These
All
are
of
just
them.
words to me, but
Everyone.
I hope everyone wins.
Yes.
I hope everyone's
And
a winner.
I hope everyone.
No,
has
you
fun.
don't. You hate it when we get paid.
Yeah, that's
no, you
true.
do. You'd
That's
like us to break even, maybe pay a little bit of juice.
Look, here's the thing. Here's the thing.
Just to spite.
All I want is Chick-fil-A for breakfast.
I know I really messed that up.
So if you win,
If we win, I'll somehow try to get you Chick-fil-A for breakfast.
But
How's that work?
I forgot to mention so last year we were up 8 units. The year before that was a good year. We were up like almost 15 units.
I thought the last year we were only up like 4 or 6.
No, so the first day was not good.
Okay.
Second day was amazing.
I got
How it
you.
was. First day I was like, oh shoot.
And everybody's reminding me you got the roll on the futures, so really it's closer to 6,600 on my numbers. So sorry, it was 50 handles away.
Yeah.
So there you go.
You're all good. Well, hey, good luck to all of the bracketologists out there.
Yes.
Happy March Madness. And if your school is in it, good luck to your school in it to win it. But hey, we got a great show for you today on this thrilling Thursday here on Tasty Live at the top of the 8 o'clock hour. Fan favorite trades from the research team. The world's greatest financial think tank presents their trade ideas to the bats. Definitely some interesting moves in the market yesterday, continuing into today. So we'll see what the research team has come up with. Then at 8:40, we have Johnny Trades. Nikki presents a neutral, bearish, and a bullish position. You want to give the people a little taste, a little preview. Do you even have your trade yet?
No. This is all live. I mean,
Okay.
You don't know. It's actually going to be an interesting time because a lot of volatility is out there. There's a lot of stocks that are pretty significantly lower.
Right? Probably trade
which
our
would be
strategy,
good.
change our strategy a little
Yeah.
bit, even in a Johnny trade type thing.
Yeah. So it should be a good one.
Keep it locked in for that at 8:40. Then at around 9 o'clock, we have a market measures. Before you double your contracts, watch this.
Pretty self-explanatory.
That
Not
is.
sexy as a title.
No, I like that as a title, though.
Yeah. No, but they've been good. The titles have been real snazzy.
Yeah. Thanks, Claude.
Yeah. Thanks, Claude.
They've taken clickbait 101, something we've never had before. Now they have it.
They're some of the they're stars of the clickbait. It's a good one. We're talking about obviously the difference between sizing up contract wise versus spreads.
Oh,
Widening
okay.
out the spreads.
Gotcha.
Yes.
And then at around that 9:20 time frame today, we have live from the trade desk, Quentin in the house counting down the top trending tickers. And Glenn, G Money, did they get bumped yesterday?
Yes.
Yeah, they got- I told- I called it.
5 to 10 minutes. They went 30 minutes, but they were amazing.
I was like, I knew it.
I can't wait till the producers try to reel them in a little bit.
I mean, we had the fabulous,
I know.
famous,
I know.
favorites, Robin.
But poor
Maria.
Quentin,
Yep.
he was like Matt Damon on the Jimmy Kimmel show. He was just like always getting bumped.
Hey, like them apples.
Always
He was-
getting bumped.
it's all right.
Always getting
It's all
bumped. That's fine. But he's back today.
Yes.
And like I said, Glenn with him as the currencies are also moving around today. So that is our run of show for today. Do you want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading
In
story.
today's headlines.
Breaking news.
Across
the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's March the 19th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings. I got the ones from last night.
Dividends. SPY.
Okay.
It's got a big dividend,
Oh, yeah,
about
yeah.
$1.70-ish
Oh,
or so,
nice.
maybe even a little bit more. Don't take my math. I'm just rounding. And DIA, the diamonds, if you are so
Yeah,
inclined.
FedEx has earnings after the close today. though.
FedEx would be the only one. It's not really that. I mean, it is tradable-ish,
Sure.
but not the best. I would worry about the SPY dividend more than anything else. Although at the lower end of the range, doesn't come into play as much as you would think it would if we were higher.
Yeah.
First headline of the day, U.S. stocks slumped yesterday with the Dow being down over 800 points and the S&P wiping out its gains from earlier in the week as investors reacted to the Federal Reserve's latest outlook on interest rates and the economy. Basically, the markets reacted super negatively to the likelihood that the Fed is on hold for the time being. Also, JPZ says, guess what? You can't get rid of me because your guy's not going to get confirmed. So I'm going to stay on as Fed chair pro tem and here to make you mad. But the Fed, their next meeting is in 6 weeks. Bank of Japan, Bank of England, and ECB also doing their rate decisions this week. So that's contributing to maybe some pressure on the dollar. So let's talk dollar bonds here.
Dollar, I have not great positions in.
So I'll talk about bonds for a minute then.
Bonds are at the lows.
At the lows,
We're
under
back
114
below
again.
114.
Yeah. Good Ivy rank, volatility expanding there. Maybe another. Do we go back to the well? We sold some putties last time around here. Maybe it's time to sell some putties
I
again.
mean, good for yields, bad for bonds. So
What are you thinking? Where are you thinking? 12s again?
Yeah,
Sell the
why not?
12s? All right.
I mean, you can if you're looking at bonds, you want to just make sure you're trading the same month. You can go all the way out to 64 days. And
are you in ZB?
Oh, yeah, and ZB.
Yeah, you're still trading the same bond.
Yeah.
So all the options match up to all the
55.
options that you would probably trade.
55.
There you go.
What did you do?
I just sold puts.
Oh, okay. Just like a
Depends on
naked
what's-
put.
At 0.55, which is almost a full
Yeah, almost a full point.
point on the 112 puts with 36 days to
Yeah.
go.
So I'm short the 112 and 113 puts. Been kind of the lower end of the range. But yeah, bonds have looked
Sick.
no bueno.
No bueno.
You can't hide anywhere. You can't, I mean, bonds are getting smoked, gold and silver getting smoked, the equity's getting smoked. I don't know what you buy. don't buy me.
Bank of Japan came out with their decision this morning. What are you doing in like the yen or the euro or anything
really
like that?
poking you.
Oh, man. You're supposed to be nice to me this
Well,
morning.
they're keeping their rates on hold, and
I
so
know,
like
but
that's
the
it.
yen
So,
is-
but they did warn of inflationary pressure from the war in Iran. So
I have a short put spread in the yen that's unchanged, pretty much it's just outside the money.
Okay.
And I have a strangle on in the euro, which is basically unchanged as well. So I'm kind of neutral euro, long the yen. I hate them both.
Equal loathing.
Equal loathing, yes.
all right.
Yeah.
Good news. The SEC on yesterday approved a NASDAQ proposal to allow certain stocks to be traded and settled in tokenized form, according to a regulatory filing, marking a step towards integrating blockchain-based settlements into mainstream equity markets.
Oof.
I mean, everything's going to go this route.
Do we need this? What are the advantages or...
The advantages are that it removes some of the middlemen in kind of
okay.
settlement.
Okay.
Everything's tokenized. It's on a blockchain, which removes the T+1 settlements, the
T+3, sure.
or T+3 if you're over the weekend.
Oh, that's nice.
Like everything can just go
That's
one to
trade
one.
plus
It's
3
done.
days or trade plus 1 day. Yeah.
So it allows you to get cash quicker. It allows you to get securities.
This is
quicker.
the wall going up for all the prop type bet houses that want to get into the financial space. I think that's what this is too.
What do you mean?
Well, they're going into their space too. They're tokenized. They're putting on a blockchain. It's more of a regulated place that of a Couchy or that was
Yeah.
trying to get into the equity markets kind of thing. They were just
Yeah.
doing it, preempting it, making, getting into that space.
An interesting note about this, securities eligible for tokenized trading would initially be limited to stocks in the Russell 1000, as well as ETFs tracking major benchmarks such as the S&P 500 and NASDAQ 100.
Yeah. I wonder why they would do the Russell stocks. Maybe just because
Because
there's less notional.
possibly. I mean, it's 2 times, right? 2 times
Yeah.
Russell versus 1 ES or 1 S. 1.
No, but the Russell
SPX.
1000 stocks are on that group. I mean, you could.
Yeah.
The whole float is $1 billion.
Yes, small.
So like, there's not a. Yeah. That's a surprise.
Yep.
But yeah, I mean, it's interesting.
Another surprise, after the Fed announcement yesterday, Bitcoin took a dive, breaking below that 70,000 level of support that we had seen. And interesting news is crypto exchange Kraken says, yeah, you know what? We're not going to go public right now. So that's sort of an interesting confluence of events. Kraken has put its multi-billion-dollar IPO plans on hold. The company's still weighing an IPO, but they say they are unlikely to move ahead until market conditions improve.
I mean, I don't know.
Not a shock.
Not a shock, but I mean, what kind? I mean, we're 5% off of all-time highs.
They also don't need to go public. Like,
Yeah, no, they don't.
companies are
That's
so
the other
big
thing.
now. That's the.
Yep.
I mean,
Yep.
if the market has an actual downturn, you'll see this headline for ChatGPT.
Anthropic, SpaceX.
Anthropic,
Yeah.
SpaceX. They'll all be like, okay, yeah, we'll just
Stripe.
we'll just wait till we're back at all-time highs and volatility's low and we're back. Why would you risk going IPO into high volatility
Sure.
when you don't need, they don't need the liquidity? So it's, it makes sense for them.
It's an interesting contrast because Circle has kind of been on a tear lately. So,
Yeah. I mean, Circle, yeah, I guess. It's still like,
Nikki's like, I hate that you're right.
I mean, it's back to IPO prices.
It is, yes.
Like, it's not like
I know.
it's flying around here. It's had a nice move, but it's, if you bought it at IPO, you scratched it.
Yeah.
Anything in IBIT or Coin this morning?
Well, you've got Bitcoin, like you said, trading under 70,000. It was just 74 48 hours ago. It was 67 48 hours past that. You know what I mean? So it's been in a kind of a wide-ish range here. Surprised how fast it went up. Surprised how fast it went back down. I mean, IBIT's probably the most tradable one, trading 39.5. That moves a lot smaller, down about 75 cents. But it's got a good IV rank of 50 and change.
Hey.
And its monthly implied volatility matches that too. It matches something like a Tesla. So it's got.
I might have did something.
You might have did something for option trades today, every Tuesday and Thursday. I'm actually going to.
Actually, every day. Don't you do that every day now?
Yep.
Yes.
Every day.
Don't you do it every day? Yeah.
Yeah, every day.
Yeah,
Every day. Did I say Tuesday and Thursday?
Yeah.
That was old bat. This
I know.
is the hologram.
Yeah, you gotta write this down.
That's right.
You gotta write this down. Hey, getting to the earnings from last night, Micron.
Wait a minute, my friend over there is going.
Is that
on
bonds?
Tilt. My friend over there is going on tilt. What are you doing? You're just doing the stupid here.
Oh, we're just going double long.
You're
both
not-
long gold, long silver.
You're not doing the
not-
gold silver trade, which is trading at 66, up from 62.
I mean, silver's
up
down
from
10%, gold's down 5%.
yeah,
They're after a couple days.
Yikes.
Big time. I mean, gold was 51, 52 at the end.
Yeah,
of
that's
last week.
46
52,
now.
So it's down, 10%.
I gotta go to Costco, get me some gold on sale.
Yeah, seriously. Silver's even.
I wonder how quickly they change their price.
I don't know.
I mean, I don't think they can take the
I think it's monthly. Like, I think they have.
If someone knows, tell us in the chat.
So you can't buy. I thought you could buy like a little ounce of.
You can.
Right. So
I'm
you
talking
don't
about-
get it that day.
No,
get it.
I think you can buy them in store.
It's not marked to market.
Yeah, it's not marked to market. is what
Right,
I'm saying.
so
I think it's
I'm
monthly change. Maybe it's monthly or weekly. I don't know.
It'd be interesting.
Someone knows. Hey, Micron benefited from a memory supply shortage driven by surging demand for NVIDIA's AI chips. It is now among the most 10 valuable tech companies in the U.S., just straight dominating, bringing in $23.86 billion in revenue versus $20 billion expected. Earnings per share came in at $12.20 versus $9.31.
Now, you would
expected that's bonkers. The numbers were just bonkers, and the stock's down $1.
Actually, the stock's now down 25 to 30-ish.
Well inside the expected.
It was well inside the expected move.
Sure.
It was down $1 for most of the night. When I walked in this morning, closer to 6 a.m., about an hour and a half ago, it was down $1. But yeah, I
mean, 2 days ago it was at 450.
Yes.
On the week, this is like half a day.
Sure. Micron shares are up 62% year to date as of Wednesday's close.
Yeah.
$40 expected move for the day, $50 expected move for the week, well over, the $40 expected move for the earnings. I mean, but the numbers, if you just take the numbers, they seem like they would be, like you would say that the stock was up $30, not down $30. But you got to take into consideration, this is what we always talk about, how if a stock has been up 60, what'd you say?
62% year to date.
And they hit it out of the ballpark. They really have to hit it out of the ballpark. You can still get that move to the upside, but we would say the pot odds are, 1 to the upside, 2 to the downside.
Yeah.
Here, you're not even getting either one of those. It really just, you've been talking about how you think this stock is a scoopy here.
From a value perspective, if you want to go like price to earnings, it's a 10 PE.
Yeah.
I mean, if it's making $12 a quarter, $40 to $50 a year, shares are trading at under 500. It's a 9 or 10 PE. So like anybody that says like, oh, it's overpriced or like there's a bubble here. I mean, this stock is trading at a lesser multiple than Coca-Cola.
So of the 10 most valuable U.S. tech companies, Micron is the only one that's up. Oracle is the biggest decliner. So I don't know if you guys are doing anything in Oracle, but if you love stuff on sale.
Yeah, we have some long. We did a Jade Lizard there.
Okay.
Oracle 150, still not near its lows, down around 140 and change, where we were suffering last time we were long a little bit of Oracle.
And also interesting, putting this all together for the week, kind of the first time in a while that NVIDIA didn't get a bump from that GTC conference.
Yes.
That was good. I'm just
they suckered me, and I put it a little bit to the long side of a fine risk trade.
But they were announcing, they're like, hey, we're going to make $1 trillion. And the market's like, ah.
Yeah, right.
The sentiment right now is not there. You don't, you're going to, it wasn't like it was down. NVIDIA was basically flat on the day. So,
I don't know. Maybe all the money's going into that Swarmer company, that AI drone stock that I told you about yesterday. It was up again. It's up like 1,100%. What are we doing?
I mean, of all the stocks to talk about, NVIDIA has become the least volatile of all of them. I mean, it's been stuck between 175 and 195, and it's closed at 180 yesterday.
Sure.
So I mean.
So just sell straddles in NVIDIA and just take your money and go home.
If you did, you made some shekels.
A well-received presentation at a key industry conference and an analyst price target bump made Lumentum Holdings a popular stock yesterday, the ticker LITE. Shares of the photonics company rose in excess of 6% in reaction to these developments. It's all about optical fiber. There was a briefing at the Optical Fiber Communication Conference. Woo! I hope their slogan was "Get lit." Get it? Optical fiber? No, okay. I'm trying so hard. But do you trade the optical stocks like the Sienna, the Core, whatever?
Coherence.
Lumentum.
They're not. They're all getting added into, or a handful of them are getting added into the S&P 500. So
hey,
I'm hoping like Lumentum is. I think it happens going into Monday.
Oh, okay.
Correct on that. Somewhere around here, like 21st, 24th.
I was surprised how expensive this stock was because I was looking at it last night and I was like, I was not even aware that this company existed.
Yeah. I mean, the options are not super liquid in these, so they're not on my radar to trade right now.
Gotcha.
But hopefully, like once they're kind of more liquid, I'll be trading them.
So is this like a flash in the pan, like how Quantum was, or this is like more legit?
No, this is like real. Quantum is still like fake news. Quantum is.
I think it's theoretical is the word. It's not fake news. It's theoretical right now.
I don't know. It's the same thing with Amazon saying they're going to do $600 billion in 2036. Like
2037.
2037, whatever. I mean, 2037, the whole world's going to be different.
Okay.
Who knows? That number could be 10x that.
This is crazy. But Meta announced this week that Horizon Worlds, its social VR platform, is going to be removed from Quest headsets entirely. Basically, the final death knell for the Facebook metaverse experiment. They funneled $80 billion. They rebranded their whole company, and now it's just dead. What?
They're saying get outside and touch some grass, nerds.
No, they're saying it's all AI. It's saying we need to lay off people. We need to shut down VR. We're going all in on AI. But just what a wild. But $80 billion, just poof.
They can't do anything to get this stock to go up.
Yeah, this is even laying off people, which is usually the bell that you ring.
Well, it was the bump on Monday.
It was the bump on money, but it was short-term lived. I mean, I guess the whole market is selling off too. So, I mean, that's not helping their cause either. And I think the same way for earnings in MU is the same reason you can look at Meta here. But Meta is an interesting stock because it has not participated in any of this rally here. IB rank at 21. I think you have to be directional. It's down another $4 this morning.
Ugh. How about you, Nikki? What are you doing in Meta?
I have some long delta. We're short the 600 puts.
God, you stink.
Market does go down.
It does.
I'm surprised. Meta is no love. No love. Meta, Microsoft, both of them. I have been playing for the bounce that hasn't come.
Right.
For 3 or 4 months now.
In an interesting blend of sports and finance, JP Morgan Chase announced its new Athlete Council, an initiative led by Dwayne Wade and featuring Tom Brady and other athletes, aimed at helping athletes manage money from college through retirement. About 1 in 6 NFL players declares bankruptcy within 12 years of retiring, JP Morgan said, underscoring the financial perils facing athletes. Maybe don't respond to those women in your DMs. That's my financial advice to you, but what do I know?
JP Morgan is very smart. I mean, they're going after a very high-valued customer here. For a nice little passive income. You park that money here and we'll take some fees, no problem.
Yeah. The Stars will meet with JP Morgan executives to help the bank craft programs designed to serve athletes from college to professional life and even retirement. It illustrates growing competition among banks and wealth managers to serve athletes. All right.
I mean, why not? I mean, JP Morgan, 285 and change, down $2. I mean, we talked about financials getting soft here last month or so.
XLF, Death Cross.
Death Cross.
Death Cross.
They're still there off of their highs of 330-ish or so.
Yeah.
Wow.
Yeah, I mean, listen, expected move in JP Morgan for the year is about $70, and you've had that kind of move already this year.
Wow.
So
it's not even April.
Go down to $70 from here, which means volatility would have been off by a multiple of 2 times. Or maybe it's a better buy than sale. I don't know.
Finally today for my viral video, before I put this video up, are there any consequences for like your brackets like there are with fantasy? Like, does the person who comes in last place have to do something humiliating?
Not usually, but there should be.
There should be, right?
I love this. I agree that should be. I mean, some of them get to be really humiliating. Like, I don't need it to be that bad. But yeah, they should do something to pay.
Yeah.
Mm-hmm.
As a maybe a possibility for a humiliation ritual, check out what happened to these boy athletes at this local high school. It's just funny. And how good would you be at this? Watch this.
Leto pumps.
Running in heels?
Yeah.
That's good. Those are high knees.
I know.
Those are.
This dude is crushing it.
He's done that before.
Yeah. I mean, the guy in the wedges is smart.
Yeah, the first guy was in high heels.
Wedges, they're all high heels.
Yeah, but the
like,
wedgie and the
wedges are a better
Yeah.
choice. But I think the loser of your bracket should have to do a high heel sprint.
What's the biggest size you can go?
Oh,
to?
here in Chicago that serves drag queens? Honey, we
Oh,
can
yeah,
get you
true.
a
I
size
didn't even
16.
think about that.
Honey, we can get you a size 16, size 17 pump.
That's true. I didn't think about that angle. So there are those. Yeah.
Yeah.
Okay.
I feel bonita.
tasty to go. Find you a high heel shoe.
Oh God,
Yeah.
you do that?
Size
to
11
me?
or 12 or whatever. It'd be great.
Oh no.
Look, we just go we go over to
12
Belmont.
wide, by the
Yeah.
way, right? I mean,
Wide, we got you
12
wide.
12 wide. Yeah, that is it. They're
We
like,
go-
it's like freaking Bigfoot.
We go up to
you have to wear the
Belmont.
box.
That's what I got from you. Okay.
We
You're
go up to
Neanderthal.
Belmont. We get you. We'll
Thank
get
God
you
you got my
right.
big feet. You know, but they say big feet, big shoes.
Hey, what's going up
Sorry,
next?
Vanetta.
We're going to take a quick 90-second
Oh, my
break and come
God.
back. We got more, much more Tasty Live after this. We got Tasty actually take a look at yesterday, see if it's a continuation of today. Stay tuned. We'll be back in 90 seconds.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with this Tasty Extra, looking back on what happened yesterday. Before we do, let's take a look at what's happening right this moment. Even the S&P's down 42, NASDAQ down 177, Russell, the leading the clubhouse, the downside, down a full 1%, 26, and the Dow down 291. I'll get into gold, silver, oil, and Bitcoin, and the rest of the markets. Volatility 2570 on its highs. I actually think, and we were just talking about it on the break, that /VX or /VXM, the smaller product, which I prefer to trade, as you can ladder in a little bit, probably a better, easier sale. I don't know if it's going to make more money, but an easier sale than trying to pick the bottom on the E-mini S&Ps, NASDAQ, or any other equity index right here. I just sold some about 30 cents lower than this. There's no reason to sell it at this moment. Only
You want to wait for the open.
You want to wait for the opening. You want to wait for it to back off a little bit, and even the S&Ps, don't continue their downside. Yeah. I always am a little bit early. So, but I'm just telling everybody in true transparency, my own position is what I do. Up to you. Go, son.
All right, let's do it.
Let's take a look.
Recap of yesterday. Bloodbath. Across the board. Would you call it a bloodbath? Did it feel like a bloodbath? Did it feel... Because I said to you, I was like, it felt very orderly. It was like not, it was a rough day. It was 1.5% to the downside. We've reversed 1 week of price action.
Yes.
No big deal.
I know, but when you start looking at it that way, you get anesthetized. I don't know if that's the right word, to these down moves like this, because we've had just about a month of this, right?
Yeah.
So 100 points now. We have 100-point moves
every day.
I mean, look at what you have so far. You have 70 handle moves.
Falls at 25.
Yeah. So yes, exactly. Not sustainable though. Like that volatility of 25, it will cluster, and it has clustered up here.
Yeah.
Longer than I thought it was going to.
Yeah.
So yeah, I think it was kind of a flush out. You probably got another. I mean, I don't want to put numbers on this, but you probably got another 30, 40, 50 handles to the downside. But if you think that, and you think you have 300 handles to the upside.
Why wouldn't you buy them now?
Yeah, exactly. So that's why I sold volatility early.
I said that exact same thing to Vecchio yesterday, because we were talking about, how
oh my God, I hate how this...
No, stop it. Okay, other opinions are nice too.
Yeah,
you don't have to. You're not Nostradamus.
I know, but I'm gonna save the internal emails he sends. You got 2% move in the overnight action in
it's good. That's good. Things are happening. Things are happening.
Overseas markets, and now you have it to the opposite. It's just price, ladies and gentlemen. Things go too far to the upside because idiots chase it to the upside. Things go too far to the downside
100%.
because idiots chase it to the downside. You just got to trade price. That's why I love derivatives. You get an extra large move in one direction or the other. You can fade it a little bit. You can still be bullish and fade it. You can still be bearish and fade it. I mean,
and so I got some people in the chats harping that were
time
long
on your
for
side
the sake of being long. Listen, we have long delta. I have net long delta.
I have net long delta
short
too.
Volatility. I have positions that are short delta. I have stuff that should work in a contrarian way. Yeah. We don't. The
I don't
market,
discriminate.
Just because the market goes
just
down,
don't think you have a reason for it. Like, I mean, 3 weeks ago with oil at 60, I know we didn't have a war going on there, but I got an email, well, the world runs on oil. Then you should have been long oil all year long. Don't try to be long oil at, I know it's in the 90s now, but let's just say in the 80s. You could try to scoopy it, but have your finger on the trigger for both sides.
And that's a great example because oil, I am quote unquote short oil, but I'm actually long delta right now, short out of the money volatility.
Yeah, because you're trying to play it in an intelligent way. You're trading it.
But what I was getting at was like, just because I'm leaning long and bullish here does not mean that it's the end of the world that we're down 1%. I'm not down 1%.
Sure.
Like there's things that go the other direction. But my point that I was getting at, I was having the conversation with Vecchio, and I was like, what is like an interesting level to you? And he was saying 64, 6,500 on the E-minis. Mm-hmm. It's 100 points away.
Yeah,
like if you're like, how do you wait?
Well, you don't want to see it if you're leaning a little bit bullish.
But if you're saying you're going to get, that's a good level. Like as a downside,
you got $50, $60 expected moves in the ES daily.
We're going to get that today.
That you could. You certainly could.
But that was my point.
For the week, we got 130 handle move for the next 4 days, 5 days.
But how do you wait for that? Like, I can't wait for that. I'd rather be.
He would say in his defense, because I poo-pooed him.
He smashes it out of the park. He had gold to 5,500.
That's correct.
That's crazy person. He hit that out of the park.
That's correct. So sometimes you get it right.
Yeah. But I can't sit. I think the same thing. I think 6,500. Okay, that's great. If we get to 6,500, that's a good spot. I just can't wait for that. I have to start now, and if we get there, I'm going to be adding more. I'm not fully I'm not one.
But you could put on a derivative product where let's say that is your number, and you don't think we're going to get there today. Like I sold volatility. It's 30, 35 cents higher now. It's 10 cents higher in the time that we've talked. Where I sold it, losing trade. You could put on a derivatives strategy that if you think we're getting down to 6,500, doesn't lose money to 6,400. And still makes money if we go higher.
Yeah.
Or you could do some sort of, buffer trade where we don't lose money in the next 60 days on a 10% lower move, but you make 5% to the upside if we go higher. I mean, be strategic and not just directional with the things that you do.
I'm seeing Rob and Maria in the chat today, and Rob would like to clarify that he doesn't do the first half unders. Do you want out?
What do you mean he doesn't do the first half unders?
He does the game unders. Game unders, not first half unders.
Well, where'd you come up with this then?
I don't know. I thought we've been doing it for 2 years. It's worked. Actually, last year there were 67% they hit on, which is incredible.
This is why I don't pay you ahead of time, and I'll take a look at it after.
You're on the hook.
No, still in. Yeah, go ahead.
I mean, it's almost like a double down. Because if you're under on the first half, you're probably going to be under on the game.
Not being mechanical with your bets. Go ahead. Let's take a look at this Tasty Extra.
Yes. So
I love the give and take here. So you're asking me, now that we're having this kind of discussion and getting the emails like this, yeah, we're I didn't know if we were having the capitulation. Getting there? I think we have a little bit of it.
We're getting there.
We're getting there. Yeah, more than we had before.
Yeah. Mag 7 yesterday, some weakness in Amazon, Microsoft, Apple. I mean, across the board, NVIDIA was kind of the strongest of the group. I mentioned this as you had NVIDIA and Google, all of these kind of down a couple dollars. It didn't feel like it was that big of a fear-driven move. It felt like, with the big names across the board, it was just kind of like a orderly sell-off. I don't know. I didn't take too much out of it. Sector-wide, obviously, yesterday, market's down, everything kind of goes to one. You had even energy taking it on the chin a little bit. Semiconductors, the weakest of the group were the metal and mining stocks, metals and mining, and metals from gold and silver to, I haven't looked at copper. I'm sure that's down too. Copper's down 5%. A lot of weakness across the board. You had financials in there. I mean, everything was down. It was across the board.
Yeah, and it looks good. Just going through here, just going to take a quick look of all the stocks you just had up there a moment ago, or most of them. They're all down this morning too. So it looks like a continuation of all of this. Yeah.
When we look at the biggest movers to the upside, there were things, I should say, past tense. Were things that were up yesterday. A lot of them in that memory stock space. You had SanDisk up there, Ciena, which is getting added into the S&P 500, I believe. It'll be fully allocated by the end of this week. I think so. Don't quote me on that. I said it, so you could quote me, but don't hold me to it. Vistra in there. I mean, you got some tech names in there, but definitely, kind of a random list there. On the downside, some of the biggest movers that we saw to the downside here on the next slide. Carvana taking it on the chin a little bit, got below 300. A random list here. You had TTD, which has just gotten absolutely killed. I think it's down 95% from the highs. You got Domino's Pizza on there, Starbucks. It was a mixed bag here, but it was across the board weakness in the market, no doubt. And then to give you your heat map, it's the one that scares the children. It's the one that is, we're ready for markets in turmoil, I think, when you look at that one.
That's right. That heat map is quite hot. Scary. So, it's across the board. There's really no place to hide. Even look at energy, kind of a mixed bag of tricks. But we'll take a look at what the market's doing right now. We'll take a quick 90-second break and come back. We got confirm and send. We're going to go over some of your viewer emails, and we'll take a little bit of a deeper dive in this overall market. We'll be back in 90 seconds. This is Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. And you asked me for about a little bit of capitulation. I'm going to say our conversation on that little break was a lot more capitulation than we've had in quite some time. So I'm going to say yes, we've gotten to the point where we've met a little bit of external capitulation, a little bit of internal capitulation, maybe a little bit of market capitulation. But market's on its lows. Even the S&P is down 49. Just about a skosh off of its lows, 66.26. We're 66.28. That's 0.75 percentage point. On top of. I mean, just near the end of last month, if you want to go right to the beginning of the month, I'll do that instead. We were at a high of 69.60. We're 66.30. That would be rounding up. That's a 300 point move. When you're looking at what a 300-point move looks like in just the last 19 days, on today's volatility, to your point, it's about 19 days worth of movement. Now, we've had it all in one direction. Now, we talk about expected move. We've had a 300-point move in about 19 days. I just went from March 1st to March 19th today, all in one direction. That's the surprising thing, that we haven't had $150 move with a 300 move inside. Maybe it's 150 point move to the downside. So we are at the low end of the range. Of the range.
And
with volatility lower in that time frame.
I guess from
20 days ago. Yeah. Right.
Yeah.
Interesting move. NASDAQ down 200 and change. Russell down 31. Dow down 330. Volatility up by $1.25 to $25.90. It flirted with 26, got up to 25.95. This is that big spike up that you saw on Sunday night when the market was at prices that it is right now. I think, when you trade, we never really traded up to 26 vol that I can remember during the session market open. So volatility's higher now, even with volatility at 30, tradable than ever before.
So is this a spot where you look at like short puts?
This is
like 40-day, 30, 40-day puts, keep size in check, obviously, always.
Yeah.
But this is kind of it's the moment of the year thus far, right?
Sure.
I mean, we're at lows. You have volatility. We're going to probably open volatility at the highs that we've seen intraday, pointing out.
Yep.
You go into a SPY, a Qs, you sell your 20 delta puts. 30 days out, 40 days out is like your your spot?
I'm going to answer it a little bit differently because I don't want to be put on a spot by somebody who makes these trades. So yesterday on option trades today, I did an SPX trade, which is broken wing butterfly, where I'm buying. I made it tighter. I usually do $50 wide. I buy a $50 wide spread, sell a $100 wide spread. I made it tighter, $25 wide, $50 wide. So a little less risk. Same type of trade, a little less risk. Today is the type of trade. If I didn't put on that trade, or if I was looking to put on another trade, I would make it 50 by 100 today, so putting on more risk. Or I would think about a 1x2 in an SPY, which would make it a lot, because I'm using 25.
You could make it wider today.
You could go way wider.
If you did 50 by 100 yesterday, you could do it 100 by 200.
Certainly. So that's the way. So that's the way I would increase my risk by taking advantage of this. Or if I had a larger size account, I might go into a smaller product like SPY and do a 1x2, a couple of contracts instead of one contract in SPY, $100 or $200 wide. So yes, because a 1x2 is synthetically short a naked put somewhere below, probably below the 20-ish delta, but it's still there. But yes, that is the trade that I would be looking to do.
That's the same sort of thing that we've been doing in oil. It's a units trade.
Yep.
Because you're buying that at the money or closer at the money option that is inflated, but it will likely hold value because it's going to be closer at the money. And you're selling these units, more units that are out of the money, that are more exposed to that skew and volatility, because you're getting, a 26 vol. It's going to be more pronounced volatility wise on the downside into a downside move.
Yep.
So like 26 vol with the minis at 7,000 might be, a 30, 300, 400 points out of the money would put you at 6,600. Now it's going to be 800 points out of the money, even though it's on the downside.
Same product, same everything. So, yes. I'll give you another one. Like today would be the day where you could do a Jade Lizard type trade in an SPY, where you might look to sell a 10, 15, or you might look to sell a call spread, $10, $15, $20 wide.
Yeah.
And instead of trying to collect $10, if you did a $10 wide call spread, or $15 if you did a $15 wide call spread, which would be a classic Jade Lizard for us, you're collecting more than the width of the call spread. You have no risk to the upside. You might move that put a little bit closer and collect, $15, $20 on a $10 or $15 wide. Maybe on a $15 wide, you collect $20 or $25, where you do have some risk to the upside, but you have a lot more delta right now. That call spread that you're short, if it's $10 wide,
it goes in the money,
it's $5, $6, $6.50. It doesn't move much more than that. It's only gonna move a buck and a half. Having that call spread on really just gives you a little bit of time to be right on your naked put, which is the heavy part of it. So that's another way where I would take a look at it, as opposed to just selling naked puts. And another way you could do, if you're a little bit smaller, put spread if you want to do it. I mean, you're using $2,500 or $3,500 in buying power by selling a naked SPY put. You certainly can go $25 or $35 wide on a put spread, and you will take that 20, 25 delta put that you're looking to sell and make it into a 15 delta put.
We got some people asking to pull this up. Once the market opens.
Once the market opens, we'll take a look at all these trades.
We'll talk about this a little bit more.
It's hard to take a look at something when SPY is down, $5, $4.50. And the pricing is going to be all different.
Yeah, and with volatility this high, we could be at vastly different prices in the 30, 40 minutes.
We'll do it in real time. Let's take a look at, I chewed up enough of your time.
Confirm and send. Let's do it.
I started with an SPX Condor, rolled it once into high IV. Okay, perfect. The total credit ended up at $1,050 for a 10-point wide iron fly with shorts at 6,800. Okay, the trade expires this Friday. The credit exceeds the width, so I think I am in a good spot. I have a GTC set to close at 50%, but honestly, I don't think it will hit. So at this point, am I just waiting around, letting it expire to collect $50 lunch money? Is there something repeatable? Seems like free money.
So you probably got, I would not call it free money. And to answer the 50% thing, you're probably not going to get 50% unless you pin 6,800 pretty much on the dot at expiration and held it through that.
Now my buddy who writes into me all the time, goes from Thursday into Friday. it typically is a bullish opening for SPX. I don't know if it's going to get to 6,800.
Yeah. But the reason you were able to do this was because of the change in volatility.
Yes.
You had volatility expand, so all your roll-ups, relative to when volatility stays where it is, your roll-ups might be $1. They were now $2.
Yep.
That's why you were able to roll in.
Great job out of you.
Yeah.
On this.
So you do.
So if your math is correct,
your math is correct. You're going to keep the $50, and
I'll go one better. I wouldn't even have the 50% close in this at this point. I mean,
no, it doesn't matter. It's done with.
Yeah, it's done with. But only good things can happen, right? I mean, if you get to a 50% profit on this, you're probably going to be a lot closer to 6,800 for a full win, and you got so much room to the upside. I mean, I don't know. Yeah. I would sit there.
Yeah.
Next
good job out of you.
Thank you.
So not you, him, them.
Good job out of them. Yes.
Good job out of you.
All right. Good job out of you too.
When a directional trade such as a debit spread goes against you, is there any way to manage it? Can you do anything?
I mean, this is the flip side of the coin of having defined risk. I mean, there's not too much you can do here when you buy a spread. It's basically a 50-50 shot. You're risking a lot more money than just buying the option itself, meaning just buying the at the money option or an out of the money option. It doesn't work for you. Debit spreads, unfortunately, when they're in the same month, there's not a lot you can do with it. You're pretty much set with it. You bought something, at $5, it was $10 wide. It's a 50-50 shot. Now it's trading for $2.50. I mean, there's really nothing you can do with it. You can hold it or close it if you really want to. You got the direction wrong on a coin flip. You said heads and it came out tails.
That's it.
But you got a lot of time on your side. I mean, if you're putting these on with 45 days to go, a lot of things happen. We've moved 300 handles in 1 week.
Yeah.
Could do it the other way. Tails, there you go. Next one, please.
You guys talk about the curve in volatility or oil or other products. What is the curve and where can I see it?
I mean, you have a nice, you could put up yours in a minute. You've done a good job with that. I don't look at it as attentively as others because I look at the market all day long and I look at the trade page all day long. I mean, futures are brilliant, I think, on the Tasty Trade platform where you can see which month is trading. Here is K. You can see it here in the option series. Here is K. You can see the price is the same here as the one that you're trading. If this future is here and you look all the way through here, all of these options represent the future that you'd be looking at right now today. And when you go out to April 17th, you'll notice the future's a different price. You go out to June, the future's a different price. If you look at the Oprah code, you'll see that the code is different. It's all M's here. So for me, it's easy to see which futures trade, then you can see the curve. Higher in the front month, lower in the back month. I mean, it's pretty easy to see. 90s in the front month, 70s in the back month.
Yeah. There's sites where you can see the visually, but yes, we're looking at it from a numbers perspective and just kind of visualizing that. For volatility, I make my own volatility watch list where you just plug in all of the yearly volatility tickers. So with
what does it tell you?
Expiration. Well, it tells you if it's in backwardation or contango.
Right, but does it tell you anything for price? I mean, you could extrapolate out that volatility is going to stay bid when you're looking at this. If the back month is getting equal each day to the front month, that this volatility is going to last a little longer, subject to change on a dime.
Backwardation and contango give you an idea of the market's current sentiment.
That's correct.
I mean, when markets are going down, but you're still in a contango, it tells you that, it's right now it's really flat to backwardated.
That's correct.
I mean,
which means what?
Backwardated to flat-ish.
In volatility. And what does that mean to you?
That this is pretty heightened fear. That tells you that, this is people kind of freaking.
Now, what do you want to do about it? That's the $64,000 question. Yep.
Right.
Next question, please. How do you guys know if selling is orderly or not? I often hear you talk about selling being orderly, but I don't know how to make that determination.
It's a good question. I wish there was something I could just point to.
Mm-hmm.
But I think I look at it from, just the move. When you're watching E-minis, like today, you're not having these huge, 30-point swings, 20-point swings that we've had some weeks.
You haven't had them quickly, right?
You haven't had it quickly. Volume is another thing that you can look at. We were looking at E-mini volume was 1.5 million contracts yesterday, which is higher end, but like isn't that's not panic selling. Like it's not everybody trying to get out. 1.5 million, it's right in line. You typically see more contracts traded when volatility is high and when markets are going down. That's just, how it works. So you can look at that. You can look at volatility. Like volatility is higher and is higher now than it was yesterday. But we were looking at like a 24 handle in volatility. It was mid-range. Some of the other things like gold and silver and Bitcoin, I try to use as a market awareness. Oil now because oil is moving, but just looking at markets, it's kind of like a feel thing, and I could be wrong.
Let me try to get in a different way. We would call it market awareness, but let's put it in a different way. You follow football a lot more than me.
Yeah.
You're in tune with teams. You know who's a high scorer.
Yeah.
You know who's a low scorer. So you might say, just looking at a game, two teams playing each other, and 30 points were scored. You would say, "Oh my God. That's a really low score for those two teams."
Yeah.
I would look at the line prior and say that the line was 45, and then come in and have a conversation with you and say, yeah, that really was a low scoring game because it was only 30 points scored in that game. 45 was expected. That's the same thing you can do by looking at the implied volatility on the right-hand side and saying, wow, this was really an inside day because the implied volatility was so much greater than it, or this was really an outside day. Now, orderly, that's a lot more subjective. I'll go back to the football game.
Yeah.
If the first team scored, I'll go to a high-scoring game because it'll be easier. It was 60 points scored.
Yeah.
And the first team scored 45 points, and it was 45-0.
Yeah.
And then in the second half, the second team scored 60 points.
It doesn't seem orderly.
Doesn't seem orderly.
But if everybody's going back and forth and back and forth and back and forth, it's an orderly.
So orderly is a lot more subjective. If it was two teams that had a high-scoring offense and they went back and forth, it would still be an orderly game. But if it was something that two teams that don't score a lot of points, so you really have to know what the implied value. This all comes down to a little bit of market awareness and knowing what the expected range is for any one product. I did not go. That was the last one, right?
Yeah.
I did not go over the rest of the market, so let's do that right now. Even the S&P is down 54, making new lows. Markets making new lows. Russell being the weakest of the group. Bonds and volatility. Bonds on their highs over 26, 26.10. Bonds are down 12, 113.28. They haven't moved too much since we've been on the show, but everything else has. Market's gotten weaker. Volatility's gotten higher. Bitcoin down another $1,600. I'm looking at the future just to get that price. The cash is down 1,400. Trades all the time. Same thing with Ethereum. Now you have to remember Bitcoin was closer to 67. Ethereum was under 2,000. So of all things, if you're looking at them as market related, they've kind of held up better than the equity market.
Yeah.
Oil up $1.27 off of its highs of 99 and change last night. We're still trading the K future. Here it is right here. It will be around for another month or so. And then you've got a lower priced future coming in April. Doesn't mean anything, but just letting you know what we're trading here. Gold, this is, I don't know, for me, when you look at
this is a huge move.
Huge move. I know you'll get those people who talk that now it's liquidation because they have to raise capital for other problems that they have across the board. I think it's a silly way of trying to figure out what's going on other than things go too far to the upside. Things go too
the
far.
pendulum swings in everything. It's always too much to one side, too much to the other side.
People always look for a reason.
Yeah.
It's extremely hard to find the reason. It just is what it is. What do you want to do about it right now?
I don't know. I told you, if I told you a month ago that we'd be at war in the Middle East, you'd probably say gold's a lot higher.
I said I've been trying to lean a little bit longish gold too. I haven't put on.
No, I know, but I'm saying if I had a crystal ball and I told you, in a month we're going to be dropping bombs in Iran, what do you think gold's doing? I would say it's probably higher.
Yeah, exactly. Totally agree with you. Silver's the other one that's taking it on the chin, down 13%, back to 67 and change. It really is amazing how you get, the. Remember, it was just 2-3 weeks ago where all the watchmakers, the jewelry makers, nobody had any. As soon as you get those headlines where they don't have any inventory, there is no supply, after a huge move like this, you had silver go from $40 to $120. You got to think that that's not, it's meme stock like, and I said that on the show. It's meme stock like.
But now you're in the middle of the. Now you're in the middle.
Now in the middle of it, I think selling volatility, which we talked about, selling units to the upside, buying at the money, just out of the money, selling units to the upside is the play, and that came to play. Now it's not a home run play unless we get like a little push. We get a movement back. And you hold on to the trade. It's not a home run trade, but I think it was the intelligent way to trade it. Let's just go to nat gas, up 13 cents, back to just about 3.2, high end of its range. Corn, wheat, and soybeans are all bid. The euro /6E is up small. I would say this is a small little move versus the dollar. I know you spoke about the dollar with Vanessa just a little bit. We're going to take a quick 90-second break. We're going to come back. We've got trades from the research team next. We'll be back in 90 seconds. Let's tastylive.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with trades from the research team. Who is our first researcher? My man Shark, what's up, brother?
Not much. How are you guys?
Good to see you.
Good to see you guys as well.
Awesome. Well, are you going to be a ray of sunshine on today?
We need a ray of sunshine.
Course.
We need a ray of sunshine. All right.
I want to ask him because he, younger guy. How do you feel about the market right now?
How do I feel about the market?
Yeah.
Okay.
Ooh.
Only
seems
okay.
like a guarded answer. Doesn't seem like a true answer. We're trying to get sentiment.
You know what? In order to be that ray of sunshine, I feel absolutely great.
Oh, no.
It's going to hit 7,000 in the SFX is going to hit 7,000 in the next month or so, okay? Well, I'll be good.
I told
Perpetual bulls, okay?
I told my sister the same thing, and my sister older than you.
Oh my God! You just got her into the market a couple of days ago. After
I told
we
her
sold
she
off,
was
but then we
afraid.
rallied.
She was like.
I knew this was
the
happening.
War, the oil, all this stuff. I said, Gina, By the time you get this money out, you're going to see 15 different wars. Okay. There's going to be wars. There's going to be
15 different
technology changes. There's going to be
events.
so many things.
Yeah.
If you're afraid to put the money in an IRA account right now, you're
and you should be in
thinking
bonds
too
or-
much. You're thinking too much.
Yep.
It's always going to go up and down. 1.5% down yesterday, 3% up today, hopefully, right?
Yeah, well, who knows, right? Or this week or
Back
next
and
week.
forth, left and right.
Yeah.
But overall,
Traders market, we've been talking about being nimble. I don't think we've used the word nimble more times in the past than we have in the last month.
I mean, the volumes are high. You can scalp in and out. So
I said numerous times on the show that, each time we rally, it looks like the low. This is the definition of kind of a two-way market. Every time we make a low and we bounce back up, like that was the low. I need to. No. You need to wait for price to come back again.
omnidirectional. That's your favorite word, right?
Yeah. Go ahead, my friend. Make your trade. See what you got.
There's omnidirectional, even though it can go up, down, or
That's right.
stay where it is.
That's right. That's
Just,
right.
just try
You want to hold on. You got to be like
Yeah.
Lieutenant Dang on the mask of the
ice cream.
mask.
Ice cream.
Ice cream. Go ahead. What do you got for us?
We got a Rivian.
Ooh.
Covered call. It's been in the news lately. Rivian and Uber are partnering to make some robo-taxis, okay?
Everyone up $1.
Everyone
Ew.
wants to make all of their robo-taxis. Yeah, it was down yesterday.
It was.
So now it's up a little bit pre-market, I think. But
Yeah.
this would have been the perfect trade for yesterday. I'm sorry, I'm a little day late on this, guys. Okay.
You're you're trying to you're using me as exit liquidity. You're gonna get out of there and close it, and I'll be getting into it.
Yeah, Rivian's actually up this morning. Yeah.
10% move.
Yeah.
So you wait for it to come down a little bit, as we know the market will do today, and then put it up.
Well, you didn't know what was happening, so I give you a good job out of you.
I like it.
I mean, you know what's going to happen today in Rivian when you put this together last night. So good job out of you. All right, my friend, who is our next researcher? My man Kai, how you been, brother?
It's good. How are you?
Good.
Is that the CME? No, you didn't get the CME.
No. You
kinda-
kidding me? That's the Costco.
Oh yeah.
Hey, how did you know?
I actually knew. Now that I'm looking at it closer, the CME one, because it's quite high quality. That they give us to the
Costco has pretty high
got
quality.
the metal. They got the metal. And
A Roback.
Yeah,
whatever
it's
called.
not.
Yeah. No, it's all right. You're a man of the people.
Costco guy.
Yeah, I got a cheaper version.
Did your wife buy that for you?
No.
Would you buy it yourself?
No, she doesn't go to Costco. I'm the
You
Costco.
do?
Oh,
Costco?
you have the Costco card. Wow.
I'm the Costco
That makes you
guy.
more of a man than
Yeah,
me,
I
if
was
that's
gonna
such a
say.
thing anymore.
I think the
because I
only-
don't have a Costco card. I'm not allowed to have
Really?
one. Yeah, my wife has it. It's only in her name.
I think the only.
I can only go to Costco on her arm.
Okay.
It's her way of putting me in my place.
Yeah. It is. I mean, that is.
I kind of like it.
Yeah.
I only
I don't
go
mind
to
being
two
kept
stores.
sometimes.
I only go to two stores right now: Home Depot and Costco.
Home Depot.
Home Depot's my own. Home Depot. I say I'm going to Home Depot. She knows it's 90 minutes.
Yeah.
Even if I don't need anything, I'm going to walk around. I'm going to come home with something.
Yeah. I do.
With a hammer or something.
Something.
Yeah.
Something. Not a hammer. That would be too useful. I mean, you probably have half a dozen hammers in your house anyway, so that it's too useful.
You know
Some
what's
obscure.
the real secret at Home Depot? The shop paper towels. Those paper towels are cheaper and better, and you get more of them,
Okay.
like the blue ones.
The blue ones, I know exactly what you're talking about.
like
Yeah.
shop paper towels.
Really?
You can get a 6-pack of those for like $10.
Okay.
Like it's like they're cheap. They're cheap, and those are better than like Bounty Double, this and that, all that. Way better.
There you go. We got a hack for you.
Way better.
Oh.
Way better.
I mean, even the
Sometimes I do
S&Ps are
that.
down 42 handles now. They were just down 52 handles.
No.
Maybe we all got to be looking at
Yeah.
these, saving a little bit of money this way.
Yeah.
You just got to have a big blue thing in your kitchen.
Yes. You got. That's
Every yin there's a yang.
Yeah.
Every
But
gimme
it's
there's
good
a
to
gotcha.
have a
Dr.
couple of
Joe.
those because, like, if you spill something or whatever, they're great. They're great.
I'm gonna try it.
Yeah.
I'm gonna try it. I'll let you know this weekend.
They're good.
What do you
They're
got
way
for us?
more, They got like way more. They're thicker and like better.
Girth to them.
I'll try.
Let's go, my man Kai. What do you got?
Omaha.
Thank you, Beth.
Strangle, omnidirectional, but it's a little bit bullish. I carry positive delta in FCX.
Okay, I like that.
Yeah, so I think it's a drop to 53 from 55.
Yeah.
Right.
Copper's been weak too. Metals in general.
Yeah, Copper is not making my man Frankie in the chat room happy.
I know.
Right
I
now.
put that in. I put that on with.
Frankie's long.
Yeah.
Yeah.
Okay.
Yeah.
So 40A65, 40A has much larger delta, but still we have tons of room to the upside.
So okay.
48.65.
Yeah, so you're selling both sides here, right? You're doing this in
May.
In May. So you're after earnings on April 23rd. 57 days to go. You got yourself a little time to be right here. You're looking at around the 30 delta put. And if you look at the call, it's about a 20-ish delta.
Yeah.
And it looks like there's call skew in here too.
Yeah.
So you're able to go a little bit further out of the money. Almost 10. Well,
it depends on where we open because
depends where we open now. You have to probably. You might have to do the 60s.
I already lower a couple of strikes based on the pre-market.
Yeah.
you
did.
You can move the whole thing. Like, probably move it to like 46.60 or 45.60.
Last night I tried to put in like a 50 and 70. Right now I lower like 2, 3, 5 on the upside. Try to adjust it. Yeah, but you can definitely move your strikes after market opens. Yeah.
Perfect.
No hurry.
I like it.
Good job. Good job out of you.
On the open.
Yeah. Good Ivy rank too.
Yeah.
All right. Who is our next researcher? Oh, Julia, what's up?
I know, nice surprise. I'm not ending the show today.
I have to stick my ear in.
Oh yeah, you forgot about your ear.
Got my ear. Oh.
That's okay.
I have to take my other ear out to put my ear in.
So sad.
Wait, let me pump. Let me pump too. All right, Julia, what's up?
Living the dream. How are
I'm
you
gonna
guys?
start having to like sign.
How are you, Julia?
You know, actually, when I was in grad school, one of my lab mates.
Don't be a show off.
We learned a little bit of ASL, and it came in actually very handy in bars when we'd be like talking. We didn't have to scream over each other. I could see it coming in handy everywhere, to be honest.
Yeah.
Well played.
I don't know. That side of the brain, the language part, I can speak it. I can't learn any other ones. No, I'll say.
All I know is PZL.
I was gonna say you guys had
Pennzoil.
your own version of this.
That's all I got.
How do you know Pennzoil?
Yeah.
Because I used to be a crowd clerk in the Pennzoil pit. Pennzoil and GM.
Oh, that's good.
Yeah,
All right.
GM.
That's good. Yeah.
There you go.
All right,
There you go.
cool.
That's how I would wave to the crowd, to the desk clerk who was a step above me.
Okay.
Crowd clerk was better than a runner. Runner was low man on the totem pole. Crowd clerk was, next. And then if you were on the trade desk, you were actually talking to the guys in New York, placing the order.
Okay.
So I would say GM, buy 1,000 to market.
Yeah, there you go. Market orders? Ew.
All right, what do you
Instead of
got
like
for us?
ASL, it's TSL. It's Trader Sign Language.
Yeah, it is TSL. I like
It's
that.
TSL. Yeah, I like that.
I like that.
What are we looking
Gonna have to
at?
learn it someday.
Adobe?
Adobe. It's a little short term. It's 29 days. If I let my biases get the better of me, I would be a perma bear in this. They have done a really good job of just personally pissing me off. However, they had really kind of like rough move after earnings a couple days ago. This was when I kind of like put this trade together maybe like an hour ago, was a little bit more bullish. Now it's a little bit more neutral. I'd still kind of keep it neutral. It's been moving like kind of sideways the last couple of days. So short term trade, there's still a good amount of vol in here. We got a contraction, but I mean, IV rank of 49 now. So I went neutral on this, neutral-ish, 225, 270 short strikes, $10 wide, collects 308 and credit for 692. It's not, not a very long-term trade, 29 days out, but I think there's still some juice in here that you can get in the 29 days. So that was the rationale.
Yeah, mechanically for days you're in no man's land, right? And if you 45 days being optimal, we're 29 in the front month, you're 57 in the back month. You can make an argument that you're closer at 57 days. Both monthly applied volatilities are 39. So iron condors typically work a lot slower than most strategies. I think if you go into the 29 days, you're kind of ramping up that strategy a little bit. So I agree with you. It's 6 of one, half dozen another, depending on your market outlook in Adobe.
Cool.
Yeah, still looking at like 21 days. That makes sense. Might hit 50% at that point, but it's less time to collect the premium, so it's a bit of a crapshoot. But I mean, vol's been kind of crushing a lot, like pretty rapidly the last couple of days. So there might be like a little more room for a vol crush. Yeah.
Good job out of you. All right, let's
Thank you guys.
Thank you, Julie. Appreciate it. Let's get to our last researcher.
Morning.
Good morning.
Morning.
How are you?
I'm good.
Everything
Got stuck in traffic.
I gotta say,
You're looking handsome, though.
thank you.
Nothing stops that.
Nothing stops that.
I figured out because you got the little tomato watching you online, so you gotta look good every day. You slick SOB.
That is
slick SOB. I knew I'd figure it out eventually.
figure
I'm
it
not
out,
the
finally.
sharpest tool in the shed, but
I know,
usually
right?
I get it eventually.
Yeah.
Good job out of you,
But
man.
I'm
Good
still a
job.
huge fan of you.
Yeah. All right, what do you got for us then? We're getting closer to the opening bell here.
So I'm doing Oracle.
Okay.
So Oracle is doing a huge investment into AI as a tech company. So I'm assuming this AI strategy will work, and the price will still be higher than 135. So that's why I'm doing this put spread. So if the price still be higher more than 135, I'll be able to correct these credits. The IVR is good. Buying power is cheap relatively to my account. And last, so it's
$5 wide spread. This is basically
Exactly.
as tight as you can go on anything. Your break even's lower than the lowest price when we were getting a lot more delta when Oracle's at 135. This is the kind of thing where if Oracle's beat you or you're able to make a couple of dollars trying to catch the price higher, this is a way of saying, I'm still in the game, Oracle.
Yeah, sure.
I'm selling this $5 wide put spread for
Yeah,
$1.30 or so. So I don't mind the trade. I think it's
a good
it's
one.
there. It's
We
there.
got the peeps saying you're giving the Gordon Gekko vibes.
Oh, thank
You ever seen Wall Street? The movie?
Yeah, I did. Yeah.
Oh, okay.
Oh, yeah.
Good.
Me and
good.
Sahil.
All right.
Yeah.
I didn't-
Yeah.
That's-
Learn how to speak English watching the Gordon Gekko
I know,
movie.
but
Are you
that-
kidding me? Right?
That's an old movie. That's you know,
Sure.
Yeah.
Good job.
young guys. I didn't know that there
I
was.
appreciate it. Tasty nation, I appreciate it.
Good job, Gad. Let's take a quick 90-second break. We'll come back after 90 seconds. This will be one of the few rare times we really do take a 90-second break because we got to catch the opening bell next. Thanks, Gad. Appreciate your time. Thank you, all the researchers.
Thank you.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. With the opening bell is imminent, so let's see what's moving in the market here. We've had about a 10-point handle move back and forth pretty much on the E-mini S&Ps from down around 50-ish, where they are right now, about 10 handles off of their lows, to down around 40-something, right? So we've been in kind of in that stagnant range of about 10 points for the last half hour or so. NASDAQ down 227. It's about 20 handles off its lows. Russell down 33 and change. Dow down 317. Volatility off its highs by about 20 cents, 25.90. Certainly bid, as you can see here, I think about as high as it's been in a tradable market opening, and as we set here to open in about a minute. Bonds are down 7 ticks. They're over 114, 114.01. I say that because they were down to 113.20. Bitcoin 69 and change. But before we get to the opening bell, is oil, which is up $1.30 at 96, getting to that 98-ish area and selling off quite a few times. I know it got up to 99, but here we're at 96 and change. Is oil taking a backseat to the gold move, which is down 6.5%, $300 and change, about $80 off its lows. Those are big moves. And silver down $9, which is almost a 12% move. Go.
If oil sells off, does gold catch a bid?
If gold catches a bid, does the market catch the bid? Because now gold seems to be moving with the market. Wow, we've got a lot of things. You know what? Just trade price, just trade volatility. And today's volatility is about as high as it's ever been. So if you're waiting for a moment to do something, selling both sides, we can go over those trades I was talking about a moment ago, right after we go through our portfolio here. Because after this, we've got Johnny trades. We've got plenty of time to look at trades and everything else. So even the S&P is down 60. Go. I know now you're going to take a look at your overall portfolio. You're leaning with a little bit of long delta, beta-weighted deltas, right? So the first thing that I think everybody should do.
I sold out those MCL calls again. I've been like scalping them at $2, buying them back at like 160, 170.
This is crude, right? So you're selling crude oil calls.
The 140 strikes.
Worked before, so you're doing it again. Crude oil higher this morning. One of the, I don't know, I guess it's been a mixed bag of tricks in commodities, but I think when you look at oil and nat gas being higher, you consider those the same. And corn, wheat, and soybeans, you really don't trade. If you're looking, that much. If you're looking at commodities, Bitcoin, gold, silver, all lower. Bonds, all lower. If bonds are a commodity, I would say that they're not. But
I have those MU butterflies. They're pretty much right at the money. When we were basically on change on Micron after the close, I was like, I'm going to hit just a mega home run. They're wide, $30, $40 wide. Here is kind of the end of my range. So I have the 425 calls, the 440 calls, and then I was short the guts at like 450, and then I just closed the 480s. So just to give you where I was kind of trying to hit was somewhere between 450 and 480, and we were right there.
And you only have one more day, right?
Yeah. So now I just closed out of the 480s. So if something crazy happens and we have a move to the upside, I have no risk there. But every dollar up is
works for you because you're long the 425.
Yeah, so I'm long it.
I know you have the 425 long and you're short the 450. You said?
Yeah, the 450s. But I'm long now. I have basically call spreads. So I'm long the 425 and 440 calls, short the 450s. But the 450s are still at like
$2.50 or so. They still got plenty of premium in them because the expected move is $20, 19 and change, which brings you, right to your short strike. So I think you have to sit.
Yeah, for sure.
You get a little bit of a move back here. It's down $35. You get a $5 rally, which is well inside the expected move for the 1 day. Fat City trade for you.
Yeah.
Would you just doing silver here? It looks like you closed some calls.
I had like a calendar spread on the upside, so I'm closing the 90 strike calls. They're at 20 cents.
Perfect.
So just getting those off the table. I still have the calls on the upside, but they're small. It's a calendar spread. So
I just closed my silver 1x2 that I put on too. That was basically selling on the call side, selling units there too. So with you, all the way up at, I don't know, my break even was somewhere around 120 in silver. It's half that price right now. So easy trade to close. Those are the easy ones, right? Because those are the profitable ones. So what do you do about your delta? We get this question all the time. What do you do with your delta that you have that you might be looking to?
I wish I had some extra short delta coming into today. I clearly didn't have enough.
Don't we all?
Based on where the market is. What do you think?
What would be the worst case scenario for the move today? The hardest to trade. I think the hardest to trade would be no movement and volatility basically sitting right here, maybe the 25.50 range to 26 range, which is what we've had in the market, volatility bid and market, down 40, down 50. For existing positions, worst case scenario.
Yeah, I think from a delta perspective, right now, I mean the adjustments I've done so far are pretty minimal. But I'm basically just taking off some of the upside calls that I've had. So I close out the ones in silver and gold. In Micron, that was the sort of adjustment I did there. FCX, like I'm just looking at stuff where these stocks have moved in a big way, and the premium that I sold is just not worth having any sort of cap there. The question becomes,
do you roll that premium down?
That is the big question.
That is the $64,000 question. Something else you'll notice, that gold volatility is actually rising as gold goes lower on this $24 move in GLD alone. Huge move, 5% move in GLD.
Yeah.
Let's see what else is moving across the board here in the markets. I know you had SanDisk on the upside in your
yesterday.
It's doing the opposite today, down 46. MU down 36. Gold, I just mentioned, down 24. AppLovin down 19. BABA, we didn't mention it for earnings.
Yeah.
We should. It was down 5 or 6 pre-market. It's down 13. That's a 10% move in BABA. That would be outside the expected move. And BABA has not behaved with the market here, even though it has a correlation of negative 73. So you would expect when the market catches a little bit of a bid that this may go higher. When this goes lower, when the market goes lower, this may go higher. Not today, not so, with a correlation of 0.73. And you can see that on the right-hand gutter. Go ahead, you want to say something?
You want to do that? You want to take a look at the SPX wide put ratio / SPY ratio?
Sure. So let's go into SPX. So I'll ask you the question, since I don't have the audience here. You've got SPX monthly implied volatility 26 and change. Remember, this was around 24 just 2 days ago. And so was the back month. Back month was around 24 also. So you've got 27 and change and 26 now and change in the front month. So you got a little bit of higher volatility in the back month. Do you go to the shorter term play, which means you'd have to go shorter, closer to the money, but more bang for your buck if you get the direction right? Or do you go with the time frame with your volatility coming up in the back month, taking that into consideration? Where do you want to go? It's 6 of one, half dozen of another.
I was going to get your opinion on this.
Okay,
so you think you go the 30-day expiration is going to have higher volatility?
Yes, slightly higher.
Yeah.
Well, I mean, it will grow.
Yeah.
I'm going to default because I have other bullish positions, like I sold volatility here and other places. So I might go to the May options to fit my portfolio. Okay. You might, if you have more neutral or even short delta in your portfolio, you might look to be a little bit shorter dated here, right?
So what do you do? Buy the 30 delta, sell?
I think you could. So if you want to look at a broken wing butterfly at first, and then we can go into SPY and maybe do a 1x2 to show you the same thing. Use the same strikes to show you different credits we receive.
Yeah. And
stay smaller. I would go even further out than the 30-ish delta, closer to the 25-ish delta, just to use round numbers. I might go to 6150 and then go to 6100, and then that's $50 wide, and then I might go $100 wide here. From the 6,100 to the 6,000, and you're getting $6.35 for a 78% probability of success. You are using $4,300 in buying power here. You'll notice these numbers are moving all around, so you really have to do a little price discovery in here. You watch for a second as the E-mini S&Ps are moving. They were just down 60, now they're down 52. It's been as high as $6.75. It's been as low as, right there, $6.05 or so. Wide-ish market, so you got to be careful on your pricing here. But I start somewhere around, $6.75 or so and work my way down as the E-mini S&Ps move. That would be one example of a trade. And you look at it, it's one long delta. It's really 10, almost 13 long deltas in SPY,
What do you think about a real wide one in SPX?
Like $200 wide or something like that?
I'm thinking 250 by 500.
Okay, so what do you got? Show me your strikes. Tell me what your strikes are.
62.50.
60,
long option.
62.50.
I'm 57 days out. 6,000.
57 days out. So you're going to the.
I like to use the PM settled, so the May PM settled.
Okay. 6 of one, half dozen of another. But go ahead.
It's just a little. You don't have to worry about settlement. Not that I'm hoping to hold this until settlement. I'm hoping this is out.
You'll be able to do something Friday morning as opposed to not being able to do something on Friday morning if you're doing the AMs, which I was looking at.
Yeah.
Go ahead.
And this will be really capital intensive, but we're in a portfolio margin account, so we've got a little bit of leverage here.
So go ahead. What are you looking at?
6250 for the long option, 6,000 for the shorts. So you're going to like a 30 delta for the long, 20 delta for the shorts.
Okay.
And then you're going 500 points wide to 5,500. Your risk is at 57.50. You do this for a $3 or $4 credit. Your long option is much closer at the money. So if you get a vol contraction / a little bit of a bounce here, you'll probably be out of this trade. You're selling units on the downside.
Mm-hmm.
You're crazy. You look a little scared.
No. Way bigger trade than
from a total risk perspective, yes, for sure.
Yeah, way bigger trade. 5 times as big. Buying power alone, 5 times as big. That's what I measured.
Yeah, from total risk.
Yeah, total risk.
You're cash secured on.
I'm giving you the bad side. I'm going to give you the equal side now. Delta of 1.
Yeah.
Times it by 10. It's 10 deltas to match SPY. My delta was 13. So I know it's de minimis. 3 deltas, one way or the other, is not going to make a play here. 89% pop for you.
Yeah.
78 or something like that % pop for me.
Do you do that, or do you sell puts in ES? That's the big question.
That makes it half the size of your SPX trade, right? 50 cent. 50
yeah, but this one has you have a buffer on the you'd have to go and sell.
Remember, the trade that you're looking at, you can also make $25,000 on too, right? I mean, this is a cash settled product, so if we were to close right at 6,000 on SPX on your expiration here, you'd make $25,000. I mean, it's $25,000 worth of risk, $25,000 worth of profit, max risk, max profit on the trade, 10 deltas to open the trade, 50-50 money-wise with an 80 or 90% pop. I mean, I love either trade. It doesn't matter to me. It's 6 of one, half dozen of another.
You think selling the put in ES is better or worse?
Just the naked put?
Yeah.
I like the spread. I'm a spread guy. Yeah. Your ES put would make a lot more money.
Yeah.
It all depends on what you have in your overall position.
Let's see where we get filled.
Even the S&P is up 47.
What I would love
down 47. Sorry.
To happen. So we got filled at 345. What I would love, and I do this with like Micron, and we've done this a lot.
Okay.
If you get a little bit of a vol contraction and a bounce from here, buying in the downside risk and turning this into a butterfly that you can just kind of let sit and see what happens.
Sure.
That's
a best case scenario.
But that's if you had a rally to 6,700 and volatility back at 22, you probably buy in that risk for maybe $1, $2, $3 over the. You might buy that 300 point wide spread for $3, $4, $5.
Yeah. Right? Oh, absolutely, absolutely. You're selling tail risk is what you're selling here. Far out of the money, tail risk. Yeah, no doubt about it. But I was just saying that's a managing winner problem, which is not a problem.
Yes, but I'm saying instead of taking the profit.
No, I thought you said I was a right spider. Go ahead.
I was saying instead of taking like the profits on the trade, like closing it for a $4 or $5 profit, I would rather buy in the risk if possible and give myself that shot. If something crazy happens, you have kind of a little bit of a buffer. That's kind of how I'm looking.
I totally like it. I'll show you this trade not working or something similar to it if I can in just a second here. Let's see if that's my trade new. Let's see here. Hold on one second.
They're giving you the.
I'm trying to get to the follow page account without having yours there for a moment. Here you go. Similar trade. Hey, not fair. I got it. Here you go. Here's a trade I did yesterday, which you can do better than I put on. Looking at this same trade, this again, same probability of success of the first trade I showed you, much tighter, smaller buying power by 10%, right?
Yeah.
I got $2.80 on this. It's probably trading closer to $3.50. It's 1 delta on this, which is 10 delta, same amount of buying power. I mean, significantly less buying power, same amount of delta, 76% probably. Now, this is all on the follow page. You can see this, what I did on. I just want to show you a losing trade because nobody ever shows losing trades. But that's the trade right there. No, not you. I meant the general public never shows losing trades. But that's the same trade. Now, it had 10 deltas. If you look at SPY, where it's down around $4. It's down around $3 from where I put it on. It's down around $7. SPY is down around $7, and you're out about 70 cents. The math works. Now, at some point, that delta and that net loss is going to mitigate itself a little bit because you're long that closer at the money spread, even though it's still far out of the money. So the delta of 1 won't move that much. It doesn't change that much from a delta perspective.
I also sold puts out in Qs and SPY.
Also sold puts out in Qs.
$20.
Well, that's how to get smaller than SPX. Yeah, I like that.
Yeah.
Get back into these accounts.
Yeah. And I think we look at like some strangles in I just did one in Amazon, volatility expanding there. I did basically a 20 delta, slightly short delta, just the skew is off the chart. So like Amazon, when you look at the 18 delta calls, and you could see them in May. The 180 strike call is $4 and change. The 240, this is the same delta. It's only at like 278. I mean, there's a lot of the reason I moved this in, and I only moved it in 1 strike to 130 or 235, is because there's so much skew on the downside. A 10-point rally from here, and this trade is profitable.
Yes,
even though you're going to be net short delta on this trade because of how high volatility is getting in some of these products, you're not going to worry about that $10 up move.
Yeah,
$20 up move, then you say, I'm the stupidest guy ever. Why didn't I just sell the puts? But that's the caveat to trading, people.
Yes, but then you look at your overall position, and you probably benefit from someplace else, right?
Yeah.
So again, being nimble here would be the call of the day.
I think we got to do some. I don't want to just sell the puts in FCX, maybe.
Okie dokie.
That was from Sahil.
Okay, let's try it.
Well, they had no problem taking those. that was no problem. And I just got filled on those FCX puts. They were marked at like $1.90. I got filled at $2.05. Now the spread has moved, but.
That's what you sold. You sold around the 25-ish delta option. You sold it for $2.05. You look at the market, 193, 2 and change. FCX down $4. Big move in there, 8% move. Volatility 58, expanding to the upside about as high as it's been. Unless you look at the downside move here, equally interesting. Volatility goes on the way up, actually contracts, making puts a little bit more advantageous. If you get the directional right, you'll get paid a little bit faster.
Yeah, but that just goes to show you that volatility is very high right now, and watch your prices. You go,
and that SPX trade too, and even an SPY trade, you got to watch it, especially if you're selling an extra unit or two.
Yes,
because that mid price will move by 5 or 7 cents in SPY. I'm talking about 50, 70 cents in SPX just by a tick or two in the price change. I mean, the S&P is down 46. They've been holding steady here. Russell actually caught itself a little bit of a bid, was on its lows a moment ago. They're all down around 0.75 of a percentage point or so, where the Russell was down about 1.25% when everything else was down around 0.75%. Volatility, interesting, 26.55 here after trading up to 26.10 or so. I sold it at 25.45 and a little bit at 26. Not as much as I sold at 25.45. So my average price is right around here, maybe a nickel one way or the other.
Crab trade.
Crab trade.
We're putting some money out, brother.
Okay, so now I like so
this-
here. See now, so this
let
is
me
an
go- yeah.
intelligent trade to put on.
So-
if you're a volatility trader, so
I'm a volatility
There's more
junkie.
ways to trade this than just the way that I looked at it in SPX or SPY. This is a really interesting trade.
And I'll pull this up in a second.
Okay.
I'm going to do this in SPY too. And these are capital intensive trades. They
are
a small trade, and when volatility
in a
is high,
portfolio
I'm
margin
trying-
account is not so capital intensive, but in others it gets.
Yeah.
Yes.
So let me.
One of the advantages of portfolio margin. All these trades have come through the follow page. This is exactly what we were talking about, just another way of looking at the other side of the coin, heads versus tails here, on selling volatility.
And just give me a moment because I'm just getting all.
Probably a little bit more of a intelligent trade. This is kind of what we were looking at in gold.
Yes. So here's what I'm looking at here. So this is a crab trade, which it takes advantage of implied volatility that is expanding, which typically expands in the front of the curve. Is usually and this is backwardation, right? So you have higher volatility now, lesser volatility in the back. Even though the whole curve has moved up, it's in backwardation. It's much higher now.
That's correct.
What I'm doing is I'm getting some long delta, but I'm selling these units on the upside. I'm short volatility on the upside in the shorter duration. So your net position, if you're doing this like 1x2 or 1x3, which is what I'm going to, is selling 3 of them, it's going to be a debit trade. You have upside tail risk.
Are you going to put it up or you want me to?
Yeah, I'm going to show it.
Okay,
I'm just explaining what we're
please
doing
do. Go
here.
ahead.
And you have upside tail risk here, but you're really short volatility. And what is going to happen with these trades is obviously...
Look, because on this chart, it looks horrible.
Well, this is just right now.
I know. Why would you make this trade? It looks like nothing but risk. So please
Yes.
explain it.
So this trade, if you're like, we've added the downside risk. We sold the puts. We did those butterflies on the downside. So we have a lot of risk on the downside. So I don't want to add risk to the downside. But if you have the downside already, this is a way to kind of buy the dip, but be also short volatility in the front. And so what happens is like, let's say we just go, because I'm long the back month, I'm short the front. And we move, a couple weeks out in time, just moving this to the 7th. The risk profile changes a little bit. You can see we have a profitable position here, but really what's going to happen is this front volatility is going to come in pretty significantly. And it leaves you with this position where you're kind of neutral from a delta perspective at the start. And this doesn't, this profit chart doesn't look as sexy as what you're seeing here. But when you're putting this trade on for, a couple $100 in risk, because you already have the downside risk on, it gives you a nice little pop to the upside. And the real thing that you're doing here is you're essentially financing this call option.
That's correct. The buy that you have.
You're buying this potential call option at $8, so long as the market stays below your shorts into the shorts expiration.
Sure.
You have 29 days. So it's kind of a trade that has an interesting profile from a volatility perspective and from a delta perspective without adding the risk to the downside. We have a crash scenario and this trade doesn't matter.
That's
like
correct.
you lose, and you could see it here from the
With a
risk
crash
profile.
scenario, you
go to 605.
You make small couple bucks. I mean, it depends on how fast we move. It's not any risk to the downside.
That's the point. Is this is an up? You have tail risk to the upside. We get to 7,000 again in the next 29 days, and this trade doesn't make you any money. You probably don't lose any money, but you're probably making enough on your downside risk that I put on today.
We get this back and forth movement that we've had as of late, and maybe a little
And you'll hit
volatility
both.
contraction. You're gonna hit both. You're gonna have a chance to be very nimble in this trade. Now, I just looked at the 680 strike because that's your short strike, and I know if we get there, last time we were there was May 5th. If we do this in the next 14 days, this will probably be a home run trade if you just kept it the way it is and didn't even get a chance to buy any of that risk.
100.
So if it takes 14 days on a 29-day trade, basically half the amount of time to get up near your short strike, which that analyze page would show you at this moment would be a problem. It's only a problem if it happens today.
And for those of you that are not in a portfolio margin account, which portfolio margin, the limit is $100K now.
Right. It's a great.
So
down from like 175 and 150
yeah.
that it used
So,
to be. Yeah, sure.
It's a lot more accessible if you don't have, or if you're close to that number.
Yeah, it reaches a lot of people. And you can't aggregate accounts like your IRA account plus your margin account. It just has to be a margin account. But yeah.
So if you're not in a portfolio margin, you're just in a regular margin account, or even if you're in a cash account, buying the wings in the shorter duration expiration is going to define the risk.
That's correct.
So you can make that as wide as you're comfortable with.
That's correct.
10 points wide, 20 points wide, 30 points wide. But
from your short strike and
from your short strike.
You short the,
so if you're
example
long,
you used 685.
if you're doing this 1x2 and you're long the what was I at? I had
you were long the 665, short the 685s in SPY.
So it's 20 points wide. If you were to go 20 points wide on the upside, if you're doing this 1x2 and you go 20 points to the upside, your buying power is going to be the debit. If you're doing this 1x3, you'd buy 2 of the calls on the upside, which would make it a 20-point wide spread times 2. So you'd use about $4,000 plus the debit that you pay on the.
Yeah, so you're short these 685s. I have it here in the front, and what you're saying is going $20 out of the money. At that point, it's 705 for 55 cents, 704, 703. Make it as tight as you want on the whole trade. I'm just going to use the example that you use, 705, and you're saying buy 2 of those, and it'll change your buying power significally if you don't have portfolio margin.
And you can do that to any strike on the upside. Like it just depends.
And it's costing you $100 of the credit that you receive there. I know you're paying for a net debit for it, but it costs you $100. And that out of the money option, what are you going to sell it for? 10 cents? If all things work out good, 10 cents, 15 cents, you're costing yourself 35, 40 cents to be able to put on the trade. Again, omnidirectional, no downside risk. Seems like the type of trade that has legs to it.
Good job out of you.
Good job out of you. We've gone extra long here.
Yes.
You want to get to
volatility is only down 60 or only up 65 cents right now. Interesting. Do we
as foretold?
You did foretell.
No, we got a little bit of a rally in the market, but even the S&P's down 35. Last time even the S&Ps were down around 35. Volatility was closer to 25, 50-ish.
Scoopy this bond position?
Bonds up 10. I mean, you want to take a little scalpy.
I mean, we were looking at bond. We were selling these at when it was 113.
We sold,
When the bonds were at 113.
Yep.
There we go.
Yeah, you just took 10 ticks out of them. So good job out of you took 10
and
ticks.
I still have some long delta there too.
Yeah. Okay. I mean, listen, the hardest trade in the world to make, which I don't know if it ends up being more times than not because I don't have any statistics on it, but it certainly seems like that. The hardest trade to make when you have a position that's going against you is another position that mirrors what you have on, and that's exactly what you did.
Do I take this part of this MU butterfly off too?
Yeah, I say
the stocks rallied $12.
I say why not? I mean, this is what you
wanted.
I mean,
you're like, are we gonna be see, this is markets. Things happen and you look at markets and now
I think you have to be nimble.
I know, I agree.
You waited to the almost the very last.
You can't be a pig. You can't be a pig.
Bulls and bears make money, pigs get slaughtered. You just did this for $12. You didn't
that was on a butterfly that I had on for free. And that happened in 27 minutes. So you take the money and run.
Yeah, and you only did half, right?
Yeah, I got one. I got another one. So I have the 440, 450 on. I'm gonna let that one sit.
It makes up for a lot of your crappy gold positions.
Well, that's bounced 100 points.
It has bounced 100 points. It has bounced 100 points. And listen, all this talk, and we still haven't talked about oil, which hasn't moved actually 96 in the middle of its range, down small.
Yeah, it's so.
Down small from the last time I
thought I bought the dip on gold and silver, but I bought the pre-dip. I bought the pre-dip. I'm right back to even. From the ones this morning.
Don't we all?
Amazing.
Okay. All right. You ready to take a quick break? I know we went really long, but you know what? I think that's what the audience likes is looking at trades. I mean,
things happen in market. That's why we do a live show.
Talk is cheap.
Because you don't get you can't pre-plan that.
No.
That's just markets. And so
that's correct.
this was beautiful. a beautiful thing. It was magic. It was really magic with father son. I loved every second of it.
It's not what we said on the break. Let's take a quick 90-second break and come back. We got more Tasty Live with Johnny Trades delayed edition. We'll be back in 90 seconds with Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and we've got Johnny Trades. You heard the music. I heard the music.
Oh, my God.
Sweet, sweet music. Even the S&Ps, let's take a quick look at them.
I wish some of it would be it's an HR nightmare in general. It's an HR.
We had a father and son come to Jesus moment this morning, and it was more you coming at me a little bit. So I liked it.
I got to put you in your place sometimes.
I liked it. You're right. You're right.
No, but
a lot of people do that these days. They
put you in your place.
Yeah.
Swing that way now.
Even the S&Ps, even James has put me in my place. James, I love you.
He's gotten a little crotchety. He is a little cantankerous. We needed that aspect, though, back on the show. I'm too optimistic.
Even the S&P is down 27. They've been about as high as that we've seen them for the day, even though they're down 27, about a half percentage point. Volatility up by 45 cents to 25.10. I don't think we're out of the woods here. Volatility, as you can see, has had a larger move, relatively speaking, on the day down than up. But even the S&Ps are rallying too. Now, you did notice as even the S&Ps were making their lows, volatility was not making its highs, coming in a little bit there. I thought it was easier to sell volatility /VX or VXM than it was to buy even the S&Ps. But at this moment, you were getting benefited from both. NASDAQ is down at 133, and really the best bang for your buck was in the smaller product. Remember, one IWM is equal to about a half of SPY on a notional value. That was down around 1 1/3%. It's only down 1%. It's only down 1/3% now, rallying 1% off of its lows. Dow down 167. Volatility, as I just said, flirting with 25.10 right now, up 45 cents. Bonds, we took our movement there. We traded bond puts when bonds were under 114 to 113. You had a 10-tick move in the bonds, and you had a 10-tick move in the options. That's just because bond volatility was bid in a big way here. So listen, you got the move right and you got paid. That's just the when you get it right, that's how the game plays. You could have traded notes, which TP talked about on Wednesday. It would have been a little bit of a smaller product. You would have had the same type of
higher vol though.
Higher vol. You might have even got a better bang for your buck. That's what you get for doing the show, son, and not thinking about the trade before you make it. I'm just kidding. Bitcoin down 1,000 and change. Oil hanging in there. I mean, hanging in there more than I wish it would hang in there.
If that comes in, I think you could have some.
This is the hardest market for me to trade, which is a news-driven market, and I always
I love this market.
You do like this market because you read, you're educated. I'm not educated. I just look at price and go, oh my God, what's happening here? And you will say, well, they just did this, or they just bombed here, or they just moved here, or we need $300 billion for this, or we need $200 billion for that, and no wonder it's happening like
Korean memory shortage.
There you go. There you go.
You ran with that one.
Sure. Whatever. But oil vol is elevated, still not on its highs, right? Let's go to your OVX CGI.
It's taking. You could see him clicking each one. Ding, 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 ding,
I did. Of course I did. I should put it in a list down at the bottom there, so I just have it. Trading at 97. It hasn't moved. It has come in from the highs. Obviously, the last time oil was up here, but this is such a news-driven product right now. I think that it makes it hard to trade. I think you could fade the upside. I think 98. I've been talking about it forever. Has been a spot. We're right here at 96 and change. I'm leaning a little bit short in oil. That's the product itself /CL. You can do USO if you want to do that. USO down $1 and change. But look where it is, up near its highs. I think /CL is an easier product to trade than USO, but it is a little bit bigger. If you're going to make it smaller, do CL spreads, credit spreads, make them as wide as you want. Gold down 259, about $130 off of its lows when it was down around 7-ish%. It's down 5% right now. Silver traded down to 65 and change, $4.50 lower than where it is right now, back to 69 and change.
Johnny Trades.
Let's do it. I'm so sorry. I know we're going long.
It's okay. It's good.
Don't worry, we'll get Q in here. We'll make him read his top 20, and then we'll get his arse out of here. I'm sure he's very busy on the trade desk anyway.
He's even getting let go. All right, Johnny Trades. So we got a couple positions on we got to deal with here. So we have a HIMS trade. We did this 1x2 strangle. So this used about $200 or $300 in buying power per contract, which was well within our range of buying power here. We're short one of the 22s, two of the 34s. Stock is basically unchanged today, which is kind of surprising. But the spread, we did it at 358. It's marked at 239, so it's a see you later from last week. So we're gonna close that one. Okay, 239. We're out of that. I'll deal with those there. We've talked about before, like, getting long delta or getting delta in a smaller account is a tough thing to do. One of the ways you can do that is by managing trades and by taking off risk. And so I have risk on the upside here on this iron condor and gold. So I'm just going to take this off the table. Not that I think we're going to get to 510 again, but in the event that we do, I won't have an issue there. So I'm out of that. DraftKings, we have this covered call. We sold the 25 strike put for 75 cents, took stock, and then sold the 25 strike call against it. This was the wheel trade that we did. And so we've collected $150 $20 in premium here. If we get called away at 25, we would keep all of that money. The option still has about 50 cents of extrinsic value. I mean, this is an at the money option. The stock is right at 25. You got $40 or $50 to make on this option through the end of tomorrow. And if the stock is lower, then I'll just roll and keep doing the covered call here. We got a couple positions that are at the money. This MOS position, the 27.5 stock, or 27.5 put. It's another one that we are going to hold there and potentially wheel into. We've got a short put spread in SMH. SMH has been weak. It's one that we're just going to hold here, lean a little bit long Delta. I think we can maybe we did a wide iron condor here, so I did this on Tuesday, so I'm gonna hold that one because I gotta record videos for that one. So
if you right click on those that you made, I'll push them through on the Johnny trade. You'll see all of those trades. While he's doing that, let's just take a look for a quick second. Even the S&P is down 33. If you remember last time I quoted them around here, volatility was trading closer to 25, 40-ish or so. Here's what I was talking about, that maybe volatility is a little bit, now it's come to fruition, that it was a little bit of a better sale on volatility. You had volatility trading 25, 40 or so, and you got the E-mini S&Ps basically unchanged from last time I quoted. So maybe volatility not moving as quickly. Doesn't mean the market's out of the woods here, but it seems like volatility has kind of stabilized here a little bit, just uptick by 10 cents.
So,
all right, Johnny trades. Let's take a look at it.
I'm thinking we kind of do a Johnny version of what we did in SPX.
Okay.
In our account.
Okay.
I already have a SPY position, so I'm leaning towards doing this in the Qs.
Okay, perfect. And if you want to get even smaller than that, you could do it in IWM. I prefer the Qs.
Yeah,
because Qs move more with the market. IWM, kind of a crappier, Russell, kind of a crappier product. Definitely agree with you.
So here's what I'm looking at. I'm looking at May.
I'm going to put it up on the board.
I got it.
Okay.
So I got the 570 strike, so about a 35 delta. I'm going a little bit closer at the money. We've rallied a little bit, but I'm going a little bit closer at the money because I'm trying to do this to where I use about $1,000.
Okay.
If you're going further out of the money, you're going to have to make it a wider spread to still collect a credit or do this for basically a scratch, which is what I'm looking at. Okay. So I'm looking at the 570. We'll sell 2 of the 550s. And then we'll buy 1 of the 520s. So you're 20 by 30. If you typically do these butterflies, you want to do them for credit. Oh, you have yours up now.
Sorry. Yep.
You typically want to do them for credit so you have no risk to the upside. I would rather reduce the buying power to $1,000 than move this another $10 out of the money and get a 20-cent credit. Mm-hmm. It doesn't really change the position.
Yep.
And so we're going to put that in. So it's a short vol flat delta position here. You can see the delta is 0. And we're going to do this. We're going to have to do this for probably a small debit. All right, we're in. So it's 11-cent debit. So if the market rallies, we're going to potentially lose 11 cents if we held it to expiration.
That's correct.
But it'll hold some value because it's short volatility units on the downside. All right, so we're in there. Perfect. I think another random stock that I want to look at that got whacked the other day, SoFi. What do you think about that?
Sure. I like it.
What do you think about doing something a little spicy? Johnny Spice. Oh, no.
Johnny Spice.
I thought it. So
it's a new one on me.
So I was going to do like 1 by 2, like buy 100 shares and sell 2 calls.
Mm-hmm. Okay.
But I think it's too capital intensive. There's a little volatility has expanded, so buying power across the board on naked positions is going to increase. So I've been used to this using $400 or $500 in buying power. It's now using $800, $900 in buying power. So
I like it.
I think instead of doing that, maybe we just do like another put and just do like another potential wheel here.
Sure.
Sell the May 16.
And what do you mean by wheel when you say that? What do you mean by wheel?
Sell a put, and if the stock goes lower, you take stock.
Okay. I mean, I like to manage that put. Like because stock will use so much more buying power. I know you're very small here, so it's a smaller size stock, so you're fine with that. But I would usually manage that put. It's the same thing, even if you sell an in the money put. Like you sell this put, it's out of the money, and now you're going to get put stock. I mean, I usually roll it, but I get the point of selling.
I've reconsidered. I have reconsidered.
Okay, go ahead.
What do you think about doing kind of the same thing we did in HIMS?
Which was?
We can sell, so we'll lean a little bit long delta here.
Okay.
Well, I guess it's not really long delta because I'm going to do some extra units on the upside here, but it's a meteor option at the money. I'm thinking we do like the 16 strike put, and we sell 2 of the 20 strike calls against it.
Okay.
It'll use about $400 in buying power. Your delta is short delta, but you're adding to the idea if the stock goes down, you're gonna take it even cheaper.
Perfect. Let's do it.
All right.
I like it.
And these are, it's
smaller Johnny size.
Yeah, these
accounts.
are small.
Yeah. That's the way it's supposed to be.
All right, 290. So we're in on that one. I guess so. We had one we'll call the Q's bullish. We'll call SoFi bearish delta wise because you're 20 short delta.
Okay. And if you if you push those, I'll put those through.
I put them through.
Oh, very good. Thank you.
What do you think? What do you think now? What do you think now, silver?
Brown Cow?
Do we do something in gold?
I guess you could try gold. Let's let the markets decide, meaning the option market decide which place you would go, and you let me know on a smaller sized account. Gold market's about if you're going to the 29 days, they're about 30-40 cents wide. If you go into the April options, they're about 60 to 80 cents wide. Let's look at SLV here. SLV, smaller product, $65. If you go to April, markets are about 20 to 15 cents wide amongst friends here. If you go to May, options are about the same. Which one's a better product to trade? Silver, IV rank of 51, GLD, IV rank of 59.
I actually already have GLD.
So then let's do SLV.
You want to do SLV?
And SLV has much better markets, was the point I was trying to make.
What do you think about like a Jade Lizard type position here?
Sure. The first thing I have to ask you, are you trying to liquidate money to put into someplace? I'm just kidding you. Because silver is going down because of liquidating.
Yes,
it was a bad joke.
Yes, of course.
Right.
Yeah.
I like it. Silver got as low in the trading here in SLV down to just about 61. It's 63 right now, which has no bearing on the trade because all you can do is trade the here and now. It's down 8%. If I told you were going to be long, want to get long something yesterday and it's down 8% today, you would think it was a
buy
gift. Yes. So what are you looking to do here? Some sort of Jade Lizard?
Thinking so naked, and this is a function of volatility here too. But being naked here is going to use about 1,000, about 1,200, 1,300 in buying power, which I can obviously do. It's high-ish. If you wanted to buy a wing like the 50 wing, it costs you a pretty penny. I mean, it's 60, 70 cents.
Buy
like the 45 for 30 cents, but that only
doesn't increase your buying power.
It only cuts down by 200.
Yeah.
This is too much.
I think you have to put the trade on the way it is, and this would be the point where you say to yourself, okay, at some point, if I get the move that I want, I'm going to
be more aggressive.
Be more aggressive with it. Okay. That's right.
I think you're right.
That's right. How's that suit you?
You've done this for quite some time. You know the things. All right.
If you push that through, I got you 2. You did 465 credit on that trade. Good job out of you. So go ahead, recap.
Closed HIMS, closed the call spread in gold. We put on the wide butterfly in the Qs as our short vol, neutral, bullish type trade. We did a short delta kind of neutral position, SoFi. Short delta, but neutral, your short units. And then we did a Jade Lizard, which will be long delta. You have tiny bit of risk to the upside because you're doing a $5 wide call spread, 465. It's not going to ever go to $5, or at least you're not planning on it unless something crazy happens to the upside. So short some volatility across the board in all of these trades. This was like the net delta of the positions overall is probably like 0. It's very short volatility.
Right.
That's the trade.
Right. I just got an email from somebody saying, you seem like the type of trader when you trade these futures, you got 50-cent move in the volatility that you needed. Why not take it off? And I consider myself a great scalper back in the day. And if I wasn't doing the show and everything else like that, I probably would look to scalp and look to re-enter and trade a lot more. I do the show now and I've become more of a long-term trader, which is, more of that week, 2 weeks, 45-day trader. And I've become quite mediocre. So I'm not closing it. I like to torture myself. So I want to take like a point worth of pain to get back to where I originally was, and then probably take the 50 cents or 60 cents.
No, you take like the 20 points of pain to make the 1 point.
That's correct. That's correct. So don't do as I do, do as I say, and become a much better trader. All right, what are we looking at next?
We got a market measure.
We do have a market measure. We're going to take a quick 90-second break as even the S&P's about 8 or 10-ish handles off of the last time I quoted them. NASDAQ down 170 and change. Russell down 13 or 14. Dow down 300 and change. Volatility hanging out at 25.05. I'm going to round down because that fits my position. Bonds 114.13. They caught a little bit of a bid. Surprising that bonds really were the quickest, easiest thing to trade here, at least while we were on the show. Oil up $1.30. Can't keep a good oil down. You really are an SOB. Gold down 280 and change. Trying to
oil
hold
volatility coming in though.
So let me do it this way here. I must have just clicked on it a moment ago, didn't I? Oh, I don't have enough.
I
got it.
I got it.
All right, you're the man. You're the man.
It at least feels like it's coming out of the options because I sold those MCL calls this morning and they've already come in like 15, 20 cents, which is about 10%. I'm not taking them off now, but it seems like volatility in oil is staying bid, but it's not. The tail volatility is really spiky. Like it's going to, the volatility at the money is staying right where it is. And then on these moves, these dollar moves, the tail volatility is just going up and down, up and down, up and down. And so I think that's what's happening here.
All right.
I don't think it. I know it because I've been trading it.
Let's take a quick 90-second break and come back. We've got more. Don't forget, SPY has a dividend. It's a big one, $1.50, 60, 80, something like that. It's a big one. If you have an in-the-money call spread, long or short in SPY that's expiring, let's go with a bad good scenario. You had an in-the-money March position that you sold a call spread, and it was full loss. And now it's gotten back to where it was. I'm going to just play around here and say it was a $10 wide spread and it was a full loss and it's still in the money and it's a $9 loss now because you got the move down that you wanted to and you want to hold on to it because, you're saying, hey, this could, I could get that back to $9. I watched it go $20 in the money, $30 in the money. If you're anywhere in the at this point in the 1 day, the 648, 76, anywhere in here on these calls, meaning your long call is here and your short call is out here, or both are in the money. Remember, if the put is trading for more than $1.70 on your short call, you might be in jeopardy of getting assigned on the short position that you have. Don't put on a spread don't risk having a spread that's basically a full loser, lose you another $1.70 or so. It's a big dividend. Even the S&P down 46 as I spoke, so I'm going to get off the air. We're going to come back. We got a market measure after this.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son. Even the S&P is down 47. The test continues. Volatility 25.20. Go.
Let's do it. Market Measure, sponsored by the SIBO.
Sponsored by the SIBO.
Sponsored by the SIBO. Before you double your contracts, watch this.
All right, that's a good warning.
That's a good warning. Good title. When traders are ready to scale their positions, they typically have two choices. You can either increase the number of contracts or trade options closer to the money. Those are higher delta options. Which approach do you think is better for the risk-reward trade-off?
We know that contracts kill. I mean, that's really what it comes. That's really what it comes down to.
Very much so.
Yes, and listen, you just put on a contract trade a minute ago in SPY, like half an hour ago or an hour ago, whatever. That is counterintuitive to what we're looking at here. So we did that, trying to take advantage of volatility, kind of like what you traded at MU, hoping to get the move that we need. But we understand the risk, and the risk was set for our size account. Now, when you're usually doubling your contracts here, usually doing 2 times the amount that you normally should be doing. You trade this account relatively small, upping the contract size puts you in still a small to fair size trade.
Yes.
It's not 2 times amount of buying power compared to all the other trades I had. That would be like a naked put in SPX. That would be like, and you notice when we went to naked puts, we went into SPY, making it a lot smaller here, not doing an SPX, which would be 10 contracts versus 1 contract. You trade 1, 2, 3, 4 contracts in SPY normally, then you go to 1 contract naked SPX. You just did 10 contracts in SPY, something you've never done before, figuratively speaking, in your account. Even the S&P is down 50.
So we'll take a look at this table here. Here are the choices to scale up. Trading both carry more potential for profit and more risk in different ways. So when you are doing strangles, you could do 2 contracts of the 16 delta or 1 contract 32 delta. Mm-hmm. You're delta neutral on both those trades. One is 1 contract, one is 2 contracts. We're going to kind of compare and contrast these. Same thing with short puts. Sometimes people say, well, why not sell just 2 20 delta puts as opposed to 1 40 delta put? It's the same amount of delta, and yes, it's the same amount of delta, but we're going to see the risk reward on these sort of trades here in the study. So the study is going to be in SPY. It's from 2016 to present, last 10 years. So we're looking at 45-day options. We're managing these at 21 days to expiration. We're going to compare the increasing of the size of two 16 delta strangles versus one 30 delta strangle. And we're also going to look at increasing the size with two 20 delta short puts versus one 40 delta short put. And we're going to see the risk reward here. We're going to filter the results by IVR below and above 30%, which is kind of the mark of, just to put everybody, to give somebody context. IVR and SPY right now is 39. So typically when you get above the 30 mark, that's kind of when volatility is at its peaks, because it skews by the big moves in volatility. IV rank is skewed by that. So this is peak volatility.
Good job.
And so when increasing the number of contracts at a 16 delta level, which is two lower delta trades versus one higher delta trade, it improves win rates by about 5% and boosts the average profit by 88% for strangles and 26% in short puts. So that sounds pretty good, right?
Yeah, why not? Sounds great.
Yeah. But you know there's going to be
a gotcha, as Dr. Jim would say.
There's always a gotcha. So the gotcha here is that two lower delta trades increases return variability, with the standard deviation rising 39% for strangles and 18% for short puts. So you're going to have a wider P&L swing in both directions, for you and against you. It's the same sort of delta on entry. You're going to be using more capital. You're going to have bigger swings. That's one of the points that we wanted to make.
Even the S&P is down 50 and change. Volatility up 70 cents, which is 25.35. Remember, last time even the S&Ps were only down 35. They're down 55 right now.
And volatility hasn't really moved all that much.
Volatility's actually come in by 10 cents. Again, just trying to look at...
That make you feel all warm and fuzzy inside.
It makes me feel like regardless of what happens with the volatility trade, I made the right trade on entry. I don't know what the future pricing is going to be like, but I got the perceived edge, because there is no edge, but I got the perceived edge on entry just by having a little bit of market awareness, or at least having an assumption on what volatility, or the research about volatility being mean reverting than anything else. Sorry, go.
Good job out of you.
Yeah. Big deal. I could have bought them and sold them out 30 or 40 cents higher than that, which would be back in. So,
okay.
You cost me money.
I'm sorry. What can I do here? What do risk metrics like largest loss, the max drawdown, and CVAR look like when we compare doubling the contracts versus doubling the delta? Because we've looked at this, and obviously there's higher profit potential. 2 contracts, further out of the money, sounds great. But what does the risk look like? And that's really what the key is here. Increasing the number of contracts increases the tail risk by 73% for strangles and 71% for short puts, compared to increasing the delta. So you're going to be a multiple in terms of your P&L distribution in risk. And with short premium trades, your risk is a lot wider of a range than your reward, because you're capped reward. So this is why adjusting deltas is generally preferable before increasing the position size. I would rather, when you take all this together, I'd rather have the tighter P&L distribution and lesser tail risk than the capped but higher P&L potential, profit potential, and the 2 times loss. Like when you're short premium, your risk reward doesn't move in the same direction. By adding contracts, you have more potential value you can get, but your risk it's all tail risk. So you got to be careful with your size.
Okay, I agree.
In addition, increasing the number of contracts increases downside risk, with max drawdowns rising by about 31% for strangles and 42% for short puts, while CVAR losses worsen by about 37% and 18% respectively. You're going to have a lot more tail risk, even though the delta on the positions is going to be roughly the same at entry. You got a lot more risk. This also highlights why increasing deltas is generally preferable before increasing position size. So if somebody was asking me today, would you rather sell one 40 delta put or 2 20 delta puts into this downside move? I say 1 40 delta. Even though it's closer to the money and it's more quote unquote risk, the tail risk is a lot lesser.
Good. Hey, you're talking about units here, right? I mean, this is units kill.
Units always kill.
Yep.
Yes.
Yep.
like my units in gold and silver.
Well, gold is down 6%, silver down. I'm going to round down 10%. I mean,
we're okay. We're okay. It stings. It stings. It's like
only a flesh wound.
It's only a flesh wound right now.
Right now.
Couple takeaways. When we are ready to take on more risk and increase size, we prefer to increase the deltas as opposed to the number of contracts. It's the same thing for spreads, especially if you're looking at tighter spreads. Widen them out. Average P&L, volatility of P&L, and win rates increase proportionately regardless of the strategy. But the tail risk and the max drawdowns and the CVAR are significantly more prevalent when increasing contracts. You're just in a binary vacuum. If you're looking at one contract of a 40 delta versus two of a 20 delta, your risk is way, way more on the two contracts. Tail risk.
Most definitely. Good job out of you, my friend. Look where we are, 9:34. We were running behind just a moment ago. Now we're right back on time. So let's take a quick look at the market. You want to?
Yeah.
Even the S&P is down 35 and change. It was just down 40 and change. Volatility sitting at 25 now, basically the lowest that it's been all in the trading day. And by trading day, I mean over the last hour or so that we have been trading in the market, actually going lower, as even the S&Ps are exactly where they were last time they were here. Volatility was about 40 cents, 50 cents higher. That NASDAQ down $1.30, 130. Doesn't tell you the whole story here. $200 off of the lows, $200 off of their highs. Place your bets in the NASDAQ now. Place your bets on the E-mini S&Ps. Place your bets on the Russell, which has been the strongest of the group. It was the weakest of the group earlier. Dow down 280 and change. Bonds are up 4 ticks to 114.12. Bitcoin taking it on the chin. It's been the strongest of the group over the weekend. Now coming back down to earth to 69 and change. We'll see what happens there. Ethereum 2,100 and change. Remember, this was under 2,000 just a few days ago, but well off its highs of 23 or so. Oil, can't keep a good oil down. I'm going to tell you something. Oil is such a news-driven product right now that it almost trades, and I've quoted this before, like a meme stock.
Yeah.
But there's going to be a time when
where it was just like gold and silver when we had the downside move in gold and silver. It was,
and I would have thought it was a week ago.
Yeah. I will say,
when last Friday, when volatility, or I know today's not Friday yet, we're getting there. Friday volatility came in as oil was going higher. Go ahead.
You know who has not been having a good trading couple weeks or months or whatever?
What?
Anybody buying risk.
Yes.
Either buying calls or buying puts. If you have not been trading volatility, you're in a world of pain because you haven't made money. If you were buying puts into yesterday's downside move and you caught 50 handles of it, you lost it all today.
That's correct.
You lost the whole thing. Like same thing with calls. Like if you were buying the dip and you were doing it by buying calls this morning, you probably made nothing. You're probably a scratch, if not down. This market in this year has been, you have to trade delta and sell vol. We've been scalping.
It's been a trader's market for
Yeah.
sure.
Yeah.
No doubt about it. Thank you to my friend Brad who sent this to me a couple of days ago. I mentioned it. I'll mention it now because now is the time. We're talking about SPX expiration. We're talking about SPX expiration for the AM settlement options here. If you're in there, or even if you're in the March options that will trade all day long there. Typically, going into, and by all day long, I mean the March 20th options here. That would be the expiration day, or the AM options that expire right on the opening. I apologize for looking at the wrong one there. I put my cursor on the wrong one. Number of down days, Thursday into Friday, is 9. Number of up days is 19. The average downside move is closer to $15. So it's down half as much typically on that Thursday into Friday print, but that print is twice as big. The upside is $8. So upside is 8, downside is 14, but you get more up than down.
Yeah.
19 to 9 there. So the average move is up by around 10-ish.
I would like that. Here
we go. Let's take a quick 90-second break. But we don't know from where, right? I mean, we could be 60
true.
handles lower than this right now. We'll be back in 90 seconds. We got more Tasty Live with those guys from the Tasty Trade World Headquarters. We'll be back in 90 seconds.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade. We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Niggy, we are back, son. What'd you just do in SIC? Did you take a profit?
Yeah, like $100. It's a little. I'm real gung ho getting in, and then when I take them off nice and slow, little tiny. It's the size is okay. I was just laughing because I was looking at it, I was like, my God, I've
little spit in the bucket.
I've taken
by the P&L.
Yeah, like I'm looking.
But it's a win.
I'm looking at my like MGC position. I'm like, oh yeah, I got one that's like, $300 higher. I'm gonna just take like $50 out of this one, no problem.
Yeah, baby.
Pat myself on the back. I learned from the greatest. I watched him say, I just took 20 ticks out of that. And it's like, you've been short for 5,000 points. 20 points. Okay. That's it. Who do we got?
All right, let's talk about who we have. what's up?
Fellas.
Manager Q. How are you?
Yeah, I'm doing well. I'm
Awesome.
doing well. How are you?
Good to see you, my
Who
friend.
do you like in the tourney? Are you a college basketball guy? Like, do you watch a lot of college basketball?
A little bit. Yeah. I don't want to sound like a square here, but I like Arizona a lot.
Big 12, baby.
Yeah. Well, and I really like Jaden Bradley because he used to be on the Tide. And so I like him a lot. Yeah. And then Alabama, hopefully we do well. We have like our second best player not playing.
Yeah, didn't he get like arrested or something?
Yeah, due to a criminal offense.
Yeah, you were saying that like he was like hurt, like, oh man,
We don't
he
have
injured
him.
himself. No,
Right.
like, yeah.
Yeah. No, he
Didn't
got
like half the team been arrested or something like that? Isn't that something I read?
Well, no, I mean,
arrested in the past or the future?
Alabama's basketball team does have a checkered past for sure. But yeah, no, this kid got caught with like 2 pounds of weed or something like that. And I'm like, you're making so much money to just playing basketball.
yeah.
Like, I mean, I don't really
You
need
gotta
to
have
speak
the
on
other.
that,
You gotta have your Johnny friend carry the weed. That's what you do, because then he gets arrested. You're that
yeah,
rich.
you have some bench warmer.
Yeah.
You know.
Yeah. Not even the bench warmer, just like, you gotta have the other guy hold it.
But yeah, so our second best player, I do not think will be playing for us in the tournament due to this.
Okay.
Your second best player, like you're on the team. It's almost like
his team.
like you talking. Oh,
Yeah,
okay,
I mean,
all right.
what? How do you talk about your teams? Do you say like
He doesn't have.
Hey, don't use
Yeah.
me against
John
me.
Jay College
You
of
can't
Criminal
use
Justice just-
my me. I came up with it first.
Yeah. He doesn't
Yeah,
have.
no, I
You never see Glenn do that. He just takes it.
that's my team. You know, that's my team.
Glenn's respectful. Use my points
You are a
against
first
me.
one, Glenn?
That's right.
All right, well, we can get him on here in a
Q,
second.
insubordination.
All right,
you
so
know
like
what? I
Arizona.
vote-
Who do you
I
got?
vote-
Who do you got playing? Arizona and who?
Probably Duke. When I filled out my bracket last night, I think it was Duke. I mean, you know who I really like don't think is that good is Carlos Boozer's kid. I forget his name. I forget his first name.
Yeah.
But yeah, Cam Boozer from the Wings. I mean, look at him.
Yeah.
But yeah, no,
Where did that
he's
come
like
from?
he's kind of like Nikola Jokic, like he's a bit slower, big man, which is like kind of cool, but I just don't think he's like that good. But Duke is just overall like such a good team. Their coach is sick.
Yeah. Chicago boy, John Shire.
Yeah, right? Yeah. Shout out.
GBN, I believe.
Really?
Yeah.
I didn't
John
know.
Shire?
Yeah.
He played for Duke. Did he go pro? I think he went pro. He did play pro for a little bit. Should we get like a camera on you?
We have to go to. I think we have to go to our college expert soon and get him in here.
But yeah, Matt, I was watching Rob and Maria's segment yesterday.
So we did all those trades.
Yeah, Rob, thank you for the shout out. And
That's
then
what do you want to call him?
Yeah.
Yes, he did
Man.
give you a shout. I think he even showed you a picture of you too. I think he had a picture in the background.
Well,
of you.
yeah, and
I think your
Mark.
dad. at least.
Yeah, Mark the trainer was
Huh?
in
Yeah,
there in the
yeah.
background. But yeah, that college basketball system, that's some stuff right there. That could be the keys to the kingdom.
I know I've added a little bit to it.
Yeah, well, he did mention though you got to keep your units in check.
He made it. He made it a little bit more aggressive.
The units have gotten big. The units have gotten.
This is where we get
lean on the
spanked.
condo type units.
Yeah,
This is where we get spanked for 5 dimes.
I want to do it,
and then we
so
never do it
badly.
again. It works every year after.
But are you
This is what you
paying
have
the
to
50
do.
cents for the Illinois state tax?
Yeah,
Like-
there's a tax on everything.
I just can't do. I can't pay the spread being minus 110 and then also pay the 50 cents for the Illinois state tax. I mean, I'm not paying spread and commission. I just can't do it. Like, I lose 10% of my bet just by placing it.
Yeah, but how else
at
you get
least
the itch?
You can't get it. You can't get ahead.
I just
literally,
yeah.
really can't.
I mean, that's why. Like, I would love to be a system guy in like college basketball or something like that. But like, why do that when you could just be a system guy in the market? Where
That's why we need it on a platform here and get it tight liquid markets.
Yeah. Speaking of some tight liquid markets, let's talk about top 20 symbols going through the system.
I like that.
And their
segue.
IVRs.
There
At
you
number
go.
1, the king, Tesla with a 5, Microsoft 31, Amazon 25, Nvidia 9, SLV 53, Micron 57, GLD 62, iBit 57, Netflix 40, Google 16, TQQQ 40, TLT 24, AMD 28, Palantir 14, Meta 20, DDOG 52, Spotify 27, SNDK 65, Oracle 52, and SoFi 26.
Tesla up front all the time. Microsoft up there. That's something we haven't talked about in some time. Microsoft down $2 and change, back near its lows that it made at around 380 and change. It's about 389 right now. You may have did something for option trades today.
All right.
So there
we
you
go.
go.
That's what,
Good
I'm
job
here
out of
for.
you.
The top 20 symbols.
I like
That's what I'm here for.
I like it. I like it. Gave me a little idea to look at something. So thank you.
I like it.
Oh, till the expanding in there, 30 something. I like it. Down from around 20 something.
That was the Micron, the last of the Micron.
And it's done.
Stocks unchanged.
Micron MU down 8 after being down 30.
As foretold.
Change. As foretold. I will give you that one. You did say that. You
had
said
the
that
risk on
pre-market.
too. Had the risk on too.
You did. You had your money where your mouth is. So good job out of you. Now, if you just get your number of cards for winning trades up, we'll be in great shape. Thank you.
We're in a great
Appreciate
spot.
your time. Let me bring in our next victim. The voice from beyond. Glenn, how are you, my friend?
Tis I.
Manager Glenn.
Thank you.
You're welcome. You're welcome. How are you, sir?
You want a title. You still have what's yours? Manager in training?
Co-CEO.
Co-CEO in training.
I'll never make that dream. That dream died.
That dream died. You're not a CEO. You're not.
I am not a CEO.
You don't. You can't play the game.
I know.
You can't play the game.
An innovator, not an operator.
Yeah.
That's sad.
I don't think it's sad at all.
I know.
Everyone's got their
I don't think
lane.
it's sad either. It serves me well.
Yeah.
My man, what's going on with you?
Doing well. To clarify a little bit of that Duke slander, Cam Boozer is the truth. John Shire was the truth. Got an eye injury
You were
in
like
Summer League.
You're the poster child of like Northwestern / Duke. Like you just look like a Duke. Like I see you.
That's not how you want to end that word. You don't want to call me a Duke.
No, but you just look like a Duke.
Blue Devil?
You look like a Duke guy.
Oh yeah, grew up Durham,
Crappy.
born and raised.
You're so drunk, running your mouth. Duke.
I don't know where the hate in your heart comes from.
No,
but we'll talk about it in a later date. Yeah, Duke forever.
Who do you like? You like Duke?
Yeah, it's just one of those things where, a lifelong Duke fan, and I would feel the dumbest if they won and I didn't pick them. So I have to pick them. This could be their
Who do you
year.
think they're playing?
I think I got. I have the 1 seeds and Illinois in the Final Four.
Oh.
So that I think I have. I'm still making final tweaks, but I think it'll be Michigan. If they're anything like how they started the year, they're going to kill bad teams and then hold their own. So we'll see. But that's the madness, baby. Yeah, John Shire was.
We don't care. We have all the.
I will say we don't have the Illinois game because you can't bet on Illinois teams, college teams.
While in Illinois.
That's going to screw up everything.
Yep.
Oh, yeah. So if you're wondering, if you're like, oh, you missed this one.
Didn't miss it.
Informing you. I did
Well, March Madness takes a second seat even to Forex. So what's going on in the Forex world here? What's going on? Because the dollar really hasn't moved that much, has it?
Great call out. You're absolutely right. We have everything, the storm building for, a dollar, a really exciting dollar market in this central bank bonanza week.
It's been anything but, right?
You're exactly right. And the shakeout of that FOMC meeting yesterday afternoon, it was juicy. We have Powell for longer, which is interest rates aside. Yeah, we got our man who's gonna thug it out until he beats the case.
Our shepherd.
So, yeah, until he beats the case, he's top dog. He's not leaving, which is a good news for myself. Love hearing his soothed voice talking in the afternoon. But
yes.
The takeaway, I think, with all of these central banks meeting this week, we expected more volatility, but the kind of shakeout is honestly a storyline that, in retrospect, you're like, duh. Where does this mean U.S. higher rates for longer? Yes, it's looking like markets pricing them out, cuts even throughout all of 2026. But what does that mean for exchange rates? It actually doesn't mean as much because all central banks are coming out with the same rhetoric, willing to hike if inflation pressures are come to fruition. And so when everything in the Forex space is on a relative basis, the reaction you get is a little bit muted because everyone is kind of following the Fed or following what everyone, the consensus view. So the volatility, I think, could come a little later when we get actual numbers in and everyone's talking, inflation is going to cause us to hike. We start to get some of these country by country metrics. Oh, inflation actually not a problem over here. We're going to keep rates as is, maybe even lower, whereas a different part of the world might have to raise rates. And that's where you start to get some of that rate divergence, and that'll play out in a stronger way in these dollar markets. But we still got some movement, absolutely. Dollar weaker throughout this U.S. session, buoyed by some of the rhetoric from European central banks. We got the pound up on the day. Euro
up on the
day?
Yep,
back above 115 in the spot market. And the yen finally catching a bid, but not to any sort of, elastic, crazy degree that we've seen these yen markets capable of moving, but back below 159 in the spot market. And in the past hour and a half of starting this U.S. session, we've been chugging towards 158. So a little bit more elasticity there. Other than that, Australian dollar, less interesting today than it has been as of late. That's what we're looking at today.
But still plenty of volatility on a little bit longer term view, right? Like, I mean, if you look back to January 19th, let's just say, or, mid-January, not a specific date, you had Euro trading, 120s and change. And now you got it down at 115 and change. It was even lower than that. That's a $500
pip move.
500 pip move when there's only really 300 pips typically in around a 90-ish day. I'm just extrapolating out. So 100%. You have volatility in Forex, and you have volatility means opportunity in Forex. It's not just hanging out there, because Forex is a directional play.
Absolutely right, but it is a directional play. But what we're seeing is increased participation. We had all this event risk from central banks, but we still have the kind of geopolitical tension hanging overhead that markets are respecting as almost a binary event of further escalation or a swift de-escalation. And you're seeing global traders participate in these currency markets in unique ways. A popular trend as of late in the euro dollar has been some butterfly options, buying the wings here, expecting extreme moves, because that's where real large traders have to step into these currency markets, is balancing portfolio, really hedging their risks. And so a lot of traders anticipating further volatility in this euro dollar. So binary event risk for sure not off the table. And as of the past start from March, near 118 in the euro dollar, now almost touched 114 yesterday. That's a very different story than ending 2025 stuck between 115 and 160, 116, 100 pip range for really months on end. So definitely a categorically different environment for the time being. A lot of dollar volatility. It's been favoring, pretty short time intervals. Duration trades. If you are able to scalp any of these markets, Australian dollar specifically has been bouncing in a tight range. But we'll see if anything like, this yen, if that keeps running, that could be more of a trending market. If we see a de-escalation, the dollar's put in a lot of strong work over the past month to date. We could, like I said, in the euro dollar, there's still, possibly 300 pips to the upside to return to where we were pre-Iran conflict, war, whatever you want to call it. So definitely a lot to look for, but you're absolutely right. The result of these central banks, specifically, not as much divergent rhetoric, everyone kind of following the global party line of we'll respect inflation, adjust rates accordingly if it is to come.
You would expect them to do? I mean, that's their job.
They are who we thought they were.
That's your job, as somebody told me. That's your job.
They got a couple jobs.
Good job out of you, my friend. You have a couple of jobs too. You wear many hats. I want to thank you for your participation on this show.
Always fun.
Not only that, and everything you're doing over at FX. Good job out of you. We're going to take a quick 90-second break. Son, good job out of you. Relatively tight range all day long, right? Maybe
volatility coming in.
Volatility coming in quite nicely. 2480. Even the S&P's down 34.
There. Bosch on the downside. Is it over?
Now you're joining the party. I hate it. We're going to take a quick 90-second break. We're going to come.
What's wrong?
I'm just kidding.
It was late.
So public.
Now volatility is going to expand. Now volatility is going to expand. Even the S&Ps are going to go higher. My volatility is going to expand. You ruined everything. We'll be back in 90 seconds. We got more Tasty Live after this. Peace.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Golf putt, normal distribution, reduced speed, increased standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody, and welcome to the Red Shirt Thursday edition of the Liz and Jenny Show. My name is Jenny Andrews. That beautiful blonde in a new red dress is Liz King. Looking good, Liz.
Feeling good, Jenny Andrews. I have to respond like that. But can we call this Wait, who's the Miami of Ohio mascots? What are they?
The Red Hawks.
Can we call this Red Hawk Thursday?
Woo woo. If I look like Love it. If I look like I haven't gotten much sleep, my phone was blowing up last night because we had everyone watching the game, and I couldn't go to sleep because everyone was so excited for them. They played so.
I am so excited for them. And if I can at all, I'm going to try to get the Red Hawk swim team on this show.
This morning Liz said you've got to post a picture of the swim team. Here, you know what? Let's go to Twitter. Here they are. There's the swim team in action.
They rushed down the stairs.
Wait, if we could pop into Twitter.
Oh yeah, I want to see the Twitter. Let's pop in. It's funny because I'm looking at it right now.
Zach, we're getting it.
No,
yeah, they're getting it up.
But the swim team, I mean, honestly, I know the basketball team is amazing. Basketball team, I think you're going to win. I'm so excited for these kids. But that swim team makes me smile every time.
So they go to all the games and they try to distract. They go to all the games and they try to distract the free throw shooters.
It worked.
It would be distracting if you're trying to shoot free throws and you have all these guys in Speedos screaming at you. Sometimes they hoist them in the air and pretend like they're swimming.
Do they really?
Yeah.
I just love that they rushed down the stairs. Did you see the guy trying to stop them? No,
I know. I know. So funny. So, yeah. And now, so that was exciting. They won last night. Then they
Did your son make any of the shots on camera?
No. And I had people texting me. So many people thought they saw my brother in the audience. So I guess my brother is a doppelganger because he wasn't there. Liz, I see it from Ash Finn. Ash Finn says, it might be Red Shirt Thursday, but we all know tomorrow is Red Thursday. So is Louisville playing today?
They must be. Ash, I appreciate what you're doing, but you know, I'm not a Louisville. I mean, don't get me wrong, but Louisville and
we love Laura. We love Laura. She's from Louisville.
She's from Louisville too. But so they have an arch rivalry, and you know what? Just for that, I'm going to wear my royal blue tomorrow because I'm leaving and I'm going to Lexington tomorrow.
It's got to be today. He sent this 19 hours ago. I bet they play today.
No, I think Louisville is playing today, but I don't think they're playing Lexington. Do you know what I mean? Yeah. I bet Louisville plays today.
Okay. And when does Kentucky play?
I have no idea. I mean, don't take this the wrong way. I'm rooting for Miami unless they play Kentucky. But I mean, the Miami Cinderella story is amazing. So Ash, I'm wearing red for Miami, and I need it to be said. It's Red Shirt Thursday, and I'm wearing it for Miami of Ohio.
Everyone laughed at me with my $10 bet. Making my $10 bet for them to win the tournament pays $10,000. One $10 bet pays $10,000. And today I was getting texts from people. They're in on the bet.
So let me ask you this, and I don't think you're going to be able to answer it, but maybe somebody can, because we look at this all the time. Go to the platform if you don't mind. So, and I'm still going to stay on Miami of Ohio, but what are the probabilities? So we talk about probabilities all the time. What are the probabilities that Miami of Ohio is going to win the tournament? There's got to be a statistic out there.
Well, yeah, that's why I got the $10,000 to $10, but I'm sure they change. Like if
I'm sure it's less now, right? So if you look at this,
I'll go into DraftKings now. Sometimes you can sell. Like let's say I paid $10 for that bet, I could sell it for. Let's see if it changed at all. I doubt it changed much.
Well, I'm just trying to associate this with options. What you basically did is you went out there, and I'm going to use Disney because we both love Disney. You went out there and you bought a $10 call in Disney, assuming that Disney is going to like quadruple. That's basically what you do.
You're right. Yeah, exactly. So here, let me go. I'm going to go what Liz is talking about here.
You're going to go so far out of the money. Like just go like because it's a probability, go far out in time or far out in the money. I don't care if you go to May and just find a call for $10.
Yeah. And there are people who do this, people who think, oh, there's going to be something big. And honestly, if like Disney's not a high flyer or a big mover, but if I wanted to make some kind of long shot bet, maybe I'd go to oil, which who knows? You never know. Those options are expensive though, but for this,
because oil is more of a favorite. I know that. Like I'm just trying to put it into terms because oil could move. Where Disney, you're not going that far. It's $10. If it gets to 170, you make a couple $100. Yeah, that's basically what you're doing with Miami of Ohio, and we get to do it every day.
It's a long shot. And that's how much of a long shot it is. Right now, wager $10, pays $10,000. And it's a long shot. It's
still the same. It's still the same.
I don't have a chance. Sometimes you'll have a chance to cash out. Like when I had the Bears to get to the Super Bowl, it gave me options to cash out, but never great. Never great.
Okay.
Right now,
so
I don't.
Wait. So this is the same thing as if you buy this $10 call in Disney and you have 57 days for it to come to fruition and Disney pops $10 to 110. You can get out of this for maybe, I don't know, $30.
It wouldn't double, but it would get maybe 12. Maybe if you buy for 10, maybe 12.
Correct. Like that's exactly what's happening when you have those, to put it into the options terms of what's happening with Jenny's long shot bet.
It's interesting because we have a friend who spends his life doing these long shot bets, hoping to just hit once. It's kind of like playing the lotto, right? And I was working on my taxes yesterday and I was talking to his wife and she said, why don't you just go to like H&R Block or TurboTax or whatever? And I said, I've got a lot going on here, And I said, don't you always have a lot going on too with everything your husband's doing? And she said, he loses every year. He loses every year because all he does is bet these long shots.
Yeah. Hey, I buy lottery tickets too. I'm in a lottery subscription. Just a little FYI. One of these days, when I hit the $500 million, you're going to see Jenny Andrews by herself. No, actually, I retract that. Because if I do hit $500 million, I will take care of you for life.
You're going to have a lot of people knocking on your door. So it's okay. I'll be happy for you. We'll throw a party. You can take me out to lunch.
But I do. I buy lottery tickets. I love lottery. My grandma bought me a subscription years ago and I kept it going. And, just on the hope that one day I open my email and it says, congratulations.
How much is it to buy the lottery subscription?
It's the same price as the lottery. So I think my grandma bought it for me. She gave me 1 week. This was years and years and years ago. She gave it to all the grandkids. She spent $52 because it's 52 weeks. And every grandkid had 1 week, like every week you're in. And it's the same numbers. So they would this is probably before, this is how old I am, before, emails and things like that. So they would send a letter and a check if you won. And I would get a $2 check, a $3 check, lots of checks like that all the time.
That's so funny.
Yeah.
That's funny.
Yeah.
Cute that you still have it going in honor of your grandma.
No, it's gone up a lot since then because I have to pay, I'm in it once a week. So, and it's $2 once a week. So, whatever, a lot is not the end of the world. $104.
$104.
Yeah.
Okay, look at Spoos, only down 24. Yesterday, rough close, ugly market. It was funny because I called Tom. I had a question for Tom, so I called Tom Sosnoff, and I don't know what time it was, 1:30, something like that. And I said, I think it was around 80. And I said, I think they're going to bounce. I think we're going to be down 60 at the end of the day. And he's like, no, this market looks ugly. It's going to get worse. And so then at 3:05, I texted him. I was like, you were right. Again. You were right again.
I mean, yesterday was a pretty crazy day.
It was. I didn't think we'd be down 105 at the end of the day. I really didn't.
I didn't either. I didn't either. But you know what? That's where we were. It was kind of crazy. I mean, we have bounced definitely off the lows for today, right? Yeah. So let's pop. Do you want to pop in and take a look at some of our positions? Oh, I did take off that SPX Iron Condor. I'd like to put a new one on.
Oh, okay. So we had a durational. I'm gonna pop out the side and look.
We made. I think I put an order. We maybe closed it for $80, $75, something to that effect. But we were just putting one in here in our account, and I didn't want it to cross streams, so I closed it.
Sure. Okay, so
you have the working order instead of filled. I'm sorry. Sorry to be a backseat driver.
No, that's great. Again, I'm running on. You know how you were running on no sleep the other day? That's how I feel today.
Oh, yeah.
Okay, so we sold on 313 in SPX Iron Condor for 380. Today, Liz closed it for 310. Took a quick $70 out of it, only because we needed a clean slate because we were doing something in SPX for a YouTube video. And if you want our YouTube videos, go to the Tasty Live YouTube channel, and you can find lots of Tasty Live YouTube videos, shorts, longs, clips, whatever.
Shorts, I don't think they're called longs, but I love it. Longs.
Whatever. The world is your oyster on Tasty Live YouTube.
I think we should coin that. The longs. You can watch those longs. Okay, so just because new slate, I don't care what the other strikes were.
We're not even gonna look. We're not even gonna look back. Okay. We're gonna go to we're gonna go to the May monthly, the regular at end of day expiration. We're gonna put on an Iron Condor, and let's look at the differences, okay? Because sometimes the risk isn't that much different between a $10 wide and a $15 wide or $20 wide. It's kind of interesting to see. So all I did was go to the expected move.
Yes, you're getting $1.50 on a $10 wide, which is great.
And I'm curious, like if I go the 20 delta, what is so $1.50 there? If I go the 20 delta, you're getting 30 or 40. Yeah, it's not much different, and you're going 30 or 40 points further.
Yeah, I don't mind that. I mean, you got to keep in mind it's a big product.
And at the top expected move is around the 20 delta.
Yeah.
Oh, not even. You got to go in. But let's just stick to the expected move here, because I'd rather give myself room to the upside, because this market could rubber band back. You never know.
Mm-hmm. It really could.
You never know. So 70-60 to me doesn't sound like that crazy to get to, versus 6,100 does seem far. I know it's like 500 down or 400 up, but I'd be more worried about that call side than the put side.
I know it's easy to do when you don't have the put side in. Is it that same concept in the call side where it didn't really matter? You moved it pretty far and it was all still the same price. Is it that same concept in the put side too? Let's delete the call. Let's just delete the calls for 1 second. We're going to stay. Okay. I'm going to stay on this. We'll go 6,100, 6090. I do like that. Okay. Jenny, do you want to put them in separately? Let's just put them in separately. Put the call side in.
Sometimes you get a better feel putting them in together.
I know.
But I was just going to ask you, like, what would you ever think of?
That's $20 wide, not 15.
I know we don't have 15.
Yeah.
So I was going to ask you, what would you think of $20 wide put side and $10 wide call side?
I think it's dealer choice. I'm a fan. I want to collect a lot more.
So this is 20, and I lied. I said we don't have 15. We could, because here's a 60-75. So here's a 15. $15.
Oh yeah, that 75 did sneak in there. Perfect. So perfect. Let's put that in.
$15 wide puts on the puts.
Yeah, because we weren't getting much for the puts. We were getting most of it.
$1.50. Yeah, most of it was coming from the call.
Yeah, that's what I found odd. Most of it was coming from the call spread.
So here's $15 wide put spread. And this 10, you wanted me to take off the call spread to see exactly what we were getting from that. So from that $15 wide put spread, we're getting 210.
210. Okay, so that makes sense. We were getting 150. Now you're getting about 80 cents more by giving an extra $5, and we shifted it down $5. So I'm okay with
We
that.
shifted it down. I don't even mind shifting it up and trying to get closer to 3. I like.
I don't mind the closer to 3, but the problem is then you got to be $20 wide.
Well, you might be able to find a 15 here. Here's the 25, 25.10. Wait, 25.10.
Yeah, that's what we were getting for the other one.
Yeah, right. When you get down here, it's like you've got to give yourself room.
Give yourself as much room as you can. There you go. It's the same. It's the same price. Okay, so we're gonna stay there, $60.90, and then let's go up to the top.
It was the same price.
It was the same price.
Then you go to the top. Keep moving, scrolling, and you even get some $5 wides.
Okay, so yeah, you've got a $5 wide on the top, but I don't necessarily know that we need that.
Well, I'm gonna just compare. $5 wide.
Oh, that's not bad.
What did it give us? $1?
Yeah.
Yeah, $1 or $1 or no, then that's $15 wide.
Oh.
$1 or we get another $1. You get $2 on the $10 wide here.
Sure. Do $10, $15. Love it. $4 and it's almost a chicken on the upside. Ship this.
Yeah.
Press that button, Jenny Andrews.
$4.25. So it's a wide win range.
Yes, it is.
Okay. That's working. And if that doesn't fill, movement's not going to fill it unless we get a real spike in ball. So I'm gonna.
I mean, you could take it down. I'm
gonna take it down, but I'm actually gonna take it down to 4.15.
Yeah, I was gonna say even 4.10. I'm fine. There you go. Ooh, and pricing proof.
Yeah, it's not exactly what we had on before because we have a $10 wide call spread, $20 wide put spread. But I'd like to have a decent, a decent collection on these.
Yeah, no, I like it. I like it a lot. What's it from?
I feel like when you say that, I picture Jim Carrey saying it.
Yeah, I think so, but I don't know what it's from. I need Mikey. Mikey, I need you.
I put in a GTC for 50% for that. We
Dumb and Dumber. Thank you. Thank you, Beth.
I do
That's
have
for the win. I love it.
Close. Accenture, we sold the put for Accenture earnings, and Accenture's up almost 6%.
Oh, let's get the heck out of that thing.
Yeah, we took 50% on that put overnight, and that was an April put. So we got 50% in April.
It was due to earnings. If you would have put that, just because you got.
Oh, yeah. The markets are wide in Accenture. I'm gonna go 75 cents.
I would just like to close this. I don't care what price you close it for, just so it comes off our box.
Filled.
Thank you.
Filled. Okay, so we're out of Accenture. I thought we had something else. One other thing.
Netflix. Is it Netflix?
Netflix is just a call spread. This was a viewer trade idea because we never would have said, let's sell a $5 white call spread.
And never in a million years. But you know what? We appreciate the viewers, and we don't really know anything. Nobody knows anything, right? So we might as well just look at the probabilities and put this in. So
yeah, I would say that came from either a viewer or TP, and I'm pretty sure it's a viewer.
Or TP.
We're gonna buy that back. Just a Netflix $5 right call spread. I think that was all I had to close. We're still working the SPX.
We're not filled.
Oh, no. We are filled. Yeah. And then what else was not Lumen? Was it Lumen that had earnings?
Lunar. LUNR.
Okay.
LUNR.
What did they do? Oh, down a little bit. And remember, there wasn't anything in those options.
No, we had very, very little. But there are some earnings today. I did not vet the list. We were very busy doing our morning stuff, so I didn't get a chance to vet the earnings for the live show. Do you want to take a
we've got, let me go to them. Here we have Jack. And I do want to let people know, if you go to Jack's site, he sends out a little public service announcement. There's an imposter. There's a Jack Tucker imposter out there.
There is a Jack Tucker imposter, and I know that, but read this, Jenny. Wednesday recap, 2 tranches.
0DT SPX collected 21,524 after fees. I said GTCs, and they hit at 11:31 and 12:46. So out before the Fed announcement for a small profit of 9,000 or 45%. You know what? So 45%, it's very interesting because my 50% GTCs did not hit on mine, and I sold my put spreads at around the expected move, but I saw them around 40%. When we were on the train coming home, and that would be, 12 something, I saw it was very close to the 50%, very close, but never quite hit the 50%, but very close.
So you know what? That's pretty interesting. And I'm glad Jack Tucker, because he'll tell us when it's been a bad day. And yesterday was a crazy day in the markets, and he got out for 45%.
Honestly, it makes sense to just close it before the Fed announcement. It makes sense. Why leave this on? Why not take your 45% before the Fed announcement? And normally I would have, but we were on the train talking, hanging out with our conductor, doing other stuff. And I thought, I'll just close this when I get home. Because I don't know what we were doing on the train yesterday.
We had a lot of stuff to do yesterday.
Yeah. So I didn't. But if I would have thought in my head, Fed announcement is coming at 1, I would have closed it for 40% instead of trying to hold out for the last, extra 10%.
Squeeze it for the last 5%. But take a look at this. What I love about Jack Tucker is for a small profit of $9,708.
So, but that's great, Jack. Great. Because I took a full loss on mine. I had them in NDX and SPX, and I took full loss on both. That's why when I was on the phone with Tom, I'm like, I got these 0 days. I don't know what to do. I think the market's going to bounce back. He's like, this market's ugly. I'm like, I'm just going to close my computer and let it roll, let it ride.
Yeah.
And they were all full loss.
Yes, they were all full loss.
Yeah.
I think he puts them in a little later than us, though. That's the one thing I was going to say about him. I didn't see the entrance point, but I know you put yours in. I think, he was at 8:58. So he was right around 9 o'clock. That's exactly when I put mine in, too.
So, and you could see his strikes. It's funny. So 66.25. We closed at 66.24. That was the close.
We did. And do you remember what I said? I did mine at exactly 9 o'clock, but I followed Jacob's study yesterday only because we were doing that study, and I got out for 25%.
For that one, yeah.
Yes.
25%.
So 25%, correct. So I actually set my bar a lot lower yesterday. I usually try for 50.
Now, he got in at 8:48 with 66.25. When I put mine on, it was 8:30 right after the open, and my short strike was 66.40.
Mm-hmm.
So my short strike, and the end of the day close was like 66.24.86 or something like that.
66.24.70. I know. That one stung just a little bit, so I remember it.
Yeah. Yeah, because it was like right outside the long.
Yes. That's so funny.
Well, Jack, we're happy for you.
It's so funny. Frank the Great, thank you very much for coming in. I love when he gives us his information. So today's option volume, Wednesday's option volume, 58.3 million contracts was 13% below recent average levels, with calls leading puts 11 to 10. It's crazy.
Yeah, but I think people kind of sit on the sideline and wait for those FOMC, the FOMC meeting.
Yeah.
All right. And today, what did we have? Nothing too exciting going on, except the natty gas inventory report.
I listen to Vanetta way too much because can't you hear Vanetta be like, yay? She does it.
All right, here's another look at the.
If anybody has a line on can you call Logan and see if the swim team would like to come on our show?
Oh my gosh, should I try to get him on? I probably could.
Beth, while I've got you, can we invite the entire swim team on the show, and how would we do it?
Absolutely. More than welcome.
Yeah, I'm sure they could come on via Zoom.
Yes, I think they would. I would love it. That swim team is the best. I mean, I love the basketball players. I'm not saying I would like the basketball players too, but they're a little busy now. They're a little bit busy right now.
They're already there. I saw I don't know, or 3 in the morning, 4 in the morning, 5. It seemed like when I woke up and looked, because I'm on all these these Facebook pages of the parents at Miami. And when I woke up, it said 5 hours ago, wheels up, and there were pictures of them on the airplane on the way to Philly. I think that's where they're going, Philly, because their game's tomorrow.
Yeah, it's Friday, right?
Yeah. Okay. Today's potential earnings: PL, FedEx, and Fly. Now, I don't know if we have Fly in this account. Let me check.
You gave my son Fly.
We do. So Fly has earnings, and I don't know what PL is.
I don't either. But that's okay. Let's take a look at Fly.
we have a short put in the April 29 day. It's basically right where we sold it. We sold for $1.50 at mid-market's $1.60. So I don't know if we just want to leave that through earnings or change it.
That's what we had in DocuSign. We had an April put. Let's open it up. I think it's okay if we leave it because we're not really out too much.
So I'll go the 1 day expected move is to 20, and that's where our short put is, the 20.
Yeah, I'm okay with it.
Mm-hmm. So we got the risk going through earnings. Firefly hasn't been around that long. It IPO'd here, I think. Yeah, it IPO'd back in 2025, August of 2025. So I'm fine leaving the 20 put.
Yeah, I'm okay with it.
Think of all those people that bought it. The highest day it ever traded was its first.
Was its IPO. That's usually typically you do see that. We've had the reverse the last couple of years, but in my mind, in the last 20 years, when Meta, which is Facebook, plummeted for about a month.
After,
right. And now look at it. It's split and doubled and split and doubled and split and doubled. So, that makes me want to buy Fly right now. So double up on those ones.
And again, this is I mix them up. I mix this up with Arrow. One of these makes like drones for the military. I don't know. I don't know what they're doing.
I don't know, but we've got that.
But you would think like with what's going on in defense and all these defense stocks up, it would be, but it's not.
So yeah, no.
I mean, maybe. I guess.
Wait, do we? I'm sorry. I'm sure. I've asked this before, but did we put this on our defense watch list?
Yes, I'm sure you did.
Yeah, it's right there.
Yeah,
okay,
it's right here. Okay. So let's just leave that, and then the other one was FedEx.
I mean, we could take a look at FedEx. I'm really not dying to get into anything. PL is Platinum Futures.
No, that's
it's Futures.
Planet Labs.
I was like, Platinum Futures. Did you see all the metals today? Speaking of Platinum Futures, copper is negative on the year right now.
What?
Yeah, copper's negative on the year. Silver is massive moves down in silver and gold. And yeah, so all the metals. Aluminum. How do you say aluminum?
Aluminum.
Isn't the Brits that say aluminium?
60. It's down to 69.90.
Yeah.
72. 72 was where I got in and was like, this is where I'm shorting silver.
So it was down lower than this. If you can you click on that bar and show me where the low is?
65.
You're not on the bar. Okay, there we go. Yeah.
Yeah, 65.
65. Yeah, so it was lower. Like I said, it's testing that 70 level again.
And like someday oil's going to look like this, right? Silver and gold, they were all on their rally. And now they're all coming back down. One day this will happen to oil. And it's a matter of timing. And can you hold on long enough? Because at 73, when I was like this, I'm staying short silver, I couldn't stay short silver. I was like crying uncle up here.
Yeah.
Yeah.
Look at that one day. That was when we were in Mexico.
I know. Oh my God.
You and I were celebrating our 50th with a pina colada in hand. Jenny looks at me and she goes, "Have you seen silver?" None of our friends dropped.
Nobody else cared. Nobody else cared. I mean, I couldn't believe that move. But that was a crazy move. What happened? And what happened at that move? Do you remember?
I don't remember.
Liz was 4 Prosecco's deep. We didn't care about. We weren't reading the news.
I dropped my Prosecco. What is silver doing? So funny.
All right. So I'm gonna just take a look at FedEx. 346. That's what makes FedEx tough. $346. When these are so expensive, sometimes this is 62 rank. This is when I like to go far and see just for the heck of it. Like if I went to December, what could I get for like the 200?
Oof.
$300 for $2,000. Hey, you know what?
I don't mind it, but the problem is it holds up. We'll look at these sometimes and they're just like chef's kiss, low buying power. The 200 level, I mean, you're still $145 away.
Yeah, but if you think about it, it's December, the end of this year, and it's a 15% return on capital. You use $2,000. If you keep $300, and using $2,000, that's a 15% return on capital.
It is. It is. True story.
So, if you're looking at it that way.
Those are facts. Those are facts, Jenny.
If you're looking at it that way, it's not crazy, but then you're committing to getting long FedEx at 200.
I mean, I would commit to getting long FedEx at 200.
And if it's Jenny Andrews, I'll take some FedEx at 200, please.
The only issue is that if it does go to, I'm just going to make this up, but say it goes to, I don't know, 260.
Yeah, you're stuck in this.
Yeah.
You're stuck in this.
Yeah.
Right. And I can't decide. Like, I fluctuate on how I want to trade. And I just have a mix of things. Like, I have a mix of long term. I have a mix of 0 day. I have a mix of monthlies. I have a mix of everything. But
well, I do think that's the best way to do, because you can diversify by strategy and dates and things like that, instead of, a lot of people say diversify, and they're saying, because they don't know how to use options, they're saying, I'm going to be, long bonds, short silver, long gold. Like, they're using it just as a long or short by product, where I like to diversify by strategy, by option trading strategy, by cycle, by things like that. Because on days like this, if you do get a small bounce, you're not going to get hurt nearly as much as you would if you had the nearer term, but you're not going to make as much if you get the bounce.
So the last time I was around 200 was 2023.
Yeah.
I've become now FedEx, and again, I don't know who delivers what, right? Because I see the Amazon truck constantly, the UPS truck constantly, the FedEx truck constantly.
We don't have, FedEx doesn't come to our house that often. FedEx is like Temu. If you order from like China, or FedEx is like your Temu, your PDD. That's when FedEx comes into my neighborhood. Other than that, it's UPS and Amazon.
Or if I have to be there, and sign for it, that's FedEx. I feel when for my birthday, I was getting weird deliveries that I had to be home for. Not just flowers, but like
alcohol.
No. I got a lovely bracelet, and they wouldn't leave it at my house. I had to be home to sign for it. Which I felt was weird. It was sent to me by some family, and they kept saying, like, are you going to be home? Are you going to be home? Because FedEx kept missing me because I'm not home that often.
No, I'm not home that often. And they can't leave it at the door. That is pretty crazy. I don't know that I've ever been gifted anything that they couldn't leave at the door, even the amount of alcohol that I order.
Really?
Yeah. I've never had to sign for anything.
I don't know. The FedEx guy doesn't like to leave it. You got to sign for it, or it'll be there to accept it.
Yeah, they'll leave it for us. I don't know why.
So, what do you think? 200 puts in FedEx for $3.
Sure. Because guess what? If we don't like it and it goes down and we take a little bit of pain, you're not going to take that much pain. If we need the buying power back, we'll close it.
Yeah, I'm going to put in the $3 offer. So here it's $230 at $360. I'm just going to see what happens if I put this
build. Perfect.
Did I get price improved?
No, you got $3. I think, if my eyes don't deceive me.
Yeah, $3.
Yeah.
You know what? Fine. Well, I don't mind having some of these long-term trades in there just to watch.
Well, and if it goes up tomorrow and we can take $100 out of it, I'm sure we will.
And it's interesting. So it's exactly 10%. If you have to have by, FedEx at $200, it was using $2,000. You've got your 10% of the notional value.
Yeah.
Notional value would be $20,000. So you're using 10% of the notional value.
Not bad. Not bad at all. I don't mind those. But I know I don't mind putting that trade in at all, but I love when you open them up and you're so far out and it's like a really good buying power. You know what I mean? What was it? Was it Tesla where you were putting up, it was such a good buying power?
Oh, we sell like the 100 or the 50. Well, we used to sell puts that were $50, $100 in Tesla when Tesla.
Yeah.
That's what vol can do for you.
That is what vol can do for you.
Ironically, I've got the cup that we were drinking out of when silver fell in Mexico.
Weird. Maybe you shouldn't be using that cup. Well, if you want it to go down, keep that cup. So wait, was it APP? Can you take a look at the APP? I think that was the one that had.
We got out of it though.
App love it. No, I think it had really good buying power pretty far down, but I don't think it's going to have that volatility anymore.
So it did. We got out of ours. My mouse has a mind of its own. Okay. I think we got out of our puts up here. Maybe we can get back in. Let's take a look. I'm going to see what they were. App Lovin'. We sold the December
125.
What do we have 2 in?
You know what? We did it twice. You got to go back more than 30 days.
Yeah.
There you go.
So
did
we
it
sold the
twice.
125 puts for 450, bought them back for 375. Sold them again for 450, bought them back for 375.
Look at that. Let's sell them
Number
again for
125
450.
puts. Let's go look. This is just free money. I'm kidding. That's not a thing.
Don't ever say that out loud.
I'm kidding. I'm kidding. That's not a thing.
It's not 450.
425. They're 425. It's $1,200 in buying power.
Yeah.
Back in. How many times can we keep selling these and buying them back?
Well, I kind of want to get 450 and buy it back for 375. Go to the 135s.
Oh, I see.
Price point. That was our price point. I want to see.
No, we were the 125s.
No, I know, but go to the 135s for 450. Time has elapsed.
Hey, 135s, we can get five something.
Whew.
525.
Yeah.
F11. Here. What? I thought I put 525.
You did.
Does it trade in dimes? Is it quoted in dimes?
It's quoted in dimes. You can see zeros all the way down. It's
I've
quoted
never
in
heard of such a thing. Quoted in dimes.
I love when the old line is it's quoted in nickels, traded in pennies, which was true.
Yeah, but this is quoted in dimes.
Quoted in dimes, and I bet you're going to get filled in nickels.
I guess we need those data centers. We need more bandwidth.
Do you remember when that was the thing? They're like, you can't have the strikes. There's not a lot of bandwidth.
I
And
know.
Traders had no idea how to respond to that because I don't know what bandwidth is.
I mean, we need more strikes, or we need more. You can't quote something in dimes in 2026.
No, come on.
I guess I have to change my offer. I'm not going to have a 525 offer in if it won't show up there. 520.
There you go.
Build. Nice. All right. So I'm going to put, what do we want to take out of that?
$50.
Yeah. Close this.
Just say 10%.
470.
Sure.
This market's so wide, we might get filled today.
I know.
Just call me Alex.
Might be filled today.
All right. That's in. And it's kind of nuts because we'll put on these December trades, which seems like against tasty mechanics or seems so far. And these the whole thought process of this is not to be in this for 274 days. You see, we get out of them, but these markets are wide. And
yeah, but Jenny, you know what we did? You know what we're doing with this? We've got a lot of things that we prefer to go, oh, you know what? We're going to break the rules and we're going to go real near term. There's some we go far term. There's some we go near, mid. We do diversify by those, right? By near, mid, far.
You know what's so funny is we live our life breaking rules, and our kids, like my kids, are the biggest rule followers I've ever seen.
They have consequences. We didn't have cameras. There is no evidence of what I did in college and high school.
I guess, but I don't know. Are they going to always be super rule followers?
Yes. I was laughing because I was actually watching, our friend who we grew up with him. He's a stand-up comedian, Pat McGann.
Yeah.
And he was like one of the blurbs just popped up, one of his shorts, not his longs, but one of his shorts popped up. And it was him talking about how he's like, I went to a Catholic school in the southwest suburbs. He's like, in science, I don't know anything about science. He's like, I don't think we should be in here. We were all drinking in the woods last weekend. Do you really think we should be using this gas line? I was like, that's so true. Like, our kids have our parents have no idea where we were.
No. And
they thought I was at Kathleen's. Do you know what I mean?
They never knew where we were.
No.
They never knew where we were.
No.
Yeah. So since we've been breaking the rules since we were like 16, you think that just carries on into life? And since our kids have been following the rules
I don't think I was ever told, don't go drink in the woods. So I didn't break the rules. I think it was implied, but it wasn't a rule in our house. It wasn't like, hey, on the rules, it's like, be good, mind your manners, don't go drink in the woods. It wasn't on the rule book.
I was not part of the. For those of you who don't know much about South Side Chicago, there are lots of Catholic schools, and there's nowhere for those kids to hang out, and there are a lot of woods. So for some reason, they turned the woods into literally like bars where they would bring tables, chairs, fire pits, games, whatever. Like you would walk through the woods, and then you'd come in the middle of the woods, and it was like a made up bar by the high school kids.
And the best part is, we didn't have phones. We're like, I'm just going to wander around the woods and see if I can find a party. How did this happen?
I have no idea. No idea.
Yeah.
But, I don't know. But I'm going to go to Twitter and see what's going on Twitter. So we've got, I'm going to just go top down. Don Duke, good to see you.
Don.
Hello, Don. Thank you. LD and J. Oh, that's Liz Deerking and Jenny. Thank you for the option idea on Netflix. Is it closing time or hammer time? Can't touch this.
So it's funny because you know how you do the TP and J show when he comes on?
Yes.
We do TP and the LD.
Oh.
We pretend like we're old school cops.
Well, you're going to have him on Tuesday.
I know. I can't wait. We needed like a grainier footage, and we have TP and the LD. He's like, can't you just get us out of a Camaro where like we just did a chase? I was like, 100%. So that's our characters. We're TP and the LD.
So Don Duke is the one who gave us the Netflix idea, and we sold that call spread on Netflix. So we just closed it for a win, Don. Thank you very much.
Yeah, we did. Yeah.
I like it. So is it closing time or hammer time? We closed it.
Closing time.
But can you sing it again? Because I did like the flashback.
The hammer time?
Punish Pixels. Happy Retro Thursday. How about we start our crab trade? Yes, Punish Pixels. Great idea. For next week.
All right. I do want to do the crab trade, but my favorite, I'm not saying favorite. I don't have favorites because I don't know who this is. So the chat just said the only rule he had, his dad told him not to break two laws at the same time. I was like, that's awesome.
I will say I was not a big fan of the woods because I don't like to be cold, nor do I like to be bundled up. So I was not a big fan of the woods, nor did I like the bugs, the ticks, you didn't find me often in the woods.
Oh, you find me there all the time. And it was fun.
I'm not an outdoorsy type of person.
Okay, Punish Pixels. Let's jump in for the crab. I'm in.
I'm in for the crab. Liz, I'm going to go to the platform. Do you have Twitter up so you can read me these?
I can do it right now. Hold on. Let me get back to it. Go right ahead.
Otherwise, just remember this or write it down.
No, I got it. Go ahead.
And it's next week.
So,
okay.
Yes.
So, and I was, and then also looking at the calendar, we'll talk about that next. Scott, we're going to talk about this AM PM calendar. So hang on.
Yeah.
Because our biggest losing calendar ever was an AM PM SPX calendar.
I've actually lost more on a calendar, but it was right up there.
No, you didn't. I think you lost $1,200.
No, Chipotle Mexican Grill, I lost like
$1,200.
No, like $7,000. I lost a lot of money on a Chipotle calendar.
It seemed like a lot back then because we were a lot younger. I think you lost $1,200 in Chipotle Mexican Grill, and we lost over $3,000 on the AM PM calendar.
Yeah, we have, because that can move. But I remember paying a lot for a calendar and going straight to zero. Okay,
but back then, $1,200 was a lot.
I don't know. That. Okay, let's Punish Pixels. Crab trade for next week. Sell 2 to 1. Okay.
What day? What day? Where am I?
It just says next week.
So I'm going to go to end of week.
So 23, March 23. Go to March 23.
Oh, this is short term. 4 days. Okay. That's just Monday.
So sell 2 to 1. So you're going to sell the 67.25.
Okay.
7.25. And buy 2 67.75.
No.
6775.
It's usually sell 2 of these, buy 1 of these.
Yeah, sell 2 25s, buy 1, 2 to 1. 2 to 1.
Yeah.
Sell 2.
Got it.
Sell 2.
So
buy
this
1.
is the ratio spread part of the crab. 67.25, 67.75, $50 wide. And then I'm gonna guess we're going to how far out is he going?
So then you're gonna go to the March 25th. He's 2 days later.
2 extra days.
Short term. And then he's buying the 66.75.
Got it. So he's only paying $1,200, which I like this a lot more than the call. I bought an ES call for $1,500 yesterday at the end of the day, thinking we were going to rally today. That didn't work out.
Okay, so hold on. I'm just going to read.
This is a much better way to spend my money.
So I'm going to read this again. I want to make sure we've got it in right? It looks like it is, but ES, sell 2 to 1, the 67.25, 67.75 calls. So that's correct, right?
Yes.
Okay. And then buy the March 23, which we've got in there, 6675 call for the 25th.
I like this. I think this is, if you're bullish, if you want to play the next few days, next week, bullish, this is, he hasn't been wrong yet.
Hey, listen, Punish Pixels is a sage. I'm using this loosely. I'm 3 for 3 with Punish Pixels.
I think he's 4 for. I think you're 4 for 4. I think he's gotten more than just a few. I think he's got 4 of these under his belt.
I did not mean to insult you, Punish Pixels. If you've done 4, then I'm 4 for 4 with you. If it's 3 for 3, I'm 3 for 3. If it's 4 for 4, I'm 4 for 4. If you've done 5, I've done 5 because I've jumped in every time.
I'm going to change. I put on a new trade this morning in ES, and I'm going to change it to this.
I like it. But let's jump in with Punish Pixels. And then
now, $1,292 is expensive for this account. So
we just used $2,000 and $1,500 respectively with much less profit potential.
We used $2,000 on a 95% probability trade. This is, you need the market to go up.
No, I understand.
This is like a 50-50 trade because if the market doesn't go up, this isn't going to win.
If the market goes down, it won't win. If it stays here,
market goes down, we're out $1,200.
If it goes down, if it stays right here, I still think these crab trades don't lose.
No, but there's a big difference between spending $1,300 on a 50-50 bet in 6 days versus $2,000 on a 95 probability trade that's got 6 months.
No, all I said was we spent more money for less profit potential. That was my point. For much less profit potential. This has a decent profit potential, but something has to happen.
But this is a bet on the market going up. I just
even slightly.
I just want to look at something because I just think this is kind of expensive for us. So this is 40 delta in the 6 day. We're at 40 delta in the 6 day and like 25.13. I just want to look to scale this down. So we go to the 6 day and buy the 40 delta call. And then we go to the 3 day, or what is it, 4 day? 4 day. And sell the like 225 deltas and buy 1/3. I just did delta to delta. So this is like a scaled down version.
Sure.
Where it's $200 instead of $1,200.
Well, you can lose. Your buying power effect is 3. I don't know why.
Because you've got this. Because this is wider.
Yeah, sure. If you want to do that, go for it. Delete that.
I don't want to lose. I don't want to lose $1,200 in this show account if the market continues to fall.
True. Chip it.
Just trying to be responsible to our because this account is little. This account is little like this. So in a $20,000-$30,000 account, I don't know that I'm slinging these $1,200 weekly trades.
Sure, ship it.
And you could even increase the size and do 2 of them for $600. You're still cutting your risk down.
Yeah, I like I said, he's using ES. He's been pretty good with it. But you should be going to bed right now, Punish Pixels. Nighty night.
No, he's on vacation.
Oh, then hopefully
I'm almost 100% sure Punish Pixels is on the beach. Punish Pixels, morning.
Oh.
He's on the beaches of Indonesia.
Yeah, but I'm sure it's still midnight. Go to bed.
Good night, Punish Pixels. Thanks for the ES trade. I will do it in my account. Liz will do it in her account. But in the show account, I just scaled it down.
Sure. Okay, let's go to, I know we're running out of time. I do want to talk about that calendar. Go top down. FedEx will leave a package without a signature. They leave everything at my house unless it's insured. So somebody insured it or the shipper requires the signature. Right, but you're in a higher traffic area. I'm tucked in the back of a neighborhood. No one thinks anything's going to get taken from my porch.
Oh, the porch pirates are all over our neighborhood.
Yeah. I'm pretty, nobody thinks anything needs to be insured. You can send me anything. I don't need a signature for it.
Okay, so Scott Somer, does the AM PM calendar in SPX work? Sell the 3:20 AM by the 3:20 PM. Here's what happens. If the settlement on the AM is so wonky, and it can be, because it's, they wait for every stock's opening price, and then that's the settlement price of the SPX. So if the AM settlement price is crazy, then you can get really screwed by the end of the day on your calendar.
And it's a technical term. We've been using it for years. But it is true, Scott Somers. She's spot on accurate with that. It's something that it's almost as if they're two different expirations. It's kind of like the VIX.
And then don't you remember, like it treated it as, it was weird because it was holding, and we had the calendar on where we had the long and we had a short, and it was holding up a ton of money, and it was acting like, once that settles, for some reason, it was still there. So like no matter what, I couldn't sell out my long if you didn't have an extra like $150,000 buying power laying around. You can't sell your long out because the opening short is settling and it's sitting there and it's not quite settled yet until noon. So if the market was like up like crazy on the open, you can't sell out that long end of the day unless you've got an extra $150,000 in cash, because it then keeps that short even though it's closed, because it doesn't settle until noon. So I was, I won't let you get out of it. You just have to sit on that long unless you've got an extra 150,000 cash laying around that could cover that short SPX, even though that's already over.
It was a pretty interesting lesson for us, but we lived and learned. Let's go to Chad, which is awesome. So I tried the put spread covered from yesterday's show, ES instead of SPX. At the money put spread, I did $20 wide, put it on 9 minutes after the open, and it cleared 30% GTC in 11 minutes. So a quick 150 on the day. So good job.
And we talked about that yesterday during the piece, that even on a down day, people can get out of these. There were plenty of people that got out of these yesterday, and yesterday was a really big down day.
Yes, a really big down day. Like I said, I yesterday, no, don't get me wrong, I put other trades in, so I'm not saying I walked out. I'm not going to be like, oh, I traded great in SPX yesterday. I traded myself into a pickle yesterday, but that trade worked, even on a big down day. I took 25% out of it, at the money.
Yeah. And okay, if possible, can we remember before I said I want to make $200 a day in SPX? Am I averaging $200 a day? No, because I'm up on SPX, but I'm not averaging $200 a day. And honestly, in those studies, they show average per day on the narrower trades, maybe 50 or something. I'm not averaging $200 a day because I've had at least 2 full losses. I've had two losses that have wiped out, and I'm not even doing that same trade I started doing at the year. Now I'm going further out. I'm going further out at the expected move or further.
But we are going to keep asking Jacob to keep tweaking, and we're going to come up with different ideas each week. But Jenny, we are out of time. I have to close the show because I got to jump on with Gus.
Oh yeah. All right. If you can't get enough of her, you can see her on with Gus on YouTube later.
I've never been on with Gus. I'm excited. All right, everybody out there, good luck. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with this Tasty Extra, looking back on what happened yesterday. Before we do, let's take a look at what's happening right this moment. Even the S&P's down 42, NASDAQ down 177, Russell, the leading the clubhouse, the downside, down a full 1%, 26, and the Dow down 291. I'll get into gold, silver, oil, and Bitcoin and the rest of the markets. Volatility 2570. On its highs, I actually think, and we were just talking about it on the break, that /VX or /VXM, the smaller product, which I prefer to trade, as you can ladder in a little bit, probably a better, easier sale. I don't know if it's going to make more money, but an easier sale than trying to pick the bottom on the E-mini S&Ps, NASDAQ, or any other equity index right here. I just sold some about 30 cents lower than this. There's no reason to sell it at this moment. Only
you want to wait for the open.
You want to wait for the opening. You want to wait for it to back off a little bit, and even the S&Ps, don't continue their downside. Yeah. I always am a little bit early. So, but I'm just telling everybody in true transparency, my own positions, what I do. Up to you. Go, son.
All right, let's do it.
Let's take a look.
Recap of yesterday. Bloodbath across the board. Would you call it a bloodbath? Did it feel like a bloodbath? Did it feel? Because I said to you, I was like, it felt very orderly. It was like not it was a rough day. It was 1.5% to the downside. We've reversed 1 week of price action.
Yes.
No big deal.
I know, but when you start looking at it that way, you get anesthetized. I don't know if that's the right word, to these down moves like this, because we've had just about a month of this, right?
Yeah.
So 100 points now. We have 100-point moves
every day.
I mean, look at what you have. So far, you have 70 handle moves.
Falls at 25.
Yeah. So, yes, exactly. Not sustainable, though. Like, that volatility of 25, it will cluster, and it has clustered up here, longer than I thought it was going to. Yeah. I think it was kind of a flush out. You probably got another, I don't want to put numbers on this, but you probably got another 30, 40, 50 handles to the downside. But if you think that, and you think you have 300 handles to the upside.
Why wouldn't you buy them now?
Yeah, exactly. So that's why I sold volatility early.
I said that exact same thing to Vecchio yesterday because we were talking about how the.
Oh my God, I hate how this.
No, stop it. Okay, other opinions are nice too.
Yeah,
you don't have to. You're not Nostradamus.
I know, but I'm gonna save the internal emails he sends. You got 2% move in the overnight action in
it's good. That's good. Things are happening. Things are happening.
Overseas markets, and now you have it to the opposite. It's just price, ladies and gentlemen. Things go too far to the upside because idiots chase it to the upside. Things go too far to the downside
100%.
because idiots chase it to the downside. You just got to trade price. That's why I love derivatives. You get an extra large move in one direction or the other. You can fade it a little bit. You can still be bullish and fade it. You can still be bearish and fade it.
So I got some people in the chats harping that we're
time
long
on your
for
side
the sake of being long. Listen, we have long delta. I have net long delta.
I have net long delta
short
too.
Volatility. I have positions that are short delta. I have stuff that should work in a contrarian way.
Yeah.
We don't. The
I don't
market,
discriminate.
Just because the market goes
just
down.
don't think you have a reason for it. Like, 3 weeks ago with oil at 60, and I know we didn't have a war going on there, but I got an email, well, the world runs on oil. Then you should have been long oil all year long. Don't try to be long oil at, I know it's in the 90s now, but let's just say in the 80s. You could try to scoopy it, but have your finger on the trigger for both sides.
And that's a great example because oil, I am quote unquote short oil, but I'm actually long delta right now, short out of the money volatility.
Yeah, because you're trying to play it in an intelligent way. You're trading it.
But what I was getting at was just because I'm leaning long and bullish here does not mean that it's the end of the world that we're down 1%. I'm not down 1%.
Sure.
There's things that go the other direction. But my point that I was getting at, I was having the conversation with Vecchio, and I was like, what is an interesting level to you? And he was saying 64, 6,500 on the E-minis. Mm-hmm. It's 100 points away.
Yeah.
If you're how do you wait?
Well, you don't want to see it if you're leaning a little bit bullish.
But if you're saying you're going to get, that's a good level. As a downside.
You got $50, $60 expected moves in the ES daily.
We're going to get that today.
That you could get. You certainly could.
But that was my point.
For the week, we got 130 handle move for the next 4 days, 5 days.
But how do you wait for that? I can't wait for that. I'd rather be.
Well, he was in his defense because I poo-pooed him.
He smashes it out of the park. He had gold to 5,500.
That's correct.
That's crazy person. He hit that out of the park.
That's correct. So sometimes you get it right.
Yeah, but I can't sit. I think the same thing. I think 6,500. Okay, that's great. If we get to 6,500, that's a good spot. I just can't wait for that. I have to start now, and if we get there, I'm going to be adding more. I'm not fully I'm not one.
But you could put on a derivative product where let's say that is your number, and you don't think we're going to get there today. I sold volatility. It's 30, 35 cents higher now. It's 10 cents higher in the time that we've talked. Where I sold it, losing trade. You could put on a derivatives strategy that if you think we're getting down to 6,500, doesn't lose money to 6,400. And still makes money if we go higher.
Yeah.
Or you could do some sort of, buffer trade where we don't lose money in the next 60 days on a 10% lower move, but you make 5% to the upside if we go higher. Be strategic and not just directional with the things that you do.
I'm seeing Rob and Maria in the chat today, and Rob would like to clarify that he doesn't do the first half unders. Do you want out?
What do you mean he doesn't do the first half unders?
He does the game unders. Game unders, not first half unders.
Well, where'd you come up with this this then?
I don't know. I thought we've been doing it for 2 years. It's worked. Actually, last year there were 67% they hit on, which is incredible.
This is why I don't pay you ahead of time, and I'll take a look at it after.
You're on the hook.
No, still in. Yeah, go ahead.
I mean, it's almost like a double down. Because if you're under on the first half, you're probably going to be under on the game.
Not being mechanical with your bets. Go ahead. Let's take a look at this Tasty Extra.
Yes. So
I love the give and take here. So you're asking me, now that we're having this kind of discussion and getting the emails like this, yeah, I didn't know if we were having the capitulation. Getting there, I think we have a little bit of it.
We're getting there.
We're getting there. Yeah, more than we had before.
Yeah. Mag 7 yesterday, some weakness in Amazon, Microsoft, Apple. I mean, across the board, NVIDIA was kind of the strongest of the group. I mentioned this as you had NVIDIA and Google, all of these kind of down a couple dollars. It didn't feel like it was that big of a fear-driven move. It felt like, with the big names across the board, it was just kind of like a orderly sell-off. I don't know. I didn't take too much out of it. Sector-wide, obviously, yesterday, market's down, everything kind of goes to one. You had even energy taking it on the chin a little bit. Semiconductors, the weakest of the group were the metal and mining stocks, metals and mining, and metals from gold, silver to, I haven't looked at copper. I'm sure that's down too. Copper's down 5%. A lot of weakness across the board. You had financials in there. I mean, everything was down. It was across the board.
Yeah, and it looks good just going through here. Just going to take a quick look of all the stocks you just had up there a moment ago, or most of them. They're all down this morning, too. So it looks like a continuation of all of this. Yeah.
When we look at the biggest movers to the upside, there were things, I should say, past tense. Were things that were up yesterday. A lot of them in that memory stock space. You had SanDisk up there, Ciena, which is getting added into the S&P 500, I believe. It'll be fully allocated by the end of this week. I think so. Don't quote me on that. I said it, so you could quote me, but don't hold me to it. Vistra in there. I mean, you got some tech names in there, but definitely, kind of a random list there. On the downside, some of the biggest movers that we saw to the downside here on the next slide. Carvana taking it on the chin a little bit, got below 300. A random list here. You had TTD, which has just gotten absolutely killed. I think it's down 95% from the highs. You got Domino's Pizza in there, Starbucks. It was a mixed bag here, but it was across the board weakness in the market, no doubt. And then to give you your heat map, it's the one that scares the children. It's the one that is, we're ready for markets in turmoil, I think, when you look at that one.
That's right. That heat map is quite hot. Scary. So yeah, it's across the board. There's really no place to hide. Even look at energy, kind of a mixed bag of tricks. But we'll take a look at what the market's doing right now. We'll take a quick 90-second break and come back. We got confirm and send. We're going to go over some of your viewer emails, and we'll take a little bit of a deeper dive in this overall market. We'll be back in 90 seconds. This is Tasty Live. We are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with trades from the research team. Who is our first researcher? My man Shark. What's up, brother?
Not much. How are you guys?
Good to see you.
Good to see you guys as well.
Awesome. Well, are you going to shed some? Are you going to be a ray of sunshine on today?
We need a ray of sunshine.
Of course.
We need a ray of sunshine. All right.
I want to ask him because he, younger guy. How do you feel about the market right now?
How do I feel about the market?
Yeah.
Okay.
Ooh.
Only
seems
okay.
like a guarded answer. Doesn't seem like a
kind of seems
we're trying to get
you know what?
sentiment.
You know what? in order to be that ray of sunshine, I feel absolutely great.
Oh, no.
It's going to hit 7,000 in the SPX is going to hit 7,000 in the next month or so. Okay, we'll all be good.
I told
perpetual bulls. Okay.
I told my sister the same thing, and my sister older than you.
Oh my God! You just got her into the market a couple of days ago. After
I told
we
her
sold off,
she
but
was
then we
afraid.
rallied.
She was like,
I knew this was happening.
War, the oil, all this stuff. I said, Gina, by the time you get this money out, you're going to see 15 different wars. Okay. There's going to be wars. There's going to be
15 different
technology changes.
Yes,
There's going to be
events,
so many things.
Yeah.
If you're afraid to put the money in an IRA account right now, you're
you should be
you're
in
thinking
bonds
too
or-
much. You're
yeah.
thinking too much.
Yep.
It's always going to go up and down. 1.5% down yesterday, 3% up today. Hopefully, right?
Yeah, well, who knows, right? Or this week or
Back
next
and
week.
forth, left and right.
Yeah.
But overall,
Traders market, we've been talking about being nimble. I don't think we've used the word nimble more times in the past than we have in the last month.
I mean, the volumes are high. You can scalp in and out. So
I said numerous times on the show that, each time we rally, it looks like the low. This is the definition of kind of a two-way market. Every time we make a low and we bounce back up, like that was the low. I need to. No. You need to wait for price to come back again.
Omnidirectional. That's your favorite word, right?
Yeah.
Go ahead, my friend. Make your trade. See what you got.
There's omnidirectional, even though it can go up, down, or
That's right.
stay where it is.
That's right. That's right.
Just try to.
You want to hold on. You got to be like Lieutenant Dang
Yeah.
on the mask of the
Ice cream.
mask.
Ice cream.
Ice cream.
Lieutenant
Go
Dan.
ahead. What do you got for us?
We got a Rivian.
Ooh.
Covered call. It's been in the news lately. Rivian and Uber are partnering to make some robo-taxis, okay?
Everyone up $1.
Everyone
Ew.
wants to make all of their robo-taxis. Yeah, it was down yesterday.
It
So
was.
now it's up a little bit pre-market, I think. But
Yeah.
this would have been the perfect trade for yesterday. I'm sorry, I'm a little day late on this, guys. Okay.
You're trying to. You're using me as exit liquidity. You're gonna get out of there and close it, and I'll be getting into it.
Yeah, Rivian's actually up this morning. Yeah,
10% move.
Yeah.
See, wait for it to come down a little bit, as we know the market will do today, and then put it up.
Well, you didn't know what was happening, so I give you a good job out of you.
I like it.
I mean, you know what's going to happen today in Rivian when you put this together last night. So good job out of you. All right, my friend, who is our next researcher? My man Kai, how you been, brother?
It's good. How are you?
Good.
Is that the CME? No, you didn't get the CME.
No. You
kinda-
kidding me? He got that's the Costco.
Oh yeah.
Hey, how did you know?
That I actually knew now that I'm looking at it closer. The CME one because it's quite high quality. That they give us to the
Costco has pretty high
got the
quality.
metal. They got the metal. And it's,
A robot, whatever it's called.
not.
Yeah, no. It's all right. You're a man of the people.
Costco guy.
Yeah, I got a cheaper version.
Did your wife buy that for you?
No.
Or did you buy it yourself?
No, she doesn't go to Costco. I'm the
You
Costco.
do the
Oh, you
Costco?
have the Costco card. Wow.
I'm the Costco
That makes
guy.
you more of a man than
Yeah,
me
I
if
was
that's
gonna
such a
say.
thing anymore.
I think the
Because I
only-
don't have a Costco card. I'm not allowed to have
Really?
one. Yeah, my wife has it. It's only in her name.
I think the only.
I can only go to Costco on her arm.
Okay.
It's her way of putting me in my place.
Yeah. It is. I mean, that is.
I kind of like it.
Yeah.
I only
I don't
go
mind
to
being
two
kept
stores.
sometimes.
I only go to two stores right now: Home Depot and Costco.
Home Depot.
Home Depot's my own. Home Depot. I say I'm going to Home Depot. She knows it's 90 minutes.
Yeah.
Even if I don't need anything. I'm going to walk around. I'm going to come home with something.
Yeah. I do.
With a hammer or something.
Something.
Yeah.
Something. Not a hammer. That would be too useful. I mean, you probably have half a dozen hammers in your house anyway, so that is too useful.
You know
Some
what's the
obscure.
real secret at Home Depot? The shop paper towels. Those paper towels are cheaper and better, and you get more of them,
Okay.
like the blue ones.
The blue ones, I know exactly what
Blue
you're talking
ones,
about.
like
Yeah.
shop paper towels.
Really?
You can get a 6-pack of those for like $10.
Okay.
Like it's like they're cheap. They're cheap, and those are better than like a Bounty double, this and that, all that. Way better.
There you go. We got a hack for you.
Way better.
Oh.
Way better.
Even the
Sometimes I do
S&Ps are
that.
down 42 handles now. They were just down 52 handles.
No.
Maybe we all got to be looking at
Yeah.
these, saving a little bit of money this way.
Yeah.
You just got to have a big blue thing in your kitchen.
Yes. You got the. Yeah, that's
Every yin there's a yang.
yeah.
Every
But
give me
it's
there's
good
a
to
gotcha.
have a
gotcha,
couple of
gotcha.
those because, like, if you spill something or whatever, they're great. They're great.
I'm gonna try it.
Yeah.
I'm gonna try it. I'll let you know this weekend.
They're good.
What do you
They're
got
way
for us?
more- They got like way more. They're thicker and like better.
Girth to them.
I'll try.
Let's go, my man Kai. What do you got?
Omaha.
Thank you, Beth.
Strangle, omnidirectional, but it's a little bit bullish. I carry positive delta in FCX.
Okay, I like that.
Yeah, so I think it's a drop to 53 from 55.
Yeah.
Right?
Yeah, copper's been weak too. Metals in general.
Yeah, copper is not making my man Frankie in the chat room happy.
I know.
Right
I
now.
put that in. I put that on with
Frankie's long.
Yeah.
Yeah.
Okay.
Yeah.
So 40A65, 40A has much larger delta, but still we have tons of room to the upside.
So yeah, okay.
48.65.
Yeah, so you're selling both sides here, right? You're doing this in
May.
In May. So you're after earnings on April 23rd. 57 days to go. You got yourself a little time to be right here. You're looking at around the 30 delta put. And if you look at the call, it's about a 20-ish delta.
Yeah.
And it looks like there's call skew in here too. So you're able to go a little bit further out of the money, almost 10. Well,
it depends on where we open because we're
depends where we open now. You have to probably you might have to do the 60s.
I already lower a couple of strikes based on the pre-market.
Yeah.
You
you did.
You can move the whole thing. Like probably move it to like 46.60 or 45.60.
Last night I tried to put in like a 50 and 70. Right now I lower like 2, 3, 5 on the upside. Try to adjust it. Yeah, but you can definitely move your strikes after market opens. Yeah.
Perfect.
No hurry.
I like it.
Good job. Good job out of you.
On the open.
Yeah. Good Ivy rank too.
Yeah.
All right. Who is our next researcher? Oh, Julia, what's up?
I know. Nice surprise. I'm not ending the show today.
I'm gonna have to stick my ear in.
Oh yeah, you forgot about your ear.
Got my ear. Oh.
That's okay.
I have to take my other ear out to put my ear in.
So sad.
Wait, let me pump. Let me pump too. All right, Julia, what's up?
Living the dream. How are
I'm
you
gonna
guys?
start having to like sign.
How are you, Julia?
You know, actually, when I was in grad school, one of my lab mates.
Don't be a
was
show
deaf,
off.
So we learned a little bit of ASL, and it came in actually very handy in bars when we'd be like talking. We didn't have to scream over each other. I could see it coming in handy everywhere, to be honest.
Yeah.
Well played.
That side of the brain, the language part, I can speak it. I can't learn any other ones. No, I'll say.
All I know is hands PZL.
I was gonna say you guys had
Pennzoil.
your own version of this.
So I got
How do you know
Yeah.
Pennzoil?
because I used to be a crowd clerk in the Pennzoil pit. Pennzoil and GM.
Oh, that's good.
Yeah,
All right.
GM.
That's good. Yeah.
There you go.
All right,
There you go.
cool.
That's how I would wave to the crowd, to the desk clerk who was a step
that-
above me.
Okay.
Crowd clerk was better than a runner. Runner was low man on the totem pole. Crowd clerk was, next. And then if you were on the trade desk, you were actually talking to the guys in New York, placing the order.
Okay.
I would say GM buy 1,000. The market.
Yeah, there you go. Market orders?
All right, what do you
Instead of
got
like
for
ASL, it's TSL. It's Trader Sign Language.
Yeah, it is TSL. I like
It's
that.
TSL. Yeah, I like that.
I like that.
What are we looking
have to learn
at?
it someday.
Adobe?
Adobe. It's a little short term. It's 29 days. If I let my biases get the better of me, I would be a perma bear in this. They have done a really good job of just personally pissing me off. However, they had really kind of like rough move after earnings a couple days ago. This was when I kind of like put this trade together maybe like an hour ago, was a little bit more bullish. Now it's a little bit more neutral. I'd still kind of keep it neutral. It's been moving like kind of sideways the last couple of days. So short term trade, there's still a good amount of vol in here. We got a contraction, but I mean, Ivy rank of 49 now. So I went neutral on this, neutral-ish, 225, 270 short strikes, $10 wide, collects 308 and credit for 692. It's not, not a very long-term trade, 29 days out, but I think there's still some juice in here that you can get in the 29 days. So that was the rationale.
Yeah, mechanically for days you're in no man's land, right? And if you 45 days being optimal, we're 29 the front month, you're 57 in the back month. You can make an argument that you're closer at 57 days. Both monthly applied volatilities are 39. So iron condors typically work a lot slower than most strategies. I think if you go into the 29 days, you're kind of ramping up that strategy a little bit. So I agree with you. It's 6 of one, half dozen another, depending on your market outlook at Adobe.
Cool.
Yeah, still looking at like 21 days. That makes sense. Might hit 50% at that point, but it's less time to collect the premium, so it's a bit of a crapshoot. But I mean, vol's been kind of crushing a lot, like pretty rapidly the last couple of days. So there might be like a little more room for a vol crush. Yeah.
Good job out of you. All right, let's
Thank you guys.
Thank you, Julie. Appreciate it. Let's get to our last researcher.
Morning.
Good morning. How are you?
I'm good.
Everything
Got stuck in traffic.
I gotta say,
You're looking handsome, though.
thank you.
Nothing stops that.
Nothing stops that.
I figured out because you got the little tomato watching you online, so you got to look good every day. You slick SOB.
That is
slick SOB. I knew I'd figure it out eventually. I'm not the sharpest tool in the shed, but usually I get it eventually.
Yeah.
Good job out of you, man.
I'm
Good
still a
job.
huge fan of you.
Yeah. All right, what do you got for us? We're getting closer to the opening bell here.
So I'm doing Oracle.
Okay.
So Oracle is doing a huge investment into AI as a tech company. So I'm assuming this AI strategy will work, and the price will still be higher than 135. So that's why I'm doing this put spread. So if the price still be higher more than 135, I'll be able to correct these credits. The IVR is good. Buying power is cheap relatively to my account. And last, so it's
$5 wide spread. This is basically as tight as you can go on anything. Your break even's lower than the lowest price when we were getting a lot more delta when Oracle's at 135. This is the kind of thing where if Oracle's beat you or you're able to make a couple of dollars trying to catch the price higher, this is a way of saying, I'm still in the game, Oracle.
Yeah, sure.
I'm selling this $5 wide put spread for $1.30 or so. So I don't mind the trade. I think it's there. It's there.
We got the peeps saying you're giving the Gordon Gekko vibes.
Oh, thank you.
Ever seen Wall Street? The movie?
Yeah, I did. Yeah.
Oh, okay.
Oh, yeah.
Good.
Me and
Good.
Sahil.
All right.
Yeah. Learn how to speak English watching the Gordon Gekko
I know,
movie.
but
Are you kidding me? Right?
That's an old movie. That's
Sure.
you know.
Sure.
Yeah.
Good job.
Young guys. I didn't know that they were.
I appreciate it. Tasty Nation, I appreciate it.
Good job, Kat. Let's take a quick 90-second break. We'll come back after 90 seconds. This will be one of the few rare times we really do take a 90-second break because we got to catch the opening bell next. Thanks, Kat. Appreciate your time. Thank you, all the researchers.
Thank you.
Nikki, we are back, son, and we've got Johnny Trades. You heard the music. I heard the music.
Oh, my God.
Sweet, sweet music. Even the S&Ps, let's take a quick look at them.
I wish some of it would be it's an HR nightmare in general. It's just an HR.
We had a father and son come to Jesus moment this morning, and it was more you coming at me a little bit. So I liked it.
I got to put you in your place sometimes.
I liked it. You're right. You're right.
No, but
a lot of people do that these days. They
put you in your place.
Yeah.
Lean that way now.
Even the S&Ps, even James has put me in my place. James, I love you.
He's gotten a little crotchety. He is a little cantankerous. We needed that aspect, though. Back on the show. I'm too optimistic.
Even the S&P is down 27. They've been about as high as that we've seen them for the day, even though they're down 27, about a half percentage point. Volatility up by 45 cents to 25.10. I don't think we're out of the woods here. Volatility, as you can see, has had a larger move, relatively speaking, on the day down than up. But even the S&Ps are rallying too. Now, you did notice as even the S&Ps were making their lows, volatility was not making its highs, coming in a little bit there. I thought it was easier to sell volatility /VX or VXM than it was to buy even the S&Ps. But this moment, you were getting benefited from both. NASDAQ is down at 133. And really the best bang for your buck was in the smaller product. Remember, one IWM is equal to about a half of SPY on a notional value. That was down around 1 1/3%. It's only down 1%. It's only down 1/3% now, rallying 1% off of its lows. Dow down 167. Volatility, as I just said, flirting with 25.10 right now, up 45 cents. Bonds, we took our movement there. We traded bond puts when bonds were under 114 to 113. You had a 10-tick move in the bonds, and you had a 10-tick move in the options. That's just because bond volatility was bid in a big way here. So listen, you got the move right and you got paid. That's just the when you get it right, that's how the game plays. You could have traded notes, which TP talked about on Wednesday. It would have been a little bit of a smaller product. You would have had the same type of
higher vol though.
Higher vol. You might have even got a better bang for your
there.
buck. That's what you get for doing the show, son, and not thinking about the trade before you make it. I'm just kidding. Bitcoin down 1,000 and change. Oil hanging in there. I mean, hanging in there more than I wish it would hang in there.
If that comes in, I think you could have some.
Yeah, this is the hardest market for me to trade, which is a news-driven market, and I always say,
I love this market.
You do like this market because you read, you're educated. I'm not educated. I just look at price and go, oh my God, what's happening here? And you will say, well, they just did this, or they just bombed here, or they just moved here, or we need $300 billion for this, or we need $200 billion for that, and no wonder it's happening like
Korean memory shortage.
There you go. There you go.
You ran with that one.
Sure. Whatever. But oil vol is elevated, still not on its highs, right? Let's go to your OVX CGI.
It's taking. You could see him clicking each one. Ding, 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 ding,
I did. Of course I did. I should put it in a list down at the bottom there, so I just have it. Trading at 97. It hasn't moved. It has come in from the highs. Obviously, the last time oil was up here, but this is such a news-driven product right now. I think that it makes it, hard to trade. I think you could fade the upside. I think 98. I've been talking about it forever. Has been a spot. We're right here at 96 and change. I'm leaning a little bit short in oil. That's the product itself /CL. You can do USO if you want to do that. USO down $1 and change. But look where it is, up near its highs. I think /CL is an easier product to trade than USO, but it is a little bit bigger. If you're going to make it smaller, do CL. Credit spreads, make them as wide as you want. Gold down 259, about $130 off of its lows when it was down around 7-ish%. It's down 5% right now. Silver traded down to 65 and change, $4.50 lower than where it is right now, back to 69 and change.
Johnny Trades.
Let's do it. I'm so sorry. I know we're going long.
It's okay. It's good.
Don't worry, we'll get Q in here. We'll make him read his top 20, and then we'll get his arse out of here. I'm sure he's very busy on the trade desk anyway.
He's even getting let go. All right, Johnny Trades. So we got a couple positions on we got to deal with here. So we have a HIMS trade. We did this 1x2 strangle. So this used about $200 or $300 in buying power per contract, which was well within our range of buying power here. We're short one of the 22s, two of the 34s. Stock is basically unchanged today, which is kind of surprising. But the spread, we did it at 358. It's marked at 239, so it's a see you later from last week. So we're gonna close that one. 239. We're out of that. I'll deal with those there. We've talked about before, like, getting long delta or getting delta in a smaller account is a tough thing to do. One of the ways you can do that is by managing trades and by taking off risk. And so I have risk on the upside here on this iron condor and gold. So I'm just going to take this off the table. Not that I think we're going to get to 510 again, but in the event that we do, I won't have an issue there. So I'm out of that. DraftKings, we have this covered call. We sold the 25 strike put for 75 cents, took stock, and then sold the 25 strike call against it. This was the wheel trade that we did. And so we've collected $120 in premium here. If we get called away at 25, we would keep all of that money. The option still is about 50 cents of extrinsic value. I mean, this is an at the money option. The stock is right at 25. You got $40 or $50 to make on this option through the end of tomorrow. And if the stock is lower, then I'll just roll and keep doing the covered call here. We got a couple positions that are at the money. This MOS position, the 27.5 stock, or 27.5 put. It's another one that we are going to hold there and potentially wheel into. We've got a short put spread in SMH. SMH has been weak. It's one that we're just going to hold here, lean a little bit long delta. I think we can maybe we did a wide iron condor here. So I did this on Tuesday. So I'm gonna hold that one because I gotta record videos for that one. So
if you right click on those that you made, I'll push them through on the Johnny trades. You'll see all of those trades. While he's doing that, let's just take a look for a quick second. Even the S&P is down 33. If you remember the last time I quoted them around here, volatility was trading closer to 2540-ish or so. Here's what I was talking about, that maybe volatility is a little bit, now it's come to fruition, that it was a little bit of a better sale on volatility. You had volatility trading 2540 or so, and you got the E-mini S&Ps basically unchanged from last time I quoted. So maybe volatility not moving as quickly. Doesn't mean the market's out of the woods here, but it seems like volatility has kind of stabilized here a little bit, just uptick by 10 cents.
So,
all right, Johnny trades. Let's take a look at it.
I'm thinking we kind of do a Johnny version of what we did in SPX.
Okay.
In our account.
Okay.
I already have a SPY position, so I'm leaning towards doing this in the Qs.
Okay, perfect. And if you want to get even smaller than that, you could do it in IWM. I prefer the Qs.
Yeah,
because
I would
Qs
rather
move
be in
more
the
with the
Qs.
market. IWM, kind of a crappier, Russell, kind of a crappier product. Definitely agree with you.
So here's what I'm looking at. I'm looking at May.
I'm going to put up on the board.
I got it.
Okay.
So I got the 570 strike, so about a 35 delta. I'm going a little bit closer at the money. We've rallied a little bit, but I'm going a little bit closer at the money because I'm trying to do this to where I use about $1,000.
Okay.
If you're going further out of the money, you're going to have to make it a wider spread to still collect a credit or do this for basically a scratch, which is what I'm looking at. Okay. So I'm looking at the 570. We'll sell 2 of the 550s, and then we'll buy 1 of the 520s. So you're 20 by 30. If you typically do these butterflies, you want to do them for credit. Oh, you have yours up now.
Sorry. Yep.
You typically want to do them for a credit so you have no risk to the upside. I would rather reduce the buying power to $1,000 than move this another $10 out of the money and get a 20-cent credit.
Mm-hmm.
It doesn't really change the position.
Yep.
And so we're going to put that in. So it's a short vol flat delta position here. You can see the delta is 0. And we're going to do this. We're going to have to do this for probably a small debit. All right, we're in. So it's 11-cent debit. So if the market rallies, we're going to potentially lose 11 cents if we held it to expiration.
That's correct.
But it'll hold some value because it's short volatility units on the downside. All right, so we're in there. Perfect. I think another random stock that I want to look at that got whacked the other day, SoFi. What do you think about that?
Sure, I like it.
What do you think about doing something a little spicy? Johnny Spice. Oh no,
Johnny Spice. Good.
I thought it. So
it's a new one on me.
So I was gonna do like 1 by 2, like buy 100 shares and sell 2 calls.
Mm-hmm. Okay.
But I think it's too capital intensive. There's a little volatility has expanded, so buying power across the board on naked positions is going to increase. So I've been used to this using $400 or $500 in buying power. It's now using $800-900 in buying power. So
I like it.
I think instead of doing that, maybe we just do like another put and just do like another potential wheel here.
Sure.
Sell the May 16.
And what do you mean by wheel when you say that? What do you mean by wheel?
Sell a put, and if the stock goes lower, you take stock.
Okay. I mean, I like to manage that put. Like because stock will use so much more buying power. I know you're very small here, so it's a smaller size stock, so you're fine with that. But I would usually manage that put. It's the same thing, even if you sell it in the money put. Like you sell this put, it's out of the money, and now you're going to get put stock. I mean, I usually roll it, but I get the point of selling.
I've reconsidered. I have reconsidered.
Okay, go ahead.
What do you think about doing kind of the same thing we did in HIMS?
Which was?
We can sell, so we'll lean a little bit long delta here.
Okay.
Well, I guess it's not really long delta because I'm going to do some extra units on the upside here, but it's a meteor option at the money. I'm thinking we do like the 16 strike put, and we sell 2 of the 20 strike calls against it.
Okay.
It'll use about $400 in buying power. Your delta is short delta, but you're adding to the idea if the stock goes down, you're gonna take it even cheaper.
Perfect. Let's do it.
All right.
I like it.
And these are, it's
smaller, Johnny size.
Yeah, these
accounts.
are small.
Yeah. That's the way it's supposed to be.
All right, 290. So we're in on that one. I guess so. We had one we'll call the Qs bullish. We'll call SoFi bearish delta wise because you're 20 short delta.
Okay. And if you push those, I'll put those through.
I put them through.
Oh, very good. Very good. Thank you.
What do you think? What do you think now?
What do you think now, Brown
Silver?
Cow?
Do we do something in gold?
I guess you could try gold. Let's let the markets decide, meaning the option market decide which place you would go, and you let me know on a smaller sized account. Gold market's about if you're going to the 29 days, they're about 30-40 cents wide. If you go into the April options, they're about 60 to 80 cents wide. Let's look at SLV here. SLV, smaller product, $65. If you go to April, markets are about 20 to 15 cents wide amongst friends here. If you go to May, options are about the same. Which one's a better product to trade? Silver, IV rank of 51, GLD, IV rank of 59.
I actually already have GLD.
So then let's do SLV.
You want to do SLV?
And SLV has much better markets, was the point I was trying to make.
What do you think about like a Jade Lizard type position here?
Sure. The first thing I have to ask you, are you trying to liquidate money to put into someplace? I'm just kidding you. Because silver is going down because of liquidating.
Yes,
so
yes,
it was a sad joke.
Yes, of course.
Right.
Yeah.
I like it. Silver got as low in the trading here in SLV down to just about 61. It's 63 right now, which has no bearing on the trade because all you can do is trade the here and now. It's down 8%. If I told you were going to be long, want to get long something yesterday and it's down 8% today, you would think it was a
buy
gift. Yes. So what are you looking to do here? Some sort of Jade Lizard?
Thinking so naked, and this is a function of volatility here too.
Mm-hmm.
But being naked here is going to use about 1,000, about 1,200, 1,300 in buying power, which I can obviously do. It's high-ish. If you wanted to buy a wing like the 50 wing, it costs you a pretty penny. I mean, it's 60, 70 cents.
Yeah.
Buy like the 45 for 30 cents, but that only
it doesn't
drops
increase your buying power.
It only cuts down by 200.
Yeah.
This is too much.
I think you have to put the trade on the way it is, and this would be the point where you say to yourself, okay, at some point, if I get the move that I want, I'm going to
be more aggressive.
Be more aggressive with it. Okay. That's right.
I think you're right.
That's right. How's that suit you?
You've done this for quite some time. You know the things. All right.
If you push that through, I got you too. You did 465 credit on that trade. Good job out of you. So go ahead, recap.
Closed HIMS, closed the call spread in gold. We put on the wide butterfly in the Qs as our short vol, neutral, bullish type trade. We did a short delta kind of neutral position, SoFi, short delta, but neutral, your short units. And then we did a Jade Lizard, which will be long delta. You have tiny bit of risk to the upside because you're doing a $5 wide call spread, 465. It's not going to ever go to $5, or at least you're not planning on it unless something crazy happens to the upside. So short some volatility across the board in all of these trades. This was like the net delta of the positions overall is probably like 0. It's very short volatility.
Right.
That's the trade.
Right. I just got an email from somebody saying, you seem like the type of trader when you trade these futures, you got 50-cent move in the volatility that you needed, why not take it off? And I consider myself a great scalper back in the day. And if I wasn't doing the show and everything else like that, I probably would look to scalp and look to re-enter and trade a lot more. I do the show now and I've become more of a long-term trader, which is, more of that week, 2 weeks, 45-day trader. And I've become quite mediocre. So I'm not closing it. I like to torture myself. So I want to take like a point worth of pain to get back to where I originally was, and then probably take the 50 cents or 60 cents.
No, you take like the 20 points of pain to make the 1 point.
That's correct. That's correct. So don't do as I do as I say, and become a much better trader. All right, what are we looking at next?
We got a market measure.
We do have a market measure. We're going to take a quick 90-second break as even the S&Ps about 8 or 10-ish handles off of the last time I quoted them. NASDAQ down 170 and change. Russell down 13 or 14. Dow down 300 and change. Volatility hanging out at 25.05. I'm going to round down because that fits my position. Bonds 114.13. They caught a little bit of a bid. Surprising that bonds really were the quickest, easiest thing to trade here, at least while we were on the show. Oil up $1.30. Can't keep a good oil down. You really are an SOB. Gold down 280 and change. Trying to
oil volatility coming in though.
Oh, so let me do it this way here.
I
must have just clicked on it a moment ago, didn't I? Oh, I don't have enough.
I
hate that.
I got it.
All right, you're the man. You're the man.
It at least feels like it's coming out of the options because I sold those MCL calls this morning and they've already come in like 15, 20 cents, which is about 10%. I'm not taking them off now, but it seems like volatility in oil is staying bid, but it's not. The tail volatility is really spiky. Like it's going up. Like the volatility at the money is staying right where it is. And then on these moves, these dollar moves, the tail volatility is just going up and down, up and down, up and down. And so I think that's what's happening here.
All right.
I don't think it. I know it because I've been trading it.
Let's take a quick 90-second break and come back. We've got more. Don't forget, SPY has a dividend. It's a big one, $1.50, 60, 80, something like that. It's a big one. If you have an in-the-money call spread, long or short in SPY that's expiring, let's go with a bad good scenario. You had an in-the-money March position that you sold a call spread, and it was full loss. And now it's gotten back to where it was. I'm going to just play around here and say it was a $10 wide spread and it was a full loss, and it's still in the money, and it's a $9 loss now because you got the move down that you wanted to, and you want to hold on to it because you're saying, hey, this could, I could get that back to $9. I watched it go $20 in the money, $30 in the money. If you're anywhere in the at this point in the 1 day, the 648, 76, anywhere in here on these calls, meaning your long call is here and your short call is out here, or both are in the money. Remember, if the put is trading for more than $1.70 on your short call, you might be in jeopardy of getting assigned on the short position that you have. Don't put on a spread don't risk having a spread that's basically a full loser, lose you another $1.70 or so. It's a big dividend. Even the S&P down 46 as I spoke, so I'm going to get off the air. We're going to come back. We got a market measure after this. Nicky, we are back, son. Even the S&P is down 47. The test continues. Volatility 25.20. Go.
Let's do it. Market measure. Sponsored by the SIBO.
Sponsored by the SIBO.
Sponsored by the SIBO. Before you double your contracts, watch this.
All right. That's a good warning.
Yeah, that's a good warning. Good title. When traders are ready to scale their positions, they typically have two choices. You can either increase the number of contracts or trade options closer to the money. Those are higher delta options. Which approach do you think is better for the risk-reward trade-off?
We know that contracts kill. I mean, that's really what it comes. That's really what it comes down to.
Very much so.
Yes, and listen, you just put on a contract trade a minute ago in SPY, like half an hour ago or an hour ago, whatever. That is counterintuitive to what we're looking at here. So we did that, trying to take advantage of volatility, kind of like what you traded at MU, hoping to get the move that we need. But we understand the risk, and the risk was set for our size account. Now, when you're usually doubling your contracts here, you're usually doing 2 times the amount that you normally should be doing. You trade this account relatively small. Upping the contract size puts you in still a small to fair size trade.
Yes.
It's not 2 times amount of buying power compared to all the other trades I had. That would be like a naked put in SPX. That would be like, and you notice when we went to naked puts, we went into SPY, making it a lot smaller here, not doing an SPX, which would be 10 contracts versus 1 contract. You trade 1, 2, 3, 4 contracts in SPY normally, then you go to 1 contract naked SPX. You just did 10 contracts in SPY, something you've never done before, figuratively speaking, in your account. Even the S&P is down 50.
So we'll take a look at this table here. Here are the choices to scale up. Trading both carry more potential for profit and more risk in different ways. So when you are doing strangles, you could do 2 contracts of a 16 delta or 1 contract 32 delta. You're delta neutral on both those trades. Your one is 1 contract, 1 is 2 contracts. We're going to kind of compare and contrast these. Same thing with short puts. Sometimes people say, well, why not sell just 2 20 delta puts as opposed to 1 40 delta put? It's the same amount of delta, and yes, it's the same amount of delta, but we're going to see the risk reward on these sort of trades here in the study. So the study is going to be in SPY. It's from 2016 to present, last 10 years. So we're looking at 45-day options. We're managing these at 21 days to expiration. We're going to compare the increasing of the size of 2 16 delta strangles versus 1 30 delta strangle. And we're also going to look at increasing the size with 2 20 delta short puts versus 1 40 delta short put. And we're going to see the risk reward here. We're going to filter the results by IVR below and above 30%, which is kind of the mark of, just to put everybody, to give somebody context. IVR in SPY right now is 39. So typically when you get above the 30 mark, that's kind of when volatility is at its peaks, because it skews by the big moves in volatility. IV rank is skewed by that. So this is peak volatility.
Good job.
And so when increasing the number of contracts at a 16 delta level, which is 2 lower delta trades versus 1 higher delta trade, it improves win rates by about 5% and boosts the average profit by 88% for strangles and 26% in short puts. So that sounds pretty good, right?
Yeah, why not? Sounds great.
Yeah. But there's going to be
a gotcha, as Dr. Jim would say.
There's always a gotcha. So the gotcha here is that 2 lower delta trades increases return variability, with the standard deviation rising 39% for strangles and 18% for short puts. So you're going to have a wider P&L swing in both directions, for you and against you. It's the same sort of delta on entry. You're going to be using more capital. You're going to have bigger swings. That's one of the points that we wanted to make.
Even the S&P is down 50 and change. Volatility up 70 cents, which is 25.35. Remember, last time even the S&Ps were only down 35. They're down 55 right now.
And volatility hasn't really moved all that.
Volatility's actually come in by 10 cents. Again, just trying to look at...
That make you feel all warm and fuzzy inside.
It makes me feel like regardless of what happens with the volatility trade, I made the right trade on entry. I don't know what the future pricing is going to be like, but I got the perceived edge, because there is no edge, but I got the perceived edge on entry just by having a little bit of market awareness, or at least having an assumption on what volatility, or the research about volatility being mean reverting than anything else. Sorry, go.
Good job out of you.
Yeah. Big deal. I could have bought them and sold them out 30 or 40 cents higher than that, which would be back in. So,
okay.
You cost me money.
I'm sorry. What can I do here? What do risk metrics like largest loss, the max drawdown, and CVAR look like when we compare doubling the contracts versus doubling the delta? Because we've looked at this, and obviously there's higher profit potential. 2 contracts, further out of the money, sounds great. But what does the risk look like? And that's really what the key is here. Increasing the number of contracts increases the tail risk by 73% for strangles and 71% for short puts, compared to increasing the delta. So you're going to be a multiple in terms of your P&L distribution in risk. And with short premium trades, your risk is a lot wider of a range than your reward because you're capped reward. So this is why adjusting deltas is generally preferable before increasing the position size. I would rather, when you take all this together, I'd rather have the tighter P&L distribution and lesser tail risk than the capped but higher P&L potential, profit potential, and the 2 times loss. Like when you're short premium, your risk reward doesn't move in the same direction. By adding contracts, you have more potential value you can get, but your risk it's all tail risk. So you got to be careful with your size.
Okay, I agree.
In addition, increasing the number of contracts increases downside risk with max drawdowns rising by about 31% for strangles and 42% for short puts, while CVAR losses worsen by about 37% and 18% respectively. You're going to have a lot more tail risk, even though the delta on the positions is going to be roughly the same at entry. You got a lot more risk. This also highlights why increasing deltas is generally preferable before increasing position size. So if somebody was asking me today, would you rather sell one 40 delta put or 2 20 delta puts into this downside move? Say 1 40 delta. Even though it's closer to the money and it's more quote unquote risk, the tail risk is a lot lesser.
Good. Hey, you're talking about units here, right? I mean, this is units kill.
Units always kill.
Yep.
Yes.
Yep.
Like my units in gold and silver.
Well, gold is down 6%, silver down, I'm going to round down 10%. I mean,
we're okay. It stings. It's like
only a flesh wound.
It's only a flesh wound right now. Couple takeaways. When we are ready to take on more risk and increase size, we prefer to increase the deltas as opposed to the number of contracts. It's the same thing for spreads, especially if you're looking at tighter spreads. Widen them out. Average P&L, volatility of P&L, and win rates increase proportionally regardless of the strategy. But the tail risk and the max drawdowns and the CVAR are significantly more prevalent when increasing contracts. You're just in a binary vacuum. If you're looking at one contract of a 40 delta versus 2 of a 20 delta, your risk is way, way more on the 2 contracts. Tail risk.
Most definitely. Good job out of you, my friend. Look where we are, 9:34. We were running behind just a moment ago. Now we're right back on time. So let's take a quick look at the market. You want to?
Yeah.
Even the S&P is down 35 and change. It was just down 40 and change. Volatility sitting at 25 now, basically the lowest that it's been all in the trading day. And by trading day, I mean over the last hour or so that we have been trading in the market, actually going lower as even the S&Ps are exactly where they were last time they were here. Volatility was about 40 cents, 50 cents higher. That NASDAQ down $1.30, 130. Doesn't tell you the whole story here. $200 off of the lows, $200 off of their highs. Place your bets in the NASDAQ now. Place your bets on the E-mini S&Ps. Place your bets on the Russell, which has been the strongest of the group. It was the weakest of the group earlier. Dow down 280 and change. Bonds are up 4 ticks to 114.12. Bitcoin taking it on the chin. It's been the strongest of the group over the weekend. Now coming back down to earth to 69 and change. We'll see what happens there. Ethereum 2,100 and change. Remember, this was under 2,000 just a few days ago, but well off its highs of 23 or so. Oil, can't keep a good oil down. I'm going to tell you something. Oil is such a news-driven product right now that it almost trades, and I've quoted this before, like a meme stock.
Yeah.
But there's going to be a time when
where it was just like gold and silver when we had the downside move in gold and silver. It was,
and I would have thought it was a week ago.
Yeah. I will say,
when last Friday, when volatility, or I know today's not Friday yet, we're getting there. Friday volatility came in as oil was going higher. Go ahead.
You know who has not been having a good trading couple weeks or months or whatever?
What?
Anybody buying risk.
Yes.
Either buying calls or buying puts. If you have not been trading volatility, you're in a world of pain because you haven't made money. If you were buying puts into yesterday's downside move and you caught 50 handles of it, you lost it all today.
That's correct.
You lost the whole thing. Like same thing with calls. Like if you were buying the dip and you were doing it by buying calls this morning, you probably made nothing. You're probably a scratch, if not down. This market in this year has been, you have to trade delta and sell vol. You buy, we've been scalping.
It's been a trader's market for sure. Yeah. No doubt about it. Thank you to my friend Brad who sent this to me a couple of days ago. I mentioned it. I'll mention it now because now is the time. We're talking about SPX expiration. We're talking about SPX expiration for the AM settlement options here. If you're in there, or even if you're in the March options that will trade all day long there. Typically. Going into, and by all day long, I mean the March 20th options here. That would be the expiration day, or the AM options that expire right on the opening. I apologize for looking at the wrong one there. I put my cursor on the wrong one. Number of down days, Thursday into Friday, is 9. Number of up days is 19. The average downside move is closer to $15. So it's down half as much. Typically on that Thursday into Friday print, but that print is twice as big. The upside is $8. So upside is 8, downside is 14, but you get more up than down. 19 to 9 there. So the average move is up by around 10-ish.
I would like that. Here
we go. Let's take a quick 90-second break. We don't know from where, right? I mean, we could be 60 handles lower than this right now. Yeah. We'll be back in 90 seconds. We got more Tasty Live with those guys from the Tasty Trade World Headquarters. We'll be back in 90 seconds.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda like. You gotta level up. Just look at me. You gotta level up. But they kinda like it when. I'm feeling myself. I'm feeling myself.
What is going on, everybody, and welcome back to Risk and Reward. Today's Thursday. We have a little bit of a choppy market today. We'll get into that, some of the metals. We'll touch on oil, all the good stuff. But before we do that, Brother Gus, how are we doing today?
Doing good. We got movers everywhere in the market.
do.
Happy first day of March Madness to those who celebrate.
first
One
day.
of the best days of the sporting year today. I'm a happy camper. Also one of the biggest, most popular sick days in the United States.
Oh, is it
today.
really? No
Lots
way.
of people waking up with colds or dead grandmas this morning and having to take the day off mysteriously.
I'm curious when that data started to become quantified because I'm sure we could see similar data when Call of Duty used to be released at the end of every October or November. I know me and my boys, when we were in college, we would get the game, stay up literally all night playing it. And then we would go to class without even sleeping. Just get ready to go to class the next morning. And that was kind of like the tradition. But that ended freshman year. But maybe some similar statistics.
Yeah, I'm sure there's all kinds of little blips like that.
Super Bowl Monday?
Maybe
yeah. Super Bowl Monday.
I could see that.
Yeah.
Yeah. I mean, it's kind of transparent what you're doing, but it's transparent what you're doing if you take the day off too. So like, who cares?
100%.
The data clearly does not care.
If the shoe fits.
If the shoe
If the shoe fits.
But yeah, as you said, we have really choppy market today. Things are just flying and dying left and right. No super clear direction. Rivian is the shining star for me today. Rivian, something substantial finally happened with Rivian. They have signed a $1.25 billion deal with Uber to provide robo-taxis for Uber. So they're going to try to get out 50,000 robo-taxis by the end of 2031 is the goal. There's $300 million guaranteed, and the other 925 is based on them hitting that 50,000 quota.
That's a big deal.
Yes.
Big deal. I'm curious about Tesla. I know Tesla, I've heard headlines about Tesla and Uber. I wonder, is Uber going to be an asset for all EV companies, or are they going to sign, kind of company-specific deals or whatever the case
I actually don't know. I mean, is it like when you book like a Tesla Robotaxi or a Waymo, somebody in chat can let us know, is that, are you booking that like through Uber or Lyft, or do you have like a Waymo app? I don't know how that works.
Yeah, not sure.
Haven't ever done it before.
Wouldn't be too sure. We'll see.
It would be wise of Uber and Lyft to be getting their hands on these, though, and keep these companies from becoming independent, because Tesla has the facilities to just run Uber business in the next 20 years, really,
in almost every aspect,
production capacity that they have.
Right, and I mean the financial backing that they have by whoever the person running the company, Elon Musk, wealthiest man on the world. I feel like he could compete in any market if he really wanted to.
Oh yeah,
that's a good point.
Yeah, so perhaps for that maybe that's why. Uber's taking their shot at Rivian now is to try to hang with that a little bit, or at least have their foot in
They got themselves a real competitor, though. Rivian, it seems like it's standing a chance they're going to be there for some time. So.
Yes, Rivian certainly growing. So yeah, it was up giant this morning on that big cash influx, and is actually just rocketing back down as I speak right now, looking to get back to unched. But such is life with Rivian. These big gaps up into the down days. It's the way that it goes, but. That is a substantiated move, not just some sentiment thing or, a good earnings call or slightly raised guidance or whatever. It's real cash money. So I'm going to stop looking at it before it flips back to unchanged.
Yeah, love it.
And then, like I said, I mean, things are just ripping left and right. On the short side, I have Affirm giving me a few more dollars here, down another 1% today.
Pulling back a little bit more.
Look at that. Look how ugly that is. If we can get through this like 97 level support, I don't know what stops it below that.
It couldn't even stand a chance. I mean, I know that we had that massive gap down and we tried to rally a little bit, but good Lord.
Yeah, little dead cat bounce action, but not a whole lot happening. So yeah, love to see that out of Affirm. But yeah, then these targets are shorts, and then of course the metals, as you alluded to in the beginning. Metals getting hit really hard.
Oh wow.
Yeah.
Oh, man. I was just talking about how I was like, man, if I could snag some of the short delta out of your portfolio, I would steal the metals. And I really like the positioning that you have on that one. So that one's a little bittersweet on my end today. Just seeing that. I actually haven't checked the metals today.
Oh, yeah.
I kind of took them out of my my peripheral vision since I didn't have any position on it.
Yeah. So. Silver collapsed this morning, opened up down double-digit percentages, and has eked back a little bit up to just being down 7%.
Oh, wow. The first real move in some time. Wow.
Yeah, gold
That's a big move.
Gold in a very similar boat. Gold on two gap downs in a row here. Silver, that's not really what we saw. Silver moved a little bit with gold yesterday, but this has been the first real big one. Gold just straight sliding.
That one makes me feel some type of way. I'm looking at it now, man.
Yeah.
It's a good one.
It's
I mean, the range is there in the metal still. I know the volatility slowed down, but like the range absolutely is there.
Oh yeah. Yeah. And I mean, we could just as easily, I mean, on GLD here, we could just as easily go $100 lower. I would be equally not surprised to see us move down to like 350 or up to 520 again. I mean, it's just insane what these metals have been doing. Very unpredictable, but obviously feeling good about the silver position.
Yeah.
But yeah, I mean, that's pretty much all the highlights for today. Starbucks having a good little day for me. This position is cruising to fruition here.
Nice.
I kind of wussed out. This was a 3x2. I had three short puts and 2 long puts. And somewhere back here in this range, I started to get sketched out, and like a coward, like a paper-handed coward, I took off 1 and 1 to make it a 2x1 instead of 3x2. So
you still got some skin in the game.
Of course. And having the and I like this is a good way to have like half defined risk. This isn't some naked position, but if you're just confident that higher legs are going to slowly come in and you have long-term convictions about a stock, the 2x1s and 3x2s are a good way to get involved without taking up as much buying power as just a naked put would, but also with having a little bit of disproportionate risk expressed to the upside. But that's where I'm at. What do you got going on over there?
Yeah, no, we can go ahead and jump over here to the Tasty platform on this end. I would say nothing too exciting. I know we were trading a little bit of the micro NASDAQ, so we did a little bit of that. We'll get into the executions over here. Kind of break even on most. We took a couple stabs last night trying to catch the long before the continued sell-off. And then today just being kind of patient. But the one thing that's really been catching my eye is oil. I've been trying to figure out how to kind of slide in a short position a little bit. I've been looking at, so I bought a couple puts earlier today. We popped to the upside. So I took those puts right back off, was down maybe 70 cents on the 2 contracts, and tried to reposition at better prices. So been looking at oil, very curious to see how far oil can extend, but I think the short side on oil is going to be interesting if we can have the patience for it. I think it's going to be a very similar kind of, I know it definitely depends on the macro environment and what goes on with the war and what headlines are released, but in terms of price action, I think it could play out pretty similar to how the silver is starting to play out here now. So not trying to jump the gun, but just been keeping an eye on oil.
Yeah, and I think the analogy with the metals is astute. I'm inclined to agree that I think we could see a similar situation to, what we saw coming out of the silver and gold run into the end of last year, where it's like, and this is more substantiated. The silver and gold run the whole time, I'm like, who is doing this? Like, why is this happening? This, I could tell, it's very easy to tell why this is happening. But this is one where, like you said, I think whenever it collapses, it's going to collapse hard. I certainly am going to have the patience for it. I am still involved with USO. Hurting progressively worse on these positions here. I'm down a little over 50% on the May 15th 85s, and then something like, 10% on the, a little less than 10% on the July 17th 75s. So yeah, hoping that just some bearish. I'm confusing. There's double negatives happening in my brain. The words aren't coming out. I'm hoping some anti-war news will break.
I mean, it's hard to tell nowadays. Yes. It's hard to even tell what the negative, what the positive is. How is this headline supposed to react to oil prices now? So, it gets kind of crazy.
Yeah. So if this is Afghanistan, I'm in trouble, and if this is Desert Storm, then I'll be a happy camper. Is pretty much where we're at.
Yeah.
But yeah, I'm definitely in the thick of it on oil. There's a chance that 120 days from now I'll be saying, why the hell did I double down on this position? And there's also a chance that 30 days from now I'll be saying, I'm a freaking genius for doubling down on this position. So I think both outcomes are equally likely, but interesting moves happen in the oil space.
100%.
What's going on, everybody in chat? Brett, Sergio, Rodrigo, Ranch, Grumpy Mike, Big Deal, Triple L. That's what I'm calling you. Good to see you. The Qatar gas outage and worsening shortage situation could cause helium spot prices to surge by 50% to 200%, tightening helium supply in the semiconductor chain and posing a serious risk. Can I get a ticker for helium? Is there a helium future I can get involved with? Or are we just going to play the semis as a sentiment move on that? Genuine question. I will pull up helium if there is a way to do it. I just don't know how. What's up with SWMR?
SWMR.
Swarmer? Did this just IPO? I've never heard of this company. It's up.
Yeah, it's up.
It's
all you see is green.
It's been trading for 3 days. Maybe a little bit of a doji coming in here. Man, I could totally see somebody on Twitter doing TA on this chart. This 3 candle chart, throwing some lines on here.
Seen the TA on VIX. Anything's possible. No.
Yes.
Oh yeah, one good tweet. We're at highs with Trump. So I know that's been on my radar a little bit more. Those unannounced tweets, those unannounced headlines.
Absolutely, one good tweet or one good speech or whatever else. But yeah, broader market continuing to slide. We're looking to test the 6,500 level on SPX here. Clean break through 66. Moving lower. There's pretty solid resistance at this 6,550 range. That's sort of our next level. And then below that, I don't know, maybe 6,400. Swimmer is a drone software developer, AI drone company. Big Deal said, AI company? Interesting.
No.
Swimmer drones. All right. Well, I'm with that today. This is like they're trying to set themselves up for a Palantir buyout or cash infusion or something. This sounds right up Palantir's
What is
alley.
what is PLTR up to right now?
That's a good question. Full flag.
Kind of
Full
just
flag.
consolidating, not doing too much.
Yeah, kind of consolidating. I was selling off for a little while here. I was short somewhere in the midst of this and had a good short trade on Palantir, which is a really hard one to time up.
Burry was pretty bearish on this one. That was his next take.
Yeah,
Okay.
Burry bearish on this, and then also bearish on a lot of the AI companies, Nvidia and the like.
Was his more from just a technical perspective, or was it more from a fundamental perspective? I don't even know what his take was.
Palantir, he basically shared my sentiment that
What was
it's
that?
just like it's just way too far ahead. It was this insane valuation. The PE ratio was getting all out of whack.
It's ahead of it's getting ahead of itself.
Yes, exactly. Everybody's we're trying to trade like it's Palantir 20 years from now,
Right.
but it had to slide a little bit to price in the modern day.
That is interesting because they leave a lot of because of the secrecy of a lot of what they do and what's in their contracts and the specific tech that they're working on and developing is very secret because they have some contracts with the government. I wonder if that adds like a little bit of lore. I wonder if that like uncertainty adds a little bit of like, well, they could be valued at like. I wonder if that's what helped them, float to the, as far to the upside as they've done over the last couple of years.
Yeah, it's an interesting spot because by nature, the markets are always trying to price in future information. So on one hand,
And they're so low key.
yeah, and so on one hand, there's the argument that if Palantir has a $400 billion valuation and it's only doing $4 billion in revenue, it doesn't matter because they will be worth $400 billion sometime.
Right.
On the other side, we live in the present and nothing is guaranteed about the future, and so you can only kind of ride that wave for so long. And then as far as it pertains to the AI names, he just said that he feels that it's a .com bubble sort of situation where we're getting out ahead of AI a little bit. And to his credit, NVIDIA has pretty much just gone sideways, not necessarily down since he made these takes, but it did run out of steam a little bit shortly after he got his shorts on. But I remember the quote as being, I'm not saying NVIDIA is Enron, it's clearly Cisco. Like it's overinflated right now, and there is some time in the future when this is justified, but it's just...
Yeah, you're not wrong. We're just a little ahead of its time.
Yeah, and I still don't know that that's a fair comparison to make. Yeah. Cisco .com bubble collapse, it fell like 90% that year, and I don't think that there's any world where that type of thing could happen to NVIDIA. I do think we got a little bit too excited about AI there, but pretty much all of these names have started to stagnate, run sideways a little bit, and kind of let the current market catch up to the share prices. So I'm much more comfortable now than I was 3 months ago. And you guys haven't heard me going on a Palantir tirade in a little while because it actually got to a more fair spot.
Yeah, Alex Karp, the CEO of Palantir, is a very interesting guy. I think his he's very arrogant, and I think because of that, it makes you think. Does he?
Alex Karp?
Yeah. He's a very off-putting guy. Like he will rub you the wrong way. Yes. Very much so. And I think that type of personality. He talks like he's very big for his britches. Like I'm not joking. He talks like he is Elon Musk a little bit. And I'm just I wonder.
Villain thing.
It is. It is like is he playing
a super villain, like a Lex Luthor or something?
Yeah. Is he playing a character? Is this a marketing strategy? What is it? But also, what he gives off is he knows something, right? And with him having a seat at certain tables because he's involved with certain government contracts, is he bluffing right now, or is this guy legitimately involved with certain technology that is going to revolutionize the way that a lot of the tech is developed? I don't know. I can't really tell what's going on with him, but he definitely gives an eerie villain type character.
Yeah, I think the truth is probably somewhere in the middle.
Yeah,
I do think he's he goes skiing from time to time, shall we say? I think that could perhaps have some influence.
I bet he's probably on some Adderall.
Yeah. Oh yeah.
I found that to be a lot more common with a lot of the bigger guys up there than I would have.
I think he's on quite the cocktail of legal and narcotic drugs. Yeah. I think there's a lot in play happening there. But yeah, I think the real answer is probably somewhere in the middle. I think, and to his credit too, I do think as a CEO, it is your job to keep people excited about your company, and he's done a great job of that. Hence the insane valuation relative to what they're actually.
Well, and again, my question is what is the value the government is seeing for them to literally put themselves in contractual agreements with a guy like Alex Karp that presents himself that way and talks that way?
Sure.
The government is making deals with him, so it's what's going on over here?
Yeah.
Anyways. What a run PLTR has been on. I've only known what PLTR does or Palantir over the last 365 days. I think maybe the first 5 to 10 times I traded Palantir, I had no idea what they did or who they were.
He was installed by Peter Thiel, who wrote some interesting papers. I won't dive into that nice boy, but I agree. The Peter Thiel lore runs very deep. He's got his hand in a lot of things.
See, that's interesting too. Now I might have to go down the rabbit hole because if there's one thing I do know and understand is, I mean, number one, you don't just get contracts with the government by somebody allowed you to be there and allowed those agreements to go through, and so. It's kind of interesting.
Yeah, it's interesting because Elon and Peter Thiel were PayPal together at the beginning.
Okay,
and Elon is like he's come to have the crazy fame and notoriety, but I think right now Peter Thiel actually has more influence. I think he's pulling more strings as it pertains to overarching control of the way the world is. The trajectory the world is on. I will say that much. I saw somebody mention Micron. Yeah, Soul Train. Errol, we losing on the Micron earnings pop.
Yeah,
did you get long Micron?
No, I think we were looking at SNDK, and I know Micron was like a spitting image of SNDK, and I put the SNDK short on, and then I just wasn't getting filled. The markets were getting pretty wide, so I ended up taking that one off. I mean, I wish I still would have had it on because I think we were selling some out of the monies, and it looks like we're trading beneath yesterday's closing price. So with that being said, I think we would be up a little bit on it or maybe near break even. I'm still not opposed to getting on some short delta on either one of these. But a little bit of an inside day on SNDK, it's kind of looking like. I know maybe not the same story for MU, but very similar. What were you doing over there in Micron? Were you long for the earnings, or I forget what your position was?
They're telling me in my ear, not that this pertains to anything, that Heelys used to be publicly traded.
I didn't know that.
Yeah,
I would have bought the stock. I love Heelys. I still have an itch to scratch with them in my adult years. I'm not joking.
I'm sure we could get a pair of Heelys.
I think it'd be fine.
Rip around the office a little bit. But yeah, Micron hurting on earnings. But it has been recovering pretty aggressively throughout the day-to-day open.
Oh yeah,
much lower than where it's at right now.
Yeah. Now, with that being said, we can go ahead and jump over to the TradingView platform and just look at a couple things we were doing over here. We're looking to take a couple scalps over here in the morning, looking to get long near this value area low. Just kind of fumbled the bag here a little bit. Didn't manage the risk very well. Kind of chased a couple entries, which made me stop out a little bit sooner than expected on some of these trades. So that was that in the morning. We ended up rallying to the highs. Wanted to get involved here near this value area high. Chose to exit here just because didn't have too much confidence in how price action was playing out. So we took a couple more opportunities to get long near this value area high again. And then once we got stopped out from there, we just kind of recognized this value area high is giving us a lot of difficulty. And there were a couple of trades that we kind of just mistimed, honestly. So after that, we were like, you know what? I'm going to be patient, wait to gain a little bit more clarity. This value area low down here is going to be a little bit more attractive to see what happens. That's kind of been the day. Whenever we were getting chopped up here, I just took the QQQ options. So I bought some of the 0DTE QQQ options, just the at the money ones, right out of the money. And we ended up selling into strength over here, incidentally selling at the tippy top peak on some of the options. So that kind of helped hedge some of the futures trades for the day. But it's been a pretty difficult day. Price action hasn't been very nice around these levels of value. And we're just going to have to be patient for this value area low, because even if we started trading at 24,460 again, I don't think I'm going to be pulling the trigger. But if we can get down here on a new day low, that might be a little bit more interesting. And then been eyeing oil at the same time. Wanted to get long some NASDAQ, wanted to get short oil. They kind of move inversely to each other. So don't want to overextend ourselves to be on the wrong side of the move. But that's been catching most of my attention for the day. I was hoping NASDAQ would be a little bit more exciting, but it's just not. It's just not. It's just seems to be accumulating right now. And I think whenever it's going through that phase, we just got to be patient. And then certain trade opportunities will kind of stick out to us a little bit more. But trading around this value area high at this point, the market has showed us, time and time again, it's kind of starting to disrespect, that level. And whenever the market starts to disrespect it like that, it can be difficult to manage the risk. Or, you can get long, you can get short, maybe one contract or smaller size and not use a stop loss, but just going to be dependent on how you want to trade it. Long MU and SNDK, this drop will reverse. Yeah, this thing is screaming towards its highs. So I'm still not opposed to getting on some short delta, really, in either one of those names. We'll keep an eye on it.
I'm trying to decide if I want to get out of some of my meta here. Deeply long meta. I still like. I mean, my long-term thesis still holds, but I just have this ladder at 29 DTE, 91 DTE, and then some long leaps for December of 27 at 638 DTE. But these 29 DTEs have just caught the wrong move at the wrong time here. We've spent a lot of time above the 650 level that I need since I've had these on, but Meta just flying to the downside now. Currently like at 605 right now. 1, 2, 3, 4, 5, 6 red days in a row. Not too sure.
We'll see how we position ourselves. It seems like Nasdaq is kind of in a position of uncertainty right now. We haven't really had the easiest of trades this week. I know this was another one we were able to take into the afternoon, which we didn't get to cover. But we rallied right into our value area low. So right off the bat, that's kind of why we were looking for shorts initially. And then again, the expanded volatility that we're experiencing, I think we got to get a little bit used to that. Because these moves have been running a lot further in one direction than you would expect. And I noticed the same to happen even if the trade were to go against you. So, I mean, I don't know. It's a pretty difficult environment that we're trading in.
Very volatile. I mean, there's just so many catalysts from so many different directions right now. So there's, things can just change at a moment's notice.
Oh, yeah, 100%.
It's been true for some time, but that just feels particularly pronounced like intraday today. It's the way that directionality is
100%
ambiguous, shall we say.
Can be. I actually think SNDK has another leg up before it gets shaky. But if SNDK first to fall out of bed can't help but feel others in memory tickers follow, but the relative strength, super impressive. Yeah, maybe whenever, I mean, I don't know. What do you guys think the head of the snake is right now with SNDK, Micron? Because whichever one's ahead of the snake, maybe you get some sympathy plays in some of the other underlyings that could be a little bit easier to manage.
I'll tell you what I think the tail of the snake is.
Okay.
Is CoreWeave. I'm surprised to see CoreWeave has not CRWV has not been catching the same sort of momentum that we're seeing out of these other memory companies, because CoreWeave, while they're not a directly memory company, they're a cloud AI company, a data center company to an extent. So, as AI demand ramps up, as people need more servers, more room for their stuff, you would think the CoreWeave's cloud stuff would start to come into play a little bit more. And I'm surprised to see it not even remotely tracking with the SanDisks and Microns of the world. Its peak came a lot sooner in June of last year. Then we've moved down since then, and it's come to really enjoy this 80 to 100 range, but just pretty much been sideways since like last August. I mean, long time now. And yeah, I'm surprised to not see CoreWeave catching a little more of a bid with all these other memory stocks mooning and being so much in the spotlight. Am I talking myself into a trade here? Do I already have CoreWeave on?
Yeah, debating it now. Yeah. He's like, oh, look at that.
Yeah.
You're like, I am myself.
Yeah.
I am myself. You are exactly who you think you are.
Yeah, I've had these thoughts before, it seems.
Yeah, it's like the joke when it was like, I searched up, what was it? Went to Google to search up, was it? Oh, I forget. He's like, and I went to Google, I searched up, and the first link was already purple. They were like, you get the joke?
Yeah. You are yourself. Yeah, I am who I think I am. I've had these thoughts before. When you're just staring at the markets all day and looking at all these products, it's like you really do. I mean, that analogy works. You really do forget about things a lot of the time that you've already these trains of thought that you've already gone down. Like the equivalent to that is like sometimes I'll be looking at a chart real close and like have this whole thesis, and then I zoom out to a wider time frame and I see I drew on it 2 months ago.
Yeah, it's just like when we go to the gold chart and we see the moon on it. It's like, oh yeah, I forgot we landed a few months ago.
Yeah, exactly. Yes. I might I don't know. I might add some kind of leap on CoreWeave here. Maybe something into 2028. These premiums are just like nutty. So
yeah,
good angle of attack there.
But big deal out of nowhere. Peptides! Exclamation mark. The peptide industry has just legitimately been popping off. I've seen a lot of research on them, but no, definitely popping off. And I think that we might see some big players in the space if they don't, strangle it with a lot of regulation. Like there might be legitimately a lot of smaller companies that really succeed off the back of the peptides movements. And I've already kind of seen it happening, which is pretty crazy.
Well, it's going to be about our time for today.
Yeah. Anything else on your end before we wrap?
No.
Anything else top of mind?
No, It's an inside joke, guys. Production hates when Errol says top of mind at the end of this.
Top of mind?
At the end of the show.
Bro, I could literally be like a soundboard, but like I have some automatic responses. Like I have a few of them.
You like, with that being said, and then we hop over to the next thing. That's like
say that again.
Common transition.
There we go.
Yeah, they're very amused by us, as you can see, as we run over our time here.
Yeah.
All right. Well, yeah. No, that's all I got for today. That's everything top of mind for me.
Cool.
You got anything top of mind?
No, nothing top of mind. I think that's anything last of mind that I have top of mind. That's it for today. Steve, Soul Train, Sergio, Grumpy Mike, Big Deal. Everybody else, nice boy. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself.
gotta level up, 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 up. Just look at me. You gotta level up, 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 up. If you kinda like it when you gotta level up. Just look at me. You gotta level up.
We're back. It's still Thursday, March 19th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, today's not a great day, especially if you're a gold trader, but that's a Chris problem in these parts. How are you?
Yeah, I'm not in gold, so I guess I'm a little better than you. But yeah, it's still a market that's dictated by the headlines of the war, and I don't think that's going to change anytime soon.
Headlines of the war, headlines from DC. DC headline yesterday. We can go right to the slides. Help isn't coming anytime soon, nor is it coming out of the Middle East. Qatar today announced that one of their facilities was hit by an Iranian ballistic missile, taking roughly 3.5% of global LNG supply offline for the next 3 to 5 years at a minimum. So not great, Bob. Federal Reserve yesterday told us that we are driving into the fog of war. They have their hands on the steering wheel, but they don't know where we're going. So no sort of rate cut help is arriving anytime soon. Thomas, the market started pricing in something a little funny today. It happened yesterday after the Fed meeting, and we're going to do the CME Fed Watch here for a third day in a row because the evolution is fast and furious. This is the bottom line summary table for a June FOMC meeting. 1 month ago, the market was pricing in a 58.6% chance that we'd be looking at least a 25 basis point rate cut. In fact, there was inklings of maybe more than that. Here we are a week ago, where the market was still pricing in about a 20% chance of a 25 basis point rate cut. But then there's today, where the market now favors a 25 basis point rate hike at a 6.2% clip. And when we take a look at what's happening across our Fed funds expectations curve right now, that is a market that from now through next March is foreseeing a greater chance of a hike than a cut. I think period, full stop there, Thomas. What does this tell you about the environment that we're now in, where a market has flipped over from cuts to hikes as the next most likely move if it's not a hold?
Yeah, I mean, it's not good. Obviously, the oil, natural gas, the entire energy complex, it affects a lot of things, input costs for businesses, things like that. So inflation, it's a lot less clear of an outlook right now. And I think that's what's driving a lot of these, these bets. And the bad thing is with this is it comes at a time when the labor market is softening. So I think this is, really not good for the market. I'm surprised we're not digesting a little more pain here. You're seeing in some more sensitive sectors that are sensitive to rate hikes or no rate cuts, like ITB, home builders. If mortgage rates don't drop or they go up, that's bad for home builders. You're seeing it there in ITB, down more than the S&P 500. So just the other day I was talking about potentially trying to bottom fish ITB. I didn't do that. Looks more like a short now, especially with these rate odds moving like they are.
The rate odds moving like they are is a clear warning sign, building on the other warning signs the market's been giving us in recent sessions, that there is a more prolonged issue approaching. It's one of the reasons why I haven't been trying to bottom fish in the stock market yet, which got some very kind comments in Twitter and the YouTube chat the past few days about where's our courage? And stop being so defensive. Stop being so worried. Show us what to buy. Well, I was buying put spread here in ES, and that from a little while back, Thomas, is 1 day to expiration, and sitting on a knife's edge here was the 66.25, 65.75 that seems to have come to fruition in today's session. I'm going to have to put back on some of these technical indicators in a little bit here, Thomas, but the chart to me is pretty clear. Rounding top, break the neckline, bounce back to it, fail a few days ago. Now we're breaking out of a triangle. That's giving us a move into fresh multi-month lows. Technically, it's a top. Are you seeing something different?
No, I'm seeing the same thing. I mean, for the S&P 500, the November swing low looks like it could be maybe where you get long if you want to try to bottom fish, but I'm leaning more and more that I'm going to buy some put spreads in ES or RTY.
It feels like it's more of a sell the rip than buy the dip kind of environment now. And it's been that way, I think, for a few sessions at this point in time, Thomas. S&P off by 0.8%, the NASDAQ down here by about 0.9, the Russell 0.75%. You mentioned that you were looking to bottom fish in some things in recent sessions. And before we get over to the charts here, is there anything that you're looking at here on the screen today? Most sectors are down. The only few that are up, energy-related names. I suppose as a silver lining, maybe telecom still charging higher. Beyond that, it's a very ugly looking day on a sector rotation basis perspective.
Yeah, my bottom fishing wants from the few days ago are being extinguished. I think you're going to get the days where you get relief, but like you said, it's sell the rips. It's not buy the dips right now. That's what it looks like. And I think that can continue, It looks more and more like this war is going to continue for more than a couple or a few weeks at this point. I don't like that backdrop of higher energy prices pressuring the Fed rate cut odds, especially with a weak labor market backdrop. The Dow is almost in correction territory. I think that you're going to see some more selling in ES and RTY and NQ.
Powell yesterday effectively telling the market that help is not coming. We will not be getting the rate cuts that we have been so desiring because of the weakness in the labor market. Spilling over here, Thomas, you now say that the Iran war looks like it's going to continue for a longer period of time. The oil futures curve has certainly been expressing that view. Dow is now in correction territory. So for those technicians who go, oh, well, it's a 10% decline from the high. Now it's no longer appropriate to be systematically bullish because we're no longer in an uptrend officially from that view. It's something that CTAs respond to. There are all sorts of folks who operate around that perspective, and they won't touch the market on the long side again until we clear like a 200-day, a 50-day, or wash out to a bear market, which is more than 20%. Although, if you're more than 20% off the high, I think we already know it's a bear market. We didn't need to wait for the official confirmation. Thomas, these charts they look bad. They don't look healthy. They don't look like they want higher prices right now. They feel like they're in flush mode a little bit. That is a very meaningful break. That could have been a double bottom. If we had cleared out 68.25 or so to the upside a few sessions ago, we could have said that we washed out. Instead, we now find ourselves very much in the throes of a top. So aside from the fact that this is a market that still demands, for the most part, defined risk trading strategies, a view that we've been expounding here, I think now for a month plus, it's likewise a scenario where bulls pack it in. I've certainly packed it in. The only things I'm doing are looking to sell vol on a wide enough basis with enough time, coupled with shorter term downside exposure. If this was on the upside of the chart, Thomas, if we were to flip this over, and I keep pointing this out, we'd be talking about a big rounding bottom, a really nice show where former resistance became support, and this thing is now charging to new multi-month highs. How could you not be long? It's a bull's bull kind of market. So just to be consistent here, what do we like on the chart? I don't see anything technically that looks good here. I can't say strong enough. This is not the time to buy if you are someone who trades like I do.
Yeah, I agree. And, I trimmed some positions this morning, an MES position, an IWM position that were long. I'm still in a couple equity long positions, like a CRM put spread. I have plenty of distance on that. I'm selling that at 180. CRM's at 193. I feel fine keeping those names that have already been being down. But you're right. You could get pretty wide on ES right now. I don't know if I even like that. I think there's more pain to come. And we've blown through a couple levels, like you said, where you maybe expect prior resistance to become support or other levels, and it's just not. We're blowing through those. This is some heavy selling that's starting to occur. Sentiment is just going to follow this price action, I think. I don't think sentiment is at the point where you say sellers are exhausted yet. I know Jim Cramer is saying that. I just don't think we're there. Maybe we get down, lower and lower, and you start seeing real headlines like we could actually be getting out of the war soon. The problem is, if we get out even right now, a lot of damage has already been done to energy infrastructure and things like that, where oil prices are still going to stay modestly elevated, even if that geopolitical premium comes out. That's going to keep inflation expectations a little higher. I'm not sure if you'd see the cut odds come back in full strength like they were before. And it kind of leads me to think, how are we going to come out of this with a bullish prognosis?
Just made an excellent point there, Thomas. Even if this stops tomorrow, there's such significant damage in the pipeline to the just supply chain globally, energy, petrochemicals, fertilizers, name something on the periodic table. It's probably impacted. Powell made a really interesting note yesterday in talking about the inflation episode of 2022. He said, he didn't go so far as to say we were right, that it was transitory, although he kind of did. He said the prices did come back in. It just took 2 years longer than expected.
Right.
And so the mindset, the mantra here on Futures Power Hour is the Fed's always fighting the last war. So the last war they fought was that they misunderstood and underappreciated how widespread inflation would ripple through the broad economy and for how long it would. To me, that says that they're going to be higher for longer. They're not going to give us a cut this year. We can't. And I think the market's already there saying that no cut's coming, and the most likely next move, if it's not a hold, is going to be a hike. But this puts us firmly in the 2022 camp. Is it 2003 Iraq where we have 2 weeks of downside movement, S&P's off 5.2%, then you rip to the end of the year to a tune of more than a 26% gain for 2003? Or is it more like a 2022 where the market needs to benchmark all these higher input costs, food inflation, you need to reevaluate all your PE ratios and blah, 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 blah. And so we need like a 3-6 month washout. It's feeling like that latter scenario every day, little by little.
Yeah, I don't admire Kevin Wersch coming into this situation and looking at all this right now and saying, I'm going to be the one handling the fallout from all this. That's it's not something not a position he probably wants to be in going into this, but also the market's selling off more. And if it accelerates, do we see, pressure politically to try to end this war sooner, especially with midterms coming up? That's going to be another implication that you have to think about. And you're going to have to kind of look for the tea leaves of, the political rumblings from that.
The Russell stocks are a little bit off the lows here today, but not enough to make me feel good about anything, certainly. We do see that the momentum here is rolling over in the Russell to a large degree. The slope of the moving averages confirms it. If we didn't buy into that, we could look to some of the indicators. I digress. Recent sessions, Thomas, 2575 up to 2600. We haven't been able to push through them, even with yesterday's move. And consistent with that, we now have our 1 month moving average at 2575. So at the start of this week during the rally, not a believer here, was looking at, let's do this, the 2750, 2700 short call spread. I don't think it's a great trade right now if I were to put it on again, even though it's close to 42 days. The risk to reward is too askew. But seeing where that 1 month moving average is and how it's starting to dip into the zone here below former support levels from the start of February, which we've been treating as resistance there henceforth, I do think that if I was looking at this with fresh eyes today, we could use that 1 month moving average 2575 as a bit of an anchor point and get a better risk to reward. Maybe go north of it, 2625, 2650, 2600, 2650, and start to poke around. What do trades like that look like? And you're saying right now, given the volatility, I can express a downside view in this market with a 70% probability of profit and a 2.5 to 1 risk to reward. That's not bad odds here. So the way that we structure bearish exposure in this market right now, we need to be careful, okay? But the volatility is giving enough still where we can get that above 60% and better than a 3 to 1. I think we need to explore those opportunities here. So I have my trade on. I have my S&P 500 very short term, this long put spread on, and we're crashing into the long strike side of it right now. I need a little bit more here to squeeze some juice out of this. But out of necessity, whatever topping pattern we're putting in here, we can call for 65.50 or so to be a first washout point. That would be the measured move from about 7,100 down to 68.25 or so. But the bigger picture here, we're talking 66.50 up to about 7,100. That's 450 points. We're talking about a market that maybe washes out closer to 6,200, 6,100, Thomas, if we want to treat the technicals with a fair degree of sincerity. And that puts us in the neighborhood of the washout lows we had on August 1st, 2025. All right. That would be a very significant swing low in this market. And it all kind of lines up. So right now, sell the rips. We're not buy the dips. Bulls, go home. This is not the market for you right now. And I say that as someone who is desperately looking for some reason to buy a dip. Desperately.
Yeah, and that's also why I'm hesitant now for iron condors. We're kind of directional now. There's a trend lower, right? And you can hope that prior swing lows offer some support. And they probably will temporarily. But, if you keep getting, a chance of a rate hike going higher, if you keep getting energy sustained higher, that's pushing that. You keep getting weakness in the labor market. I just don't like that trade anymore.
I understand why. If there is going to be vol expansion, it feels like it's going to be with the market going to the downside. So not having too much significant exposure in that regard doesn't seem to be that illogical. I hear you. We talk about this range here in the continuous ES contract. Maybe I understated things a little bit, Thomas. If the swing lows in ES continuous, we go from where we were at the bottom of November to the highs that we had here in late January. If we get down below 65.50, you open up the trapdoor for a move down to 6K. So it's always better to buy a little bit of flood insurance before it rains, Thomas, right?
Yeah. I got filled on my long put spread for an ES. I'm 42 days out at 6,600, 65.75.
Can't even get paid that much here. Getting Going out 71 days, if I really wanted to do just a long put spread here, 6,600 or 6,000, 5,900, it's a 7-1. I thought it would be more than that. Just goes to show there's a lot of downside hedging going on right now, Mr. Westwater. People are becoming more and more fearful in this market. And look at the 6,100 strike. Look at some of the trading volume in here, some of the open interest that's starting to build relative to the last few days. I mean, you're starting to pick up. I don't feel good. Give me the antidote here. I've been spending too much time with Ilya. Why? What's the optimist look at this market right now? What is the thing that we can hang our hats on if I was looking to buy the dip?
I wanted to say that AI spending would help prop up the economy to some extent, and that consumers are still resilient enough to stomach slightly higher gas prices. But I'm becoming more pessimistic. I'm seeing, the airlines, offering warnings. You're already seeing ticket prices go up. Tourism is going to be, hit hard on this. Jet fuel prices have been perhaps among the most of the energy products that have really went up. And I'm just not optimistic anymore. I think this is a market that needs to feel some more pain.
I'm very much with you. It's getting a little bit of a bounce here. Oil prices have come off their high back down to $96 a barrel. We're going to have to keep an eye on some of the news flow, of course, over the course of the session because the market is moving on a day-to-day basis. I did see a headline here that crossed the terminal, by the way, earlier today, and it's going to be really important for gold. It does confirm a theory of ours. We've been talking about how you get gold into the region. Can't go on camel, despite what some viewers of the show have cheekily suggested. So we have a market that's creaking at the bottom side of its ranges. The European markets are closed, so maybe we get a little bit of relief here throughout the session. Thomas, sell rips, not buying dips yet. There needs to be some fundamental change in the course of the war. The fact that we're considering waiving sanctions on Iran. We're going to waive our oil sanctions on Iran in order to help cushion the global economy. What are we doing? This problem is so much worse.
Yeah. Help build up their war chest, fund their war.
What are we doing?
That doing that shows how limited the options are for even the United States in the global energy market. It's just something that even the largest government in the world can't fight against, and that just shows you how much the price of crude is driven by purely supply and demand, especially over the short term.
It's not good out there. Directionally neutral stuff, can it still work? Yes. If we get a little bit further from here, Thomas, I'm going to go back to that continuous ES chart. ES here, if you get down to 60, we get at 6,550, 6,500. If you give me a chance to sell 7,000 calls and 6,000 puts, I will take the 500 points wide trade on either end. And so to that point, there are still some things here. I have it 42 days to expiration. I have some short put spreads down in that 6,100, 6,200 neighborhood as part of a short iron condor trade. It really feels like the short call spread sides are more comfortable. If I'm getting into this market, that's what I'm thinking about. One of the reasons why I'm so concerned, Thomas, is because of what's happening in another corner of this market here, which today there's a little bit of relief as the day has gone on now that oil prices have come back in. But bonds they feel sick. They look in trouble. We do have a bounce off of the 113.5 area today. In notes, similar story. We're bouncing, but they did crack into fresh yearly lows. This is a warning sign. We tried to bottom a few sessions ago. There was that Morningstar candlestick cluster. Yesterday, greeted by a bearish outside engulfing bar after failing to clear its 1 month moving average. Today, immediate follow through to the downside. Sure, that wick would tell you that maybe a low is in here near the yearly lows and we washed out. Do you really want to catch that falling knife yet, Thomas? I certainly don't.
No.
But the bonds are screaming persistent inflation risk. And it'd be worth reminding everyone that in 2022, while treasuries initially got a little bit of a safe haven bid coming out of Russia's invasion of Ukraine, yields did go up effectively from March through June of that year. So this is not atypical. If we're looking at a supply chain disruption rippling through energy markets into other sectors, the treasuries are telling you that it's happening. The bond market here is offering you a red light.
Yeah, and this is one more reason why, I think the U.S. is going to be pushed into a position where we are putting boots on the ground along the coastline of the Strait of Hormuz, because there is a political pressure to open the strait and relieve some of these inflation expectations. Because even if the U.S. says, we're done, mission accomplished, that doesn't mean Iran opens the strait. So what choice do you have except for,
Why would they open the strait?
Right.
Why would they
exactly.
open the strait?
Exactly.
They just they go, we're the toll booth for the entire global energy system now. Pay up.
Yeah, it's I think the bonds are being driven by the inflation expectations. At the end of the day, you always come back to oil in this market, or you always come back to energy. And that's really, usually you're watching the VIX or something like that. The first chart I'm always opening in the morning or checking at night now is oil futures.
Mm-hmm. It's the only thing that you can watch in this market right now. It's the only thing that really matters. And it's not just oil in the United States, Thomas. It's oil in Europe. It's oil in Asia. It's the gas benchmarks. It's, Dubai gas and oil. Dubai oil is trading at like what? 140, 150. As long as that hangs out up there, you're not going to see any sort of meaningful drop in U.S. prices. The demand is going to come to our shores. I am not having fun with my short iron condor position here, Thomas. I'll tell you that. I've been waiting for it to see if it would work out in some form or fashion. Yesterday's decline was one thing. Today's another. That's a nice little bounce here. It's still a very minor loss. Vol has technically come in a little bit since it was put on. However, it's not a great use of capital. So depending upon the close again today, everything seems to be not working in the way that one would hope if the situation was at least stabilizing. Treasuries looked like they were stabilizing a few days ago. We get into the second half of the week. Fed can't give us cuts because this inflation risk is real. That's the signal to the bond market. You get your move yesterday at the long end of the curve. It's absolutely sickening. You know why it's sickening here? Because of what it's doing to my beautiful boy gold.
Yeah.
This has turned from one of my best trades, Thomas, into now just a horrific albatross, where we might have washed out down to the lows that we had in February, and perhaps it means that this thing isn't over yet. But this has been a very clean and, again, horrible handling by myself here with the remaining gold long position I have. You had the breakdown in this triangle into a flag pattern, and it's been an absolute crush flush. Here's the story that just hit the terminal on Bloomberg. Middle Eastern central banks selling gold to help cushion economies.
Yeah. They need cash.
They can't buy it. They need cash. You need cash, and you can't buy gold right now if you're a Middle Eastern country. How are you getting it in? You can't bring it on boat. They don't have trains. This isn't, Lawrence of Arabia or whatever. So this is a huge problem. Not long-term, short-term right now. If these countries are going to be strapped for cash because they can't sell their oil, they can sell gold. They can sell claims on the gold, right?
Yeah, I mean, the Middle Eastern countries, any countries really except the U.S., you're a lot more fiscally constrained when your income dries up suddenly. And, it's you have to start liquidating things, and their central banks hold gold. And I'm sure that's a lot of what's driving this move. Lower bond prices, also not the greatest. I also think gold has more pain to take. And I think, you could look at today's move and some people would be like, I want to buy it here after, a sell-off like this. I think I'm going to get short on the next rip. Maybe before that.
I am eating it today. There's no qualms about it. Silver was already sucking wind and was already underwater. So like a max loss is a max loss. I don't think the 117, 118 call spread I put on at the end of January is going to hit, Thomas.
No.
A little less confident about that today than I was yesterday. But, below 77.5, that was the feeling worse zone. So, hey, egotistically speaking, correct. Cold comfort here for a market that washes out down to the lows. So I guess the question here is, Thomas, we're at the February low. It's February 5th low. Is this hope springing eternal down here? This ever so slight bump in vol. We were at a 45 IVR earlier. We've now edged up to a 51. Is this long lower wick? Is this nascent Morningstar candlestick pattern enough of a reason for you to buy a dip holding 65 as a base to operate around? Do you catch the falling knife here?
I'm not doing that. I don't like it. There's too much fear, and silver has a little bit of that growth angle too. Growth is going to be hampered. That is a long wick. I mean, there are definitely some people trying to bottom fish there. Maybe that's a very short-term trade, but no, I don't like it.
Here's why the concerns compound for me. Forget the money that's being lost, because we'll make it back. That's the confidence you have to have as a trader. And I certainly have that in spades, as you've known me for quite some time.
Yeah.
560 in copper was a strong, firm, sturdy level of support. Thomas, it feels like in the last 2 days with the Fed, again, Jerome Powell, the high priest of passive investing, giving all of those asset managers and the folks who don't like to overreact to the news like you or I might, gave people the green light that there is a real problem here. And so the real problem translates into demand destruction in today's market. That's my reading of the tea leaves here. Oil prices are up, gas prices are up-ish, but silver's clobbered, copper's clobbered, equities are still in the hole, bonds are still pricing in the higher inflation. People need to be very careful out here. We talk all the time. The tasty proper, the Tonys of the world, the Nicks of the world, the Mikes, the Jamals, what have you, Katie. They've been saying for years that when volatility rises, you want to have capital to deploy. It feels like we've crossed the Rubicon in the past 2 days. So whatever capital, whatever capital that I've deployed over the past 2 or 3 weeks, past 2 months, most of it has not worked well for me. Most of it. Stuff that wasn't working well, that has been obliterated, kicked in the head the past 2 days, time to throw the chips. It's over.
Yeah,
and start pressing on the things that are working in a regime that reminds us more of 2022.
I'm the same way. I had a really good January. Was amped up because really, really good January. I was like, this year is going to be a great year, but the market dynamic has changed very quickly.
I think I was texting you in all caps. We're never losing money again.
Yeah, we could quit our jobs in a few years, do all that fun stuff. Yeah, you have to adapt. You can't operate on the premise that you did last year. Obviously, we were just buying gold calls over and over, doing things like that. Very, very different market. And I think it's going to be a harder market to trade, but I think you have to focus on taking advantage of the volatility and really focusing on that.
Trump comments out here. The economic troubles will be over soon. The Dow just hit 50,000 a couple of weeks ago. There you have it.
A couple of weeks ago.
There you have it. So what to do? Is this a bigger triangle that's forming up here? I've seen a lot of my fellow gold aficionados out there who have been trading this on the long side say this is no deep concern. It's just part of the bigger back and forth and trust the longer term gold data that suggests during wars like this, you get a market that ultimately rallies. You know, if there was a place for this market to find support, Thomas, if we want to be generous, I suppose this would be one of the places if a more considerable consolidation is forming here. Also, it does speak to the issue that if gold starts to lose any much more ground, you know, below $4,500 an ounce, this looks like a generational top where like you start to think, what does gold at $3,400 an ounce look like?
Yeah, I think
just the measure move.
This chart is ugly. I think it could go a lot lower if I wasn't even looking at gold here and it was just ticker agnostic. I would say this chart is going back down to below 4,000 for sure.
It feels like it. It's starting to look like it. If one of the engines of gold demand over the past few years has been Middle Eastern countries in Asia buying gold, gold is a safe haven. You buy it to diversify your holdings such that when stuff hits the fan, you can have something that cushions your losses. And if we are in a place where, hey, this supply chain issue is compounding, Goldie, here's the issue compounding. Qatar gas CEO today announced that they just incurred a $20 billion loss at their facility overnight that they spent $26 billion building 2 years ago. 17.9% of Qatari LNG supply is now off the market for the next 3 to 5 years, which translates roughly into about 3.5% of all global supply. So this isn't just a question of will we be able to reroute the stuff, right? Will the pipelines be able to be turned back on once the war calms down? You get those headlines today, gold has its worst session. We're seeing the contemporaneous evidence to confirm the view that the marginal Middle Eastern buyer is dead and gone in this market. And that has the central banks have been the driver for gold going up. De-globalization, de-dollarization. You don't need to recycle dollars back into your, treasuries in a system where you're trading less with the US, but you still need something on your balance sheet. That view is obliterated here, Mr. Westwater. We've been talking about it for 2 weeks. Unfortunately, I'm a day late and $1 short on acting on it.
Yeah. I'm looking at long put spreads here. I think after a move like this, you at least get a little retracement the next day, probably. So I'm going to wait till tomorrow, get a little better price, and then buy the long put spread on this and ride it out with some duration.
Ride it out with some duration. That you may be right. We may need to start sizing up some trades under $4,000. Let's just, this is the environment that we're in. Energy is staying strong. It's actually a little bit weaker from when we first started the show. Oil has come back in. Now it's up by 0.8%, and volatility is calming down here a little bit. I have not seen any headline over the past hour or so suggesting that there's any meaningful development in the contours of what's occurring here. And sure enough, a pullback in oil prices may be giving stocks a little bit of a breathing room here. Do you see any reason why that this market should pull back in anytime soon? Are you like me who's looking at this market and saying any pullbacks we get, I look to sell puts, put spreads, maybe get something with a little bit higher convexity out of the money? I see no reason to change any approach to oil right now except long deltas. Long deltas.
I am sticking to my iron condor that I have between 68.5 and 110. It's working out so far. I think we definitely stay in that range for a while. adding some long deltas on the pullbacks for short term makes sense. Not exactly sure how I do that. MCL, I usually don't trade it. Still pretty big MCL. I might do short-term trades in MCL. There's actually decent volume in some of these contracts now. MCL sometimes gets a little illiquid. So pullback. I mean, pullback of 0.8%. It's not crazy in this market. It's just a natural vibration of how we've been moving, I think.
I think that's actually a fair observation. We've been 100 to 92 over the past week, literally since last Thursday. We've been pinned here. We're in the midpoint of that range, $3, $4 on either side.
Yeah, we'll have to see if, the U.S. has been saying more and more we're going to lay off a little bit on striking energy targets. At the same time, just like 4 days ago, you had Trump saying he's going to obliterate Carg Island. Yeah, I'm just staying neutral and selling the volatility here. I don't know what else to do with oil, really.
U.S. lifts sanctions on Belaruski and Belarusian potash co's. Oh, yeah, there's that fertilizer. There's that fertilizer issue. Popping its head up again. Why are you giving waivers on sanctions to fertilizer companies in countries that we are effectively at war with? Must be a real problem, Thomas. Oil, $94.73. Any pullbacks down into the low 90s. I like $88, $8.50 is kind of a line in the sand. It was where the market got capped off initially when we tried calming down and we had those fake headlines that U.S. naval ships were escorting tankers through the Strait of Hormuz. Obviously didn't play out. And then you have your pivot low here on March 12th around $90, 88.71. So going south of 88.71, you could look in over the next few days, what's 8 days out, continue to say that this market's going to stay elevated short term, risking 4 to make 1 at a 65% probability of profit. I've got my oil long exposure. I got them peppered across the board. I'm pretty content with what I'm doing here. Obviously was able to sell some deeper out of the money puts when volatility was higher and this market had pulled back. But if I wasn't loaded to the gills already on the follow page, Thomas, I would be doing more on these pullbacks. Sell rips in stocks, buy dips in oil. These issues are not going away. And they're not going to go away for natural gas either, which I think is also kind of a tell for today's market, up 2.6%. There is a small little guy going on in here, the 2726 short put spread, which could be monetized for a small little gain, $70 so far. Do you feel like I do when we're looking at what's happening in the global supply chain, that feeling a little bit better about maybe selling puts in natural gas moving forward?
Yeah, I actually like that. Decent volatility here. The thing is that U.S. LNG export capacity, it can't dramatically expand so that people get that arbitrage going to Europe or even Asia. So I think this will keep prices, propped up, supported. I don't think we're going to see a huge spike like we are in the Dutch TTF futures or the JKM futures. But I think it will keep it supported going through season as we go from, with withdrawing stocks to now putting stocks in the ground as the weather gets warmer and milder over the next couple months. So, yeah, I do like selling the put spread in natural gas. I actually have to look at that trade more. I haven't been focusing elsewhere. But yeah, I mean, the energy markets for natural gas are a lot more strained and are probably going to remain more strained outside of the U.S., but that will keep the export activity supported.
Some headlines, again, we're moving on a minute-to-minute basis here. There's some inclination coming out of D.C., and I saw a Fox News clip pass through my 6 American allies. Maybe this is right. 6 American allies that pledged to secure the Strait of Hormuz shipping lanes or help. Japan, Britain, France, Germany, Italy, and the Netherlands. I don't know if that's right. That doesn't seem right given the news that I've seen elsewhere. Josh, could you look into that, the producer? Thanks. That does not seem consistent with what's being reported elsewhere.
So who put that
I
out?
digress, Thomas. It's what someone's doing, captioning, tweeting Fox News. But that's not the headline that I saw on any other service when Trump was talking to the Japanese prime minister today, which they had a very lively conversation about Pearl Harbor, which was nice. So crude, natural gas holding up. We'll keep an eye on it. France says, Josh, producer, France says that they're willing to help secure things once they calm down. Cool.
That means you need troops on the
missile
shore
stop?
to, say, hey, now it's safe. You can come in and escort these ships. Risk is reduced.
We can't stop FPV drones from going after our bases elsewhere in the Middle East. Why are we so certain that we're going to be able to secure a coastline where you could just fly drones from inland to the coastline? I'm very confused personally. Maybe I don't know
then
enough.
you just
Maybe I need
push
to-
the troops inland, Chris.
Oh, right.
Yeah.
Further inland. Duh. Yeah, I got to go back and play some Battlefield 3 and re myself with the layout of Karg Island to see if that's okay. Thomas, the dollar down today maybe is the only piece of good news in the market, right? If we're so concerned about a reach for liquidity, then it would ostensibly show up in the primary liquidity channel, which would be the currency markets, and that'd be the US dollar itself. And that actually has been one of the features of this market where stocks are down, treasuries are down, but the dollar's up. And I know a lot of folks say, if they're selling treasuries and selling stocks, how is the dollar going up? It's because during times like this, it's not that they want to get rid of US dollar denominated assets. They just want to get rid of risky versions of dollar denominated assets. And so you want just cash. Cash is king, especially if you have to pay for things that are unforeseen. We have a rainy day fund of sorts coming together. Why does this matter though? Right. So yesterday the dollar had a good day as Fed rate cut odds drop. Today the dollar's having a bad day as Fed rate hike odds rise. The fact that gold is down and the dollar is down altogether, it feels a little panicky washout. There is that aspect of this market, which, as bad as the stock technicals look, as bad as the bond market looks, although it's off the lows, as bad as gold and silver look in their washouts. And those are very, very ugly looking charts with tons of narrative violations and no more talking about central bank demand until this war is over. The dollar dropping here below 100 does raise an eyebrow and makes me want to reconsider other things, because the dollar, folks, is the most important asset in all of this. All of this. It's a $7 trillion a day market, Thomas. These movements in currencies do not happen lightly. It's much easier to push around the US Treasury market than it is the global currency market. So keeping that in mind here, Thomas, if I'm parsing the tea leaves and I'm looking at an S&P that's only down 0.5% now and bouncing off of the lows, if I'm looking at bonds here and looking at that big tail, I'm looking at gold here and seeing a little bit of stability. It's only off 5.82%. Silver's only off 8% now. It was off 14 earlier. And then I see the dollar's down. What do you make of this dollar aspect of today's equation, where you're not seeing the demand for liquidity that has been underpinning this fear in nearly every other asset class?
Yeah, I mean, that's a little, I didn't know what to make of that. I know the yen's a big mover. I really don't know, because you figured you would be moving to liquidity for that dollar. I don't hate the Australian dollar being, kind of a commodity exporter. Especially you figure they have to export more coal to China to make up for higher gas and oil prices. But other than that, I'm in one currency trade. It's actually, I think I got out of that. If my platform
You mentioned
loads.
coal. There's a future show, but this is one of the longer standing theses that we've talked about on Overtime as well. Last summer, when they did the One Big Beautiful Bill, they were giving tax cuts to coal companies. And just thinking about how the tailwinds move together, you have chance for expanded margins plus energy supply issues. And coal companies today, BTU, Peabody Energy, north of $40 a share. That wasn't happening, right? This is why I feel like the last few days we've crossed the Rubicon. We had the war go off. What happened to Peabody Energy? It starts moving up, but it's not like up 10, 20, 30, 40%. And then today it clicks. It's clicking for the fertilizers again. Fertilizer's still up, even though we're giving the sanction waivers to Belarus. So something feels different. So that's why I can't help but wonder what's going on with the dollar here. How is the dollar? Is this just a buying opportunity in the dollar then? Because everything else is moving in the right way. One would hope.
I don't hate getting long dollars. It's like, what do you do it against, though? The euro. Euro is up a good bit today.
And the euro here, by the way, Thomas, with the move against yesterday's low and now potentially through the high. The high is 116.04. We're currently at 116 and 3.5 pips. You could get a bullish outside engulfing bar here in euro dollar. Similar setup here in the British pound, which has already achieved that. And granted, it's run into its 1 month moving average. And, for the third time now in basically a month, it's finding resistance so far. But you start to look at the candlesticks here, and the dollar looks like it's in deep trouble. So if a dollar's in trouble, maybe we shouldn't be so boomer, doomer. Maybe I've been spending too much time with Ilya.
Maybe.
I just know I feel like today's a big day. We're crossing a sort of threshold in today's markets. British pound after today's BOE rate hike meeting, or rate meeting, I should say, up to 3 hikes priced in by markets through the end of this year. 3 hikes. And so you think about the pound rebounding, Thomas. That's not what the Fed's telling us. The market's saying the Fed's probably on hold now for the rest of this year. What a flip we were in, by the way, where it looked like just a few weeks ago, the pound's coming back in because the Fed can't cut as much as it wants to. So the BOE is going to be cutting more. And now a month later, the Fed's not going to cut at all. And the BOE may be talking about hiking rates up to 3 times. Oh, gosh. This year is going to be tough.
Yeah, I mean, you figure that these economies, the U.S. is such a large oil producer. We're somewhat insulated from those inflation impacts. Not totally, but some of these other economies are going to be feeling inflation a lot more. So central banks, do they have to now be forced to raise rates? And, how do you play that against, if there's a safe haven move in the overall market that's driving dollar demand, but at the same time, you're getting higher rates in other economies.
I'm wrapping my head around my recent failures, Thomas. We're going to recover. We're going to have a fun year trading here. Yeah, the last few weeks have not been good for me. But there's some clear regime change going on, right? I was positioned for one regime. It worked out swimmingly for second half of last year and into the first few weeks of this year. And then that has since been obliterated. So let's move on with it. Thomas, what's next on the calendar? Well, the news is that apparently I've been signed out here. So that's not going to be happening. Guys, we can kill the screen share. There's no reason to show that. We're done here on Futures Power Hour. Tomorrow's data for the US, for North America, is very, very light. If there was one thing to watch on the calendar, Thomas, do you know what 3-letter word that would be? Oil. And I don't think that surprises anyone. I'll be back later today with Nick, 3:30 Eastern, 2:30 Central for last call. And of course with Ilya right thereafter for overtime. Be sure to tune back in. Thomas, good seeing you. Everyone, stick around. Dr. Jim Schultz with From Theory to Practice coming up next here on Tasty Live.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado, just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Understand I got a plan, but I bet you didn't know that I was dangerous.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Thursday edition of what it is that we were trying to do. I survived the dentist. You guys survived the markets. At least I think you guys survived the markets. And we are here together as a team again. So thank you guys so much for being here, being a part of what it is that we do, because we could not do what it is that we do without you guys. So thank you guys so much for being a part of my show, being a part of the network writ large. Just really, really appreciate you guys, because it's because of you guys that we can do what we do. So thank you. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can commiserate with your fellow Bulls. You can celebrate with your fellow Bears, but I can assure you, it will indeed be a good time had by most. So Josh, bring us into the market, man. I don't know if I even want to do this, guys. This is pretty bad out there. Man, I'm not sure. I asked you guys to, keep it from, todically approaching zero, but we have asymptotically got there without question. EMI S&P is down 47. Yeah. Risk-free instrument down 190. Also knows the NASDAQ futures extremely high risk product. You got the boomers even down 398. Russell 2000 futures index actually the strongest of the bunch. That's a little bit strange. Like, when you think of flight to quality, do you think of the Russell 2000? No, you don't, but you should. Like, when you think of a flight to quality, do you think of Dell? No, you don't, but you should. Dell up $6 today, but the Russell down 7 points. Man, you got bonds up a little bit. You got notes down a little bit. You got oil up 14 cents. You got UB40 up about 16 ticks. And then, guys, man, pour something out for our local shifties. pour something out for our local Hunt Brothers. Gold down 284 on the day, and that's not even the low. I think it was down like 100 points even lower than that. You got the Hunt Brothers down 618. Yikes. Yowzers. I don't even know, man. That's some nasty stuff. Got volatility today. I think it's actually surprisingly muted, if I'm not mistaken. Maybe up slightly. No, volatility futures down 35 cents, and then spot volatility down 25 cents. So again, there's a lot of ways that you could attack this: the vol surface, the futures curve, and contango, backwardation, what have you. But to me, at a very, very basic, simple level, when the VIX is 25, 26, 27, like, you got to feed it, man. You got to feed the beast. If you don't feed the beast, it shrinks up. If you don't feed the beast, it begins to shrivel, right? It's no different than Dr. Jim on a cheat day. Like, if you don't feed the beast, I might actually get in shape. And I'm not even sure that I want that these days. And so the cookies and the ice cream, they're just calling my name. And so with the VIX, it's a similar type of deal. No, we are actually trying to get in at least a wee little bit of shape. But the VIX here, it's the same thing, right? If you're not feeding it cookies, if you're not feeding it ice cream, it's going to get in shape. It's going to get maybe even a wee little bit shredded. Like, I know it's crazy to think right now, but the VIX is going to be back to 13. It's going to be lean and mean before you know it. And yeah, man, VIX down 28 cents today. Pretty surprising stuff with the market being so weak on a day like today. But again, you've got to feed it fresh demand for the out of the money options. And if there's not enough there for it to maintain its current level and kind of maintain the width of the expected move that it is indeed predicting, it's going to collapse under its own weight. And so, all right, let's go ahead though. Let's take a look at what's going on, because I was out yesterday to go to the dentist. Very positive dentist experience. Like, this is my first time with this new dentist. Very positive. I was super happy. The hygienist was amazing. The dentist is amazing. And so it was really, really, really good stuff. And so, all right, let's go ahead. Let's comb the streets. Let's take a look at what's going on in the portfolio. And then I want to see where you got. Man, I see you guys in the chat. Josh is Amazon priming me some surprises and delights that are in the chat. So I appreciate that very much. And then, man, look at you guys. I see Sam L's here, Junior Mack is here. Man, look at GP, the game changer, is here. Man, Jared Kramer's here, Sergio's here, Danish Dynamite, and D Gaze is here. Man, Griffin Jones, Peter Leger. Man, is iPod Touch here? What's iPod Touch? No, I don't think he's here yet. Maybe he's here. I'm not sure. Point B is here. Or Daniel is here. Man, I'll try to get to as many of you guys as I can here in a couple of minutes. But let's go ahead. Let's take a look at what's going on in the portfolio, because we've seen some better days. Like, we've certainly seen some better days. Now, oil has been pretty muted right now. I mean, it wasn't muted overnight. Actually, hold on a second. Before we go in, let's continue with some market commentary, because I don't feel like I've gotten you guys quite to the B- level that you've come to know me for with the market commentary. Right now, we're more like a C, maybe a C+. So let's go into, so if we take a look at oil, let's look at oil overnight. Oil was up over 100, I think, right? Yeah, so is that a daily chart? Is that a month? That's a monthly chart, man. Look at that monthly chart. We're long-term investors now, man. We're doing monthlies. We're doing some weeklies. Fire up the quarterly charts, and let's just kind of take a look at what's going on. But let's look at we can just do a daily chart. That's fine for now. I think it was up over 100 today, if I'm not mistaken. Yeah, so, it was just a titch over 100. That's a skosh, maybe 3/4 of a skosh, over 100, up to 149. I'm pretty sure that happened overnight, or maybe in the early hours of the morning there. So oil has come off of its highs, and again, I can't keep track. Can you guys keep track of what's going on abroad? I mean, I think we've already won the U.S.-Iran war like 7 times, and yet it's got at least 6 weeks to go. And so I can't keep track, but maybe you guys can. I'm completely lost at what's going on. But the market, oil-wise, pretty unched on the day, and violently so. And so that is pretty interesting. But let's take a look at it. So if we look at the metals, man, yikes. So it's pretty bad. I mean, that's not even 3 black crows. That's like 7. That's like 7 black crows. 1, 2, 3, 4, 5, 6, 7. This is the 7th black crow in a row. That is not good at all. But take a look. It could have been a whole lot worse. Man, look at the low on gold. Yeah, it was 100 points lower. That's what I thought happened. I think that happened in the early morning hours, if I'm not mistaken. So gold was all the way down to 45.05. So right now with gold at 46.02, it's like, man, this is pretty bad. This is pretty crazy. Man, it could be a whole lot worse. It could be a whole lot worse. And a similar story in silver, if I'm not mistaken, even worse. I believe, in terms of how bad it was this morning. So the shifties certainly not celebrating today, but again, kind of counting their lucky stars, even if only temporarily so, that we're not down around 4,500. The Hunt brothers, who 71 looks pretty bad, looks pretty nasty, but this thing was down to what, 65, right? Yeah, 65.50 was your low print on silver. So it has rallied back $5.50 at 71. And so, I mean, it was down $12 at one point. And I mean, I remember, this was what I'm talking about. This like it happened, 15 years ago, about 3.5 weeks ago. When silver was up at like 120, you can see it right here. It was right over here. So back at the end of January, right when silver hit a high of 122. The end of January, you had obviously that crazy day where silver dropped $44. I mean, there it is on January 30th. And I mean, that was some wild stuff. And that was when we were having, the daily ranges in silver were, $10, $15, whatever. But then all of a sudden it calmed down a little bit. Like all of a sudden, the Hunt brothers just kind of got back to the basics. Like, all right, we're going cheese, we're going pepperoni, and maybe some mushrooms if people want that. But other than that, we're not doing crazy stuff. We're not doing pesto pizzas. We're not doing margarita pizzas. Like, let's just go ahead and dance with who brung us here, slinging these guys out the back door. But now, you got silver was down $12 today. That's some crazy stuff, man. Like, it was in the middle 60s. I'm like, are we going to see a 5 handle on silver in the first digit? Like, we see plenty of 5 handles in the second digit, and, the digits after the decimal, whatever. But are we going to see a 59 print on silver? I was like, man, it might actually happen. But maybe if our technical bros can come to the rescue, maybe this little localized bottom can hold right here. And we get a little bit of a rally back to the upside there in the silver futures world. But again, I don't know what's going to happen, and neither does anyone else. And so we wait and we see, and then I will give you the story after the fact. Like any good prognosticator is going to do, they're going to give you their prognostication ex post. They can't do it ex ante because nobody can do it ex ante. But I can give it to you after the fact with the best of them. And so silver, it could be a lot worse. Then market-wise, I mean, EMA S&Ps, they're actually, they're hanging in there a little bit. I mean, they were down to, 66.11, so they were 30 points lower than here, but it kind of feels a lot worse than that because obviously you can see, it's just kind of been a little bit of a beating here on the way down. And so maybe this low can hold. I don't know. Maybe it's another low right there. I don't know. It doesn't look like a super solid low. But I'm no professional technical analyst, and so I'll let the pros kind of handle that guy. But the Nasdaq, it's hanging in there too. Similar type of thing. It was down a little bit more. It was down to 326. It's 100 points off of its lows, but still, it was only down a little over 1% on the lows. S&P 500 was only down about 1% on the lows. I mean, the boomers are getting hit pretty bad, and so this is obviously going to be your J.P. Morgans, your McDonald's, right? Your Procter and Gamble's. Your Nvidias, right? I mean, nothing says blue chip bellwether, been around forever, quite like Nvidia. And so that would make sense for Nvidia to be in the Dow, which I'm almost positive it is in the Dow, which still makes me laugh. But the Russell's been the strongest of the bunch. I mean, I don't know, man. Like the Russell's held up. I mean, obviously it was pretty weak. Was that overnight? 24.45? Hold on. Were the lows in the market, were they overnight? Let me do hold on. I'm kind of curious now. Because I did happen to gander at the metals this morning, but I didn't really see the markets. Where is the low on the market? Oh no. Okay. So right before the market opened. So right before the market opened, you had your low on the Russell. I'm just going to assume it's similar for S&Ps and NASDAQ because they do tend to kind of follow each other forward through the forest. But then again, I mean, the Russell's it's got a chance to finish green today. That would be a little crazy if the Russell was actually positive today. So, all right, let's go ahead though. So we got a couple of things to take a look at. Our Lululemon trade, which didn't work out. Our Micron trade, which didn't work out. And so those guys are most likely going to go going to go out to pasture after the bell closes tomorrow. But let's take a look at the rest of what's going on. So again, oil, inverted triangle, we sit tight, we do nothing. I mean, today is actually helping us a little bit. We're, taking off a little bit of theta. And so that's good. I mean, unch days in oil right now are welcomed. Unch days in oil right now is a positive thing. And so obviously if it would, politely go down a little bit lower, that would be good too. But I'll take an unch day at this point. I think that would be good. And so oil, NES. So this is one, believe it or not, guys. So this is going to surprise you guys. right? And I took a day off. I'm not exactly well rested. I mean, going to the dentist is not exactly like an off day. And so that's very much like an on day, if I've ever heard of an on day. But for our purposes here, we're in the money now by about 40 points on this MES position. We've collected 131 points on the trade, so we're still well inside of our break-even point. We're not really taking a ton of heat on the position, a couple $100, not that big of a deal. But I thought we have leaned on and leaned into and leaned up against the do nothing strategy. It's so silly and so dumb. I know. Trust me, I'm aware. We've used the do nothing strategy so often. I thought, man, let's mix it up a little bit. Let's shock the muscle just a little bit. Let's actually control our directional bias by adding a short call into the mix. Let's actually, the do nothing strategy, it's the default setting for a reason, but it's not the only option you have at your disposal. It's not the only thing that you can do. So I thought, hey, let's actually let's weave in a little something that's a bit more active around the edges, and just to kind of control the directional risk a little bit. So, all right, let's go ahead and let's close out of, let's delete the drawing tool. Let's go into MES. Let's go to the trade page. We'll go to the same cycle that we're in, April 17th. And, I'm kind of thinking, I don't want to cut my directional bias a ton. I want to remain kind of bullish because I do think that the snapback could be pretty violent. Now, again, the perma bears on the internet, they have assured us this is only the beginning. They have assured us that this is but a flesh wound, like everything is going down. The kidneys are going down, the spleens are going down, right? We're going to be going for some bone. We're going to be going for some marrow pretty soon here. But I don't know. I kind of think the market might have a little something up its sleeve to the upside here pretty soon. So I don't want to go gung-ho and just go, just bonkers crazy, cutting my directional bias. But maybe we pick up maybe a 20 delta short call on the upside, pick up a little bit of premium, control the directional bias. That way, if the market does go down more, we have a little bit of extra padding around the edges there. So looking at the strike selection, you've got your 20 delta call right there at a 6,900, which, this is 29 days away. You're thinking, man, Jim, it's 66.25. 6,900 is that is like islands away at this point. That is like miles and miles and miles into the distance. And that's not a bad thing per se. That's necessarily what we want, right? Like I would not really want my short call to get tested. And so if the market can stabilize and rally back, maybe the S&Ps can reclaim 6,700, then 6,750, 6,800, what have you. And then kind of just chill out in the middle there. That would be obviously good and very welcome for what we're trying to accomplish. But still, we can pick up 30, 32 points. It's not a ton. But remember, the multipliers in the MES markets are $5 per point. So it's not totally insignificant either. And so you have to make sure that you always kind of parse things through the proper context, right? And so when you're looking at premiums and equity options, you're looking at premiums and futures options, whatever, look at economic significance, but understand, multipliers, understand point values, and just make sure okay, this premium makes some sense. Like, for example, selling this premium to me, it makes a ton of sense because it's clearly economically significant. It is going to control my directional bias and things like that. But let's say I was looking at, I don't know, like Snapchat, for example, right? I'm looking to sell a call on Snapchat. It's only going to be like 8 cents or 10 cents or 12 cents or whatever. There's no economic significance there. And I'm capping my upside, right? And we're long-term holders in Snapchat. Like I'm excited to vote on the future prospects of Snapchat. Like I will be casting my vote. I would like my voice to be heard on the future goings on, the future ideas, and all the creativity and innovation that's coming out of Snapchat. And so because of that, I don't really want the upside capped in Snapchat for something that's not economically significant. But I look at this situation and I say, this does cap our upside, right? Having a short put already caps our upside, but now it's kind of like double capped in a lot of ways. But it's economically significant what we are picking up, the gimme that comes alongside that gotcha of kind of, capping the upside there. So again, you have to decide what makes the most sense for you. I'm just kind of, showing you the way that I look at it. I'm just kind of going through the gimmies and the gotchas as I see them. And then hopefully you can take that information and blaze your own trail. So let's go ahead and let's sell the 6,900 call. Looks like 32.75. And by the way, we're not margin on this because it's going to offset the short put. So you're already margin on the short put. And so that's obviously kind of nice when it comes to, capital allocation and buying power efficiency. If you already have one leg of the strategy on, to add the second leg, the offsetting leg, I have a short put, I add a short call, there's not typically going to be any additional margin. We're actually getting a little bit of margin relief in this context. You have a short put spread on to add a short call spread, you're not going to be a margin on that. And so let's go ahead and let's push this guy out. The 6,900 strike for MES. There you go. We got filled at 32.75. Okay, perfect. All right, so we got MES on. Beautiful. What else do we have? What else we got to look at? We got anything else? We got look at Home Depot. Home Depot is hurting us. And so let's just go down the list. So MES, we did MES. Look at AMD holding up. AMD up $2.25 today. That's a surprise with the NASDAQ being down 200. So AMD is kind of a bright spot in an otherwise dark and stormy day in the market. Dell, obviously, up $6. That known flight to quality Dell, of course, makes sense. The known flight to quality, the Russell 2000, again, makes sense. Dell up 4% on the day. And if you're brand new to the show, that's a very mediocre attempt at sarcasm. Neither of those things make sense. They make no sense at all. But for Dell, I'm glad we made the adjustment. I think it was just yesterday. No, well, 2 days ago, because I was out yesterday. But that's good. Disney down. That's helping us. We have a long put spread on. Home Depot, we're getting hurt on Home Depot a little bit. That's most likely going to go out to pasture, and we're going to have to eat maximum loss on that guy, at about $10. But it's already marking there, right? It's marking at 977. So the most we can lose from this point forward is another 23 cents. Like, that's it. And we have 29 days to go on the strategy. And so it doesn't really make any sense to me to close this right now. We have literally nothing but upside. There's no additional downside left. We've already absorbed the worst case scenario with Home Depot being down to 324. Now, we needed up to 365 before we can start chipping away at this max loss. So the probabilities are clearly against us. We're going to need a Hail Mary attempt, Ryan Gosling style, to bring this guy back. Is that movie out yet? I'm not sure if it's out yet or if it's about to be out, but I've got 3 small kids, so I won't be seeing it. So you guys are going to have to let me know. We're just doing, what are we doing these days? Lego movies, always a hit. Let me think. Gabby's Dollhouse, because I do have 2 girls, and Eli's voice is often drowned out when it comes to the different things that might be on the tube at any given point in time. Let me think. Gabby's Dollhouse, Lego movies is a big one, and then we just went through. We're going through the Kung Fu Pandas, which I gotta be honest, man, like they do a really nice job with the kids' movies these days, like Kung Fu Panda, Despicable Me, like a ton of adult humor in there, and it's appropriate adult humor. It's just funny. It's very clever. And so I'm like, I enjoy watching these movies with my kids. And it makes me think back to like the movies I had to watch, like in the 80s. You're going to have to rip He-Man out of my dead cold hands. Obviously, unbelievable filmmaking, unbelievable storytelling. Dolph Lundgren, I think, was He-Man, if I'm not mistaken. But you watch it like today, and it's like, man, that's brutal stuff, man. That is some really brutal stuff. But when I think about an 8-year-old Jay Schultz, it was my whole world. I'm like, man, I had the He-Man sword. I was running around the neighborhood. Parents had no idea where I was. And so anyway, I digress. But the movies these days are not too bad. And so, all right, so what else do we want to do? We got Lululemon. That's not going to work. We'll leave it on, though. We'll see what happens. And then Micron, obviously, that's not going to work. But we'll leave that guy on, too. We'll see what happens. I'll leave them both on because, again, you never know, man. You never know. Let's just kind of leave these guys on. And then the last thing I do want to do, Snapchat down 11 cents. That makes sense. I do want to take advantage of, because I want to get to you guys, but I want to take advantage. And I see you guys, man. You guys are doing some work in the chat to push this out to more people. Man, I appreciate you guys so very much. Let's go into the NASDAQ because volatility is up today, obviously. Well, actually, wait a minute. It's not even up today. It's down today. Let me look at MNQ. So let's go to, so one thing, you may not know this. I haven't done this in a while, but you can always check the IVR of a specific symbol if you want to. Now, I'm not sure if you can do it with the futures, but I know we can do it with equities. And so if you want to know how the IV rank of a given stock is doing, you can actually look at the historical chart of the IV rank. All you have to do is type in the ticker, so QQQ, and then dot, and then IVR. So that brings you up, and then go to the chart, and it will show you like what the IVR of that ticker is doing. Now, I don't want to see a 2-minute. We're not doing intraday IVR scalps here on the show. I just want a daily. Just show me a daily deal. Is it up today or is it down today? Wow, look at that. It's unched. Wow, it's unchanged today. but it was up big from yesterday. So I think we'll still sell some premium, but apparently we had an opportunity to sell it much, much higher earlier in the day, just today, which is interesting because it's not like the Qs have rallied back significantly. Like it's not like we're back to green or back to unched or whatever. I mean, they're still kind of getting pretty close to the lows and, kind of making their way even lower here while we talk and kind of yammer on here for the show. But let's go back to MNQ. I don't want to do QQQ. I'd love to do QQQ, but I can't do it from a buying power standpoint. If I wanted to do something defined risk, then I could do something in QQQ, of course. But I kind of want to do something undefined risk. Let's really try to take advantage of this volatility spike. Let's go into the let's go to the end of April 30th. Let's do a 42-day cycle. And I'm kind of thinking, let's sell like maybe a 40 delta put. Like let's kind of cozy up pretty comfy cozy next to the stock price there. And let's see, the probability of profit is still really, really high, 67%. And so that's the beauty of selling premium. Obviously, that's what we hang our hats on when it comes to selling options. We're trading the high probability. We're trading the better than 50-50 shot. And obviously, you've got so many other things that are happening too with the adjustments we can do and the management. And then obviously, you've got overstated implied volatility and implied volatility typically being greater than realized volatility on average. All of these things are working in our favor. It doesn't guarantee we're going to make money, of course. If you've watched my show for any longer than a day and a half, you know that to be the case. Clearly, Lululemon, right? Micron, Dell, Home Depot. I've got plenty of examples for you guys. But let's go. Let's sell. This is the beauty of the futures options. It's only $2,800 to sell an MNQ put. And if I went to QQQ, it would be significantly more than that. And like significantly more than that. I'll put this on and I'll show you guys how much more it would be. It would probably be 10 or 12,000, I would imagine. Let's go ahead. Let's go into, it looks like 644. I'll do like 642. Just a titch under the mid price. See if we can get filled. All right, no takers at 642. Let's do, now it's 634. I'll do like 630. And we'll do, 630. We'll probably get filled. All right, so we got filled at 630. There you go. I got picked off on the MNQ, in the MNQ pits. Okay, fine. But go to QQQ. If I were to do a similar trade, like if I tried to do the same trade, right? 42 days away, same cycle, 40 delta put. I'll show you guys. This guy, okay. So 580 strike with margin, it's going to be 12 grand. That's what I'm guessing. I sell that. Okay, it's 11,000. So it's almost like I've done this before. I was a little bit off, but I was pretty close. $11,000 for essentially the same trade. The MNQ is a little bit smaller than a QQQ, but not that much smaller though. MES and SPY, that's essentially like a halvesies relationship. MES is going to be half of SPY, but MNQ is maybe like 75 to 85% of QQQ. Because the beta weighted delta on an MNQ is about 85, and the beta weighted delta on QQQ is about 100. They're basically going to be not perfect substitutes for S&P 500, but it's pretty close. And so it might even be a little more than 100 with the beta and such. But even still, you can see that the buying power differences are quite significant. And so that is why, I lean on the futures options as heavily as I do, because buying power wise and capital efficiency wise, it's a much better option, pun intended. And so, all right, let's go ahead. Where are you guys at, man? Man, look at you guys. I see you guys in the chat. I got to scroll all the way back to the beginning. That's crazy. All right, let's go to the surprise and delight that Josh has hand delivered to me. And so thank you there, Josh. Josh says, this comes from Joel James. What's going on there, Joel James? Friend of the family, part of the core position. So thank you there, Joel James. Appreciate you, my friend. Any sort of guidance on how much capital should be deployed on a given day? I know when IV pops, you want to put short trades on, but how do you decide how hard to lean in on a given day? Man, that's a great question. And I don't think there's a black and white answer. I don't think there's like a lock, stock, and barrel, like, okay, on a daily basis, I'm going to allocate X% of capital, because nobody knows what's going to happen next. Like, it's very helpful, and you can obviously turn to the Unlucky Investor's Guide to Options Trading to understand like some of the parameters that Julia and the artist formerly known as Anton, put in that book. In terms of like when the VIX is X, I want to have Y% capital allocated. I can't remember the numbers off the top of my head, but it gives you a nice framework for understanding, how do I want to layer into and what are my maximum points of overall premium exposure. But how you get from where you are today to that actual level, I don't know that there's a hard and fast rule because we don't know what's going to happen next. I mean, there's a couple of things that we know. We know that volatility doesn't like to live on the higher end of the range. We know it likes to live on the lower end of the range. So when the VIX is 20, 22, 24, 25, 26 like it is today, this is the time to sell premium. Right now, do you want to be at maximum capital allocation? That's your call. That's going to be totally up to you. And again, use the Unlucky Investor's Guide as a reference for, understanding kind of capital allocation. But in terms of how much capital you want to allocate on a given day, I don't have a hard and fast answer for you there, Joel, but I'll just say this. Experience has shown me in my own personal anecdata that I've been collecting for many, many years now. I don't have it anywhere, but it's all somewhere in my noggin. It pays to be patient. It pays to be gradual, and it pays to be methodical with how you do things. I don't think going in bazooka blast, like I'm throwing everything at it because the VIX is 25, 26, is a strategic way to think about layering in your capital. Now, you could find yourself, now maybe you start layering in at 19 or 20, and now at 24, 25, 26, you actually are closer to the top. But again, we didn't know what was going to happen. Nobody knows what's going to happen. I mean, you can look at VVIX and you can look at skew indexes and what have you, but I still think, man, a lot of times day to day, it's pretty random. Like it's pretty unpredictable. Like you don't, especially with all the things coming out from the administration and the geopolitical situation. I mean, it can all turn on a dime. I mean, the market just rallied. Even S&P's just rallied 14 points. Right? S&P, the Russell 2000 is about to be green. Like I don't know what happened, but King Trump may have decreed something to be so, and so let it be so. Right? And so when these things come out, right, and when these decrees hit the tape, you don't know what's going to happen. Nobody knows what's going to happen. And so, Joel, I would just do it, kind of gradually and methodically, and I wouldn't do it all at once. And so hopefully that helps a little bit. But let me see, can I surprise and delight somebody else? I think I can. I mean, it's my show, right? I mean, can we do that maybe? Let me see here. Let me see if I can find Oh, here we go. Rodrigo's in the house. What's going on there, Rodrigo? Hey, Dr. Jim, what's a good future to start trading Russell 2000 up $1? That's crazy, man. It's green now. That's crazy. If the whole thing turns green today, it's all just made up. Straight up, 100% just made up. And I love it. I can't get enough of it. And neither can you. Right? It's so funny. It's so funny. Rodrigo, hey, Dr. Jim, what's a good future to start trading? I traded SPX and equity futures so far. I mean, I think you're in the right spot there, Rodrigo. Great question. I mean, I would go MES. MES is going to be a great future to start trading because it's just going to give you, a feel for futures and futures options. And MES MES and ES are the most liquid of the futures of all futures. I mean, MES and ES are top of the totem pole. ES is a lot more liquid than MES, but MES is still really, really, really good. And so, I mean, it's way above Nasdaq. It's way above the Russell. It's way above other things like bonds. I mean, oil is obviously quite liquid, pun intended. But I would say the financial futures are going to be kind of number one when it comes to liquidity. So I would start with MES. Right now, I don't know what your account size is. I would say if you're going to do one MES, let me think here. Let me just do some quick math in my head. If you're going to do one MES contract, that's 50 beta weighted delta. I would probably, you'd probably want to have at least 20, 25,000 in your account. If you've got 30,000 in your account, then one MES, you've got about 1-for-1 leverage with the overall marketplace. If you've got 20,000 in your account, now you're a little bit over 1x leverage, but that's not crazy. Like you're not going in at 5x, 10x, 20x, whatever. And so I would say MES would be a great place to start. And obviously, if you have a lot more capital than that, then you could do other products, maybe even some minis. But regardless of how much capital you have, Rodrigo or anybody else that might be interested in this kind of this question or kind of going down this road with their trading, even if you've got 100,000, 200,000, 500,000, a million, right, 10 million, doesn't matter. If you've never traded futures before, I would start with the micros. There's just no reason not to, right? It's not a competition. It's not a race. Start with the micro. Start with MES, maybe some MNQ, although the liquidity in MNQ, because you asked about futures, not futures options. The liquidity in MNQ is very good. The liquidity in MNQ options is quite craptacular, as we've seen on the show. You've seen it live. I mean, it's bad. It's really, really bad. Russell 2000 is now up 8. This is crazy. This is crazy stuff. Look at the metals. Metals ripping. Everything's ripping. Gold's going to be unched by the end of the day. Don't even worry about it. But anyway, I would start with MES, and I would kind of go from there. And so, but let me go back to the beginning, man. You guys, look at you guys in this chat. You guys are doing some work, man. The algorithm is going to think that this is quality program. The algorithm is going to think that it needs to push this out to more people. So I appreciate you guys, man. I appreciate you guys so much. Let's go to the beginning though. Ordenu is in the house. Roster 2000 up 10. Ordenu, welcome back, Dr. Jim. I am trying to do this. Is crazy, man. Did something come out, Josh? Something must have come out. But I mean, it must have. There's no way. Look at gold ripping silver. What's silver doing? Silver over 72 now? 75? Where's silver at? Silver at 72? That's crazy, man. Look at this stuff. Well, Daniel, welcome back, Dr. Jim. I'm trying to do a NASDAQ position, but MNQ is very illiquid, and QQQ takes a lot of buying power. What gotcha should I choose? Okay, no. So again, as I said, MNQ is very liquid. And I know you just got started with futures, or maybe it was futures options. I can't remember. But so if you're doing futures options, then yes, I would MNQ. I would just stick with MES. I know you got started with MES. I would stay there. Josh says Netanyahu is alive. That's old news though, right? Is it? I mean, is that actually new news? Wow, that's really, really wild stuff. But anyway, I would do MES. MNQ, the option markets are not very good. I mean, it's doable, like it's reasonable or what have you, but I would go ahead and I would go with MES. And so I would just stay there for a while or Denu. Again, it's not a race, it's not a competition. You know, there's plenty of time. And so Sam L's in the house. What's going on there, Sam L? Doc, I hope your dentist visit went well. It did. Again, awesome dentist experience. Very, very thankful for that, of course. Because we all know that can go the other way. Like you think a Fed, and that Fed meeting was a snooze fest, man. Like that thing, was that not a snooze fest? Like I got home, I was on my way home from the dentist right around the time that the Fed kind of got started. And so I had a chance to actually listen to Powell's presser, which I never get a chance to do because I'm with you guys. Which again, I wouldn't trade that for anything in the world. But when he walked out and it was dark purple, like royal purple, like regal. Powell came out with the regal play. I'm like, yeah, this is going to be a snooze fest, man. Like, I need a little hint of green. I need a little tiny little hint of red to just kind of, clear the sinuses, but it was not to be. And so, yeah, that was a total snooze fest. But Sam L, we somehow managed to keep the market above zero, barely. iPod Touch has been calling it since St. Patrick's Day. Yes, St. Patrick's Day of 2023. Like, my man has called 27 of the last 2 drops. And so, again, I mean, can you get a higher batting average than that? Like, I don't know that you can. I mean, he's up there, man. He is 100% up there. And so let's see. Patrick's in the house. What's going on? Dr. J, I am 90% done making 23% of the AI agent, giving 50% of the dad B- level jokes for the algo. Man, look at you, my friend. And so I appreciate you so much. Thank you there, Patrick. Appreciate you so very, very much. Yes, I mean, you got to have your AI agents. You got to have your AI agents watching the show. Because they can do a bunch of things at once, right? That's the beauty of this, right? That's obviously, I mean, that's how this all works. Right? I see Laura's trolling me in the chat now. I can't pull up what it is exactly, but it looks like it's probably pretty solid. And so, yeah, everybody's all hands on deck for this show. Okay, that's some good stuff. But thank you there, Patrick. I appreciate you very much. Doc, I missed Uncle Jay's intervention. No tie, no hex code colors. I was on a date again getting Snapchat. 2026 is wild. It is wild. I did catch that Uncle Jay was like, he's staying on. Like, nobody even asked him about this. He just voluntarily like kind of, said, hey, I'm not going anywhere. Right. And when they asked, somebody maybe asked him if he would stay on as a governor on the board. And I'm like, man, I don't know if King Trump's going to like that. I don't know if he's going to like that at all. And so I was like, yeah, 2026 is wild. I mean, this has to be a simulation, man. There's just no other explanation at this point. Russell 2000 of 21. And so A Wills, shout out to my wife who I'm making watch Dr. Jim today. Man, look at this. Hello there, Mrs. A Wills. I appreciate you so very much because, and I don't know if you're a trader, I'm just going to assume that you're not, only because most of the time in most relationships and marriages that I've seen, one party is the trader, the husband or the wife, and then the other party is the support person. And so I'm going to assume there, Mrs. A. Wills, that you are the support person. And let me tell you something. Your job is so important. Don't you ever let Mr. A. Wills tell you differently. Right? Your job is critical. It is critical. It is crucial. He could not do what he's doing without you. Let me tell you that. Please hear me when I tell you this. Your job is so critically crucial when it comes to the success and the sustainability of what Mr. A. Wills is trying to do. So, Mrs. A. Wills, thank you for watching today. I really, really appreciate you very, very much. Russell 2000 up 26. And so, Wolf, let's go, Dr. Jim. What's going on there, Wolf? I appreciate you. Okay, so we got some Iran news coming out, apparently. I don't know. Again, it's all made up. And so thank you there, Josh. I can't keep up with that in the chat though, but I appreciate you. Wolf Wolf. Let's see. 0703 in the house. Cash Dubai crude. We're doing cash Dubai crude now. Surges past 170 per barrel. Yeah, that's totally made up. We're doing cash Dubai crude. I mean, I'll do some futures Dubai crude if you got that price. I might be interested in that. But yeah, that's even the S&Ps are green. Nasdaq is about to be green. Oh, it's green. Look at that. Oh my gosh, look at this. It's over. The war is over. The war is over apparently, and I have no idea. I think it just got started. But we'll see what happens. Sam Mel says, Doc, the Shifties and the Hunt Brothers are getting wrecked. What are we calling our local oil trader, bro? I don't know, man. What should we call our local oil trader, bro? We should call him something, right? I don't know. I got to come up with something quippy and clever for us there, Sam Mel, because I can only give you a B- effort. I'm going to need you to pull a solid B, maybe even a B+. And so, yeah, let me know what's going on, man. Market's going to be, we go and limit up at the end of the day. All right, let's go. And so Point B is in the house. Welcome back, Dr. Jim. I hope the dentist was gentler than the markets today. Great to have you with us. Yes, like I said, the dentist was amazing. Super positive experience with the dentist. Very, very happy with how everything went. And so, yeah. So thank you there, Point B. Appreciate you. E-Media, Dr. Jim, did you get any gold in your mouth? Glad to see you back today. No, not yesterday. But I have a gold crown on one of my molars in the back. And it's been there, man, it's been 25 years. And I think in the world of crowns, like this thing I've gotten more than my money's worth out of this crown. This guy put it in when I was back in college. So it's probably 2001 or 2002. My kids think it's like the craziest thing ever that I have gold in my mouth. They think it's like the craziest thing ever that I have a gold crown on one of my teeth. And so they think it's really, really cool. Like, Daddy's got gold in his mouth. I'm like, that's right. And so if things ever get really bad, we can at least turn to Daddy's crown to kind of get us through to next Friday. And so let's see. Ramsey's in the house. Welcome back to Doc with Theory to Practice. Awesome show. Appreciate you, my friend. We missed MU earnings yesterday. Yes, we did. But we didn't miss the opportunity to light a stack of cash on fire. We were still able to do that quite successfully, I might add. And so Sergio's in the house. Let's go, Dr. Jim. What's going on there, Sergio? Appreciate you. Sam L. The Doc has spoken. Also, the algo do the opposite. That's correct. Did I do any? I didn't do any binary trades today, so we did regular trades today with MNQ and such. And so, I mean, you should probably still fade those, I think. But man, look at this market. We're all the way back. I can't believe it. Boomers are unchanged. Boomers are even green now. Unbelievable. And so D Gas has silver bottomed. I don't know. I mean, it's back up to 72.5. That's quite a rally, man. Like, if you look at silver, that is quite a rally off the bottom. And again, I'm no technician, right? I'm no technical analysis professional, clearly. But man, that's quite a rally off the bottom. Now let's see what happens over the next 2 hours, before the futures close at 5 o'clock. I mean, if it keeps pushing higher and this thing clears 73.5, whatever, that's going to be quite a rally off the bottom. And gold's rally off the bottom is even more impressive, in my opinion. I mean, it doesn't look as impressive because of how far it went down, but it feels a little bit more impressive than silver's. I don't know, maybe not. Maybe silver is actually a little bit better now that I look at it. But let's see. Danish Dynamite's here. What's up there, Danish Dynamite? Appreciate you. Samuel, I'll go cross-checking Doc's trade with iPod Touch. Final decision pending. Yes. iPod Touch in the house. Man, I appreciate you. Or is he in the house? I don't know. But the spirit of iPod Touch is in the house. But now that we're on, I'm not sure. I'm not so sure anymore. Peter Leger in the house. Once the dentist finished with Dr. J, gold tanked. Seemed like was only up to fade, Dr. Jim? Maybe so. But yes, it may have been timed with my cleaning yesterday. That's very, very possible. But I'll tell you what. So I got a water pick about 3 months ago. I am obsessed with this water pick. How many people, where are my water flossers out? If you're not water flossing, I am telling you right now, you are missing out on an unbelievable experience. First of all, it's going to take you a little while to figure out how it works. You're going to spray all over your bathroom, so just get ready for that. But once you kind of get it dialed in, like once you kind of get a rhythm in place for the water flosser, man, it's so enjoyable. I do it like 3-4 times a day just because I enjoy doing it. And so let's see, Joel James. Oh, there we go. Joel James, I appreciate you, my friend. I got you on the surprise and delay earlier, so thank you, Josh, for bringing that to our attention. Let's see. Point B, drilling portfolios, hoping to land well on a live show. Yes, maybe so. Let's see, Jared Kramer. Bulls haven't had a celebration day in 2 weeks now. It has been a minute. It has absolutely been a minute with the Russell 2000 up 37 on the day. And so maybe today is the day. I mean, they are pushing them, man. And we still have, an hour left before the close. Man, they are pushing them higher. And they just, man, like I said, it could snap back quickly. Now, maybe this is just, a bull trap wrapped inside of a bear trap, wrapped inside of the bull trap's bear trap from last month, kind of like a bacon wrapped date, right? Could very much be like that. But I don't know. This could be the beginning of something. I don't know. Only time will tell. And so let's see. Robeck Strom is in the house. What's going on there, Robeck Strom? I appreciate you, Jared Kramer, for the algo. I appreciate you so much, my friend. Thank you. You're doing some work out there. I appreciate it. The algo appreciates it. Everybody appreciates it. Let's see. Mass liquidations 0703. Yeah, maybe so. Sam L, the open P&L bros are back, posting unrealized gains like it's realized profit. Yes, like any good P&L open bro would do. That is correct. And I see Junior Mac is here for the algo. Appreciate you. GP, the game changer, is here. Brian is here. Man, Steve Aguilera is here, feeding the beast and feeding the algo. Man, I appreciate you. BDH, N1C, Griffin Jones, I see you guys, but I got to run. We're done with the show. Look at that rally back. Russell 2000 up 40. That's crazy stuff. But I got to run. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hey everybody, Tim Knight. Wow, another crazy day on our hands. We were deep red until about 20 minutes ago or so. So let's just back up a little bit to that. There is a level on the ES which has been firm support. 6616, I would say. We're going to do the hand thing again. It's just been like bang, bang, bang. And there's a enormous rounded top above that level. And I've been hoping, for obvious reasons, that we could break it. And today, on two distinct occasions, it just went conk right against it and then bounced. And then, like I said, about 20, 30 minutes ago, some kind of news came out, which has spiked the market. And at the moment, we are green across the board. everything. The small cap is the strongest, about 1.5% on the RTY. And like the YM is unchanged, and the ES is up a few hundredths of a percent and so forth. Not sure what the news is. Doesn't particularly matter at the moment. If and when this Iran thing, let's just say goes away, great. That's great. I would love that for a couple of reasons. One, who wants war, right? Secondly, as a trader, I'd rather not be at the mercy of like whatever happens next. There's so many variables, so many uncertainties. Just good old FOMC meetings, earnings reports, economic data. Hey, that's great. That's my bag. War, no thanks. So I'd be great if the fog of war could just lift. But we've got a big pop right now, which, it's not like we're up 3,000 points on the Dow, but we have turned green pretty much, and a lot of this selling dissipated, and that support is just holding like crazy. Let's jump into the charts. I'm sure I'll think about things to say. By the way, I hope you can hear me better. Usually I have put my mic like out of the visual here. And I don't make a lot of habit of like listening to my own shows, but I was listening to it yesterday. It's like, geez, it sounds like I'm like the Tidy Bowl man. It sounds really echoey. So it's a little ugly, but at least maybe you can hear me a little bit better. So there you go. Aesthetics be gone. So here's the ES. We've got this nice top right here. As you can see, we've got a hammer down here on the daily activity. And if there is some, everybody's surrendered and it's great news or whatever, we could rally, but the closer we get to this rectangle, the tougher it's going to be for it to just slide right past it. So that top is pretty strong. For my own sake, I usually kick myself for getting out of things too soon. A couple of good things did happen. Before that news even hit, I decided, I'm just going to take the profits on the Bitcoin short for now. Just dumb luck. Nothing but dumb luck. And if we had plunged, I'd be screaming at myself. So, phew, got out of that one. And then the cubes and the big ETF positions, I tightened up those stops so much that they got stopped out right quick. So, lightened up considerably based on all of that. Although still on a bunch of little positions right now. The big event news yesterday was Micron. MU. And it was really interesting to me at the time because Micron came out with the results and they were spectacular. Revenue way above projections, earnings way above projections. Everything was just blowing the doors off. And they fell. And that's interesting because, it's supposed to go up. And when you just have fantastic earnings and the stock still slumps, that tells you something. Sadly, SMH, SOXL, they started off weak, but they've been fighting back all day long. So no victory lap yet. But Micron, which has been incredibly strong, stock hundreds and hundreds of percent over the past year, at least on really good news, it can ease back a little bit, showing just how richly valued it is. NVIDIA, which of course is I think it's still the biggest stock in the world. I'm not sure. Maybe Apple is now, but it's multi-trillions. Still grinding away. It's been doing that since July. And you can see that horizontal there is just playing jump rope with it, back and forth. So, it's become a really dull instrument unless you're selling options against it, I guess. As I said, SMH started weak and it's up right now. Not quite 1%. We're basically near the highs for the past few days. Broadly speaking, we've broken that wedge, and that's the important part. And if we step farther back, we can see that there might be a very good-looking reversal top going on. It's not complete yet, but we can see the boundaries of it. So, if and when we slip below the bottom of that rectangle, that is a beauty of a topping pattern. I'm jumping the gun somewhat because I do have SOXL puts, but they got some months on them, so we'll see how that works out. As far as the cubes go, they're down a few hundredths of a percent right now, about 0.1%. We got lower today than we've been since back here in November. So that's kind of interesting that we're that weak. The top is not complete yet. Just as with this SMH, the top is not complete. We've been grinding away for many months, and it will require a slip under that rectangle's bottom to make it happen. But it's a good looking pattern, and it's a big pattern, and we might well get there in the weeks ahead. And I gotta emphasize this, it's not like war. I don't want a war. I'm not dependent on a war. It's just, it really messes things up. It muddies the water tremendously for traders, because it's just, you just never know minute to minute. I mean, even now, what if you had put all your stakes upon the notion that we were going to break below these big topping patterns, and then you turn around and then we spike dozens of points out of the blue based on some speech, you can be a meat grinder. As far as the diamonds go, down a little bit, 0.17%. Not the cleanest pattern in the world. There's a lot cleaner ones out there, but it has been more or less grinding lower for well more than a month now. As you can see, just a series of sharply lower lows and lower highs. The Dow Industrials have shaved thousands of points off of its 50,000 plus peak. But as I say, things like the SMH, like the cubes, like the NQ, have sensationally clean tops, which are not quite complete. Whereas the spider, I do think, is much closer to that completion. As I said earlier, 6616 is the crucial level, because that has been as far as things have gotten beaten, like down in November and so forth. The small caps have been stronger than the rest. They're up more than 1% right now. Although this too is, these are very ephemeral gains right here, I think, because we've got a very nice clean reversal top here. Here too, we've been lower lows, lower highs, the very definition of a downtrend. And sure, it's fighting back, and it may well get back up to the vicinity of this rectangle. But when it does, I think it's going to exhaust itself, because the mere lack of new fighting does not mean everything's just great again. Everything the war could stop right this second, and all the stuff we were dealing with before the war is still very much there, and the damage that's taken place in the 3 weeks that we have had this war is still very much intact. From what I understand, I've heard many experts say that it's not like the war ends and like an hour later the oil's flowing again. It'll take months and months for the infrastructure to be rebuilt and things to kind of normalize once more. I only have one energy trade. I shorted XOP earlier today, before whatever happened just happened, because it had this really nice shooting star pattern on it. So gave it a whirl. Not a huge position, but it's, I'll show you that in a sec. XLE, the ETF, still showing a gain up over 1%, lifetime high. So in spite of whatever news just transpired and the crude oil slumping, XLE is still very strong. As I said, I did tiptoe into my only energy position, XOP. That is a beautiful shooting star pattern. What I mean by that is this long shadow for the candlestick and this teeny little body right down there. So that's looking pretty nice, because this has been just a tremendous move from around 124 up to around 175 or thereabouts. So that should be a sign of exhaustion. Caterpillar, here's some odds and ends from the short side of things. Most of my shorts are still down, I'm pleased to say. And I kind of love this sort of housekeeping mode. It's so much nicer than entering new positions or what have you. Just kind of go around and just tidy up here and there. But here's a few of those items I'm short. Caterpillar is one. This has been breaking down so. Had a bit of a recovery, but I do think that I haven't drawn a trend line here, but we have probably topped out on this for a while. CRWD, which is CrowdStrike. This even now is down a couple of percent. Beautiful little top on that one. And so we fell hard, big recovery. And now I think we're starting to slip lower on that. Dollar Tree, DLTR. Nice drop on this one, about 1.5%, coming below the pattern I've highlighted there. So three nice red bars in a row on Dollar Tree. DT, which is Dynatrace. This is down almost 4%. And if we can back away from here, you can see we've got a multi-year topping pattern on this one. So I like the looks of that, DT. Futu, F-U-T-U. Show this one almost every day right now because it's, hello, rectangle. No, sure, just go wherever you want. That's fine. Good heavens. Okay. Yeah. Zoop. Put you back where you belong. There's the more or less the pattern on that one. Nice drop on that. Nice gap down on Futu today. So yay. Another one we've talked about a lot, TIGR. This was up FinTech, and we're down again, about 4% on this, following this this breakdown. Here's something that's much bigger, and I haven't mentioned hardly at all, Tesla, TSLA. This one has really been having a bad time of it. It had its lifetime high right here. I was around 500. And as you can see, it has been down and down and down, down, down. So it has shaved off approaching 25% of its value. Pretty big deal. And of course, the peak trillionaire chatter with Elon was around here. And of course, a big component of that's going to be the SpaceX IPO, which is supposedly going to come out in June or thereabouts. He wants to beat Anthropic and OpenAI to the punch and so forth. So, but Tesla, which is an important, probably the predominant constitution of his wealth, has been slumping quite badly. Axon, another good one. Down today, a little over $5. I did cover some of this a couple of days ago because it had just been like doink, 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 doink like that. But I've held on to a chunk of it because long term, I think it's still got plenty of perspective downside. BDN, Brandywine. This is one we see a lot too. Down, not quite 1%. And let's do a few more. Remember this one, WRD, this is We Ride. I mentioned this one a few days back. This is the Chinese, I think they make semiconductor for autonomous driving. And this is one of those funny ones which is at lifetime lows, but I'm still short because it's got such a nice reversal pattern to it, or topping pattern. All these terms are inappropriate because it's at the bottom. You know, topping pattern, reversal pattern. It's not doing any of those things. It's just sinking to lifetime lows. DKNG, which I always think of Donkey Kong, but I'm a child of the 80s, so you'll have to forgive me for that. DKNG, DraftKings is down about 0.75%. Fantastic top on that one too. And Netflix, which I got a whole bunch of puts on, is slumping nice today, over 3%. I took advantage of this big rally right here, bought a bunch of puts back here, June puts, and they're falling nicely too, so huzzah. So just to wrap things up, the spiders are off a little bit, not quite 1/5 of a single percentage point, but that is a very, very pretty top we've got to work with there. We've been, in fact, I'll just drag that rectangle down a bit. We'll kind of put a line in the sand a little more aggressively. So rally or no rally, I do think that incredibly the bears are actually in the driver's seat. And I just want to emphasize, even though I have no position anymore, although I'd love to get shorted again, Bitcoin is key. And so we're above 70,000 again on this. We had slumped some thousands on this. So peak upside, I think, is around 81,000. I would prefer to see it not get above the bar from a couple of days ago. Long term, my target on this is something like 35,000. And it is the bottom of the hour. So I'm going to find out what that news was. So I'll see you here tomorrow, and I hope I sounded better for you today. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, we are back for the last call, and my God, how things have changed. E-mini S&P 500 futures down 11. It was a big nothing day. 66.65. Oh no, if we close at 66666, that'll be scary. NASDAQ down 60. You got the Dow down 145 and the Russell actually up on the day, up 17. We've had a huge intraday range today. The E-minis have traded about 80 to 90 handles to the downside today. You've got oil selling off a bit, 93.93, down about $1.50. It got as high as 100 in the overnight session, 92.10, the low of today. We just hit that just about 30 minutes ago. Volatility futures were as high as 26.11, as low as 23.40. We're sitting right at 23.95 here, near the lower end of where we've traded today. Bonds have also rallied. Bonds up 14 ticks above the 114 handle. We were trading them in the 113 handle earlier this morning. Gold hasn't had as much of a move higher, but is bouncing a little bit, down $250, about 5%. Silver a bit stronger, only down 7 now. It was down about 15% at one point today. And even Bitcoin is gaining in on this a little bit of a rally here, only down 700 on the day. How do you feel, Chris?
Lil Wayne put out an album a number of years ago called The Carter 3, and he left a song off of it, and it was called I Feel Like Dying. Does that sum up my mood as someone who's long gold?
Well, okay, that's fair. That's fair. Now, I am with you in that boat. It's been sinking. I feel a little bit better right now. I feel like this is I was talking about it this morning. It kind of felt like when we had the huge down day the last time we squeezed much higher. You had vol expanding into the down move. It kind of bounced back to a more reasonable level after that. Is that not the feeling that you have? Do we not share that feeling?
No, That Feeling wasn't the title of one of the songs left off of Lil Wayne's album, so that's not how I'm feeling, Nick. But, hope springs eternal here. I think the headlines this afternoon, they're important. I suppose the market's coming in, at least crude oil's coming in, the market that we're watching right now. There's been this escalation game the past 2 days where the U.S. attacked, or rather Israel attacked, an Iranian gas field that the energy produced there is used explicitly and only for Iranian domestic consumption, which then triggered this response overnight to Qatar by Iran. The missiles that hit the Qatari field are knocking off 17+% of Qatar's LNG production for at least the next 3 to 5 years. $20 billion worth of damage at a facility that took $26 billion to produce and set up. That is 3.5% of global LNG supply. So this was earlier today escalating down a dangerous path. Trump, of course, has pushed back against this, saying that he didn't tell Israel to do this. Netanyahu's out in the last 10 minutes saying that America wasn't on board with doing this, and they are going to avoid civilian infrastructure moving forward. So again, a de-escalation here. Does it mean we're out of the woods by any stretch of the imagination? No. But it's a nice set of events here to give us a little bit of optimism into the end of the day. I'm not buying this low in markets, my friend. I'm sorry. I know you're trying to get me on board. But
I tried to all day today. I told you, this is our glory moment. It will sing songs of our valor.
We will, my friend, but not yet.
Okay, all right.
The time for fear is still later. We have yet to get there.
If you did, though, and just to go back to, you mentioned volatility in oil, but just market mechanics that are happening today. Oil volatility coming in hugely. 92 here, we're 30 or 40 points off the highs of 120. Volatility on the upside has come in significantly. If you've been trading anything CL, MCL, USO, if you've been trading any of those, that upside skew, especially with the units that we've been talking about, selling, kind of more upside than downside, you're getting paid right now. So it's decision time. I took off some short delta that I had on the upside in both CL and MCL. If you've been trading that, it's decision time. I'm not Bastradamus. I don't know the future here. That was a Nostradamus, like Batstradamus. I don't know. I don't know the future here, but you're getting a nice move today. Same thing with if you've been long delta and you added to long delta this morning into a VIX that was, what was the high in the VIX? Volatility futures got to 26. The VIX was at 27.50. And you sold puts or did call diagonal spreads or anything like that. Right now is decision time. You're probably up 10, 15, 20% of the max profit on those trades that you had on, not yesterday, today. It's decision time. I've taken those off the table. So I've taken off some of the long delta. I still have some via NASDAQ futures and some more upside kind of convexity plays, mostly diagonal spreads / crab trades where I'm short front volatility, kind of long gamma and delta in the back. But this is what you want from markets. You're right here. You've had expanding volatility. You've had contracting volatility. You've had prices stay pretty much the same. It's about as good as it gets if you've been trading premium, short premium specifically. And now is the decision time. I don't know the future. I don't think anybody knows the future, but now is decision time. Make your bet.
There was a little to confirm something in the oil market that's happening here. It's not just that prices have come in over the course of the session. Interestingly enough, we're seeing the curve get a little bit more backwardated as the day goes on. And I think that's important because there was a turning point last week where the market starts getting out of backwardation, but the curve is flattening out because folks are saying, oh, I should start buying oil like for June, July, August expiry. This disruption is going to last a little bit longer. And so in the back half of today's session, the inverse of that's occurred. Oil's coming in, and it's coming in for some of those months that are a little bit further out in time, which is something that you'd like to see if the market's buying the de-escalation story here, Nick.
Yeah.
I'm not.
Okay. That's what makes a market. I like
that's what makes a market.
I like how fast it's moving. I mean, I don't know. The the 3 weeks out, 4 weeks out, 4 months out, 4 years out trade is hard for me. But watching these things move, and I'm glad I didn't even look, I have not been watching the curve, but we've talked about it a couple times last week and yesterday as well when we were on the show. That sort of stuff, that is opportunity. I've had people email me about doing like calendar spreads or reverse calendar spreads on these sort of products on like a CL or an MCL. It's not a defined risk trade because you're trading different products, but that's the sort of like that opportunity doesn't come all that often to where you're thinking about that. And this market is giving you opportunities to do things. It's been amazing.
It's been a two-way market for sure.
Yeah.
Gold and silver probably is eating at my confidence in other areas right now.
Sure.
But as far as I'm concerned, Nick, you think they're going to declare war over this weekend? I'm still convinced it takes two to tango. Either way, though, is there a price level in the oil market that you would look to that would make you feel like we're in the clear? Is there an IVR that you're looking for where you say, oh, a 30 IVR in CL? This thing is done. Like we can get loaded to the gills in a variety of the end of the war trade, so to speak.
I think tomorrow will be very telling. I feel good about, I don't know how to phrase this, but I think over the last week where we've kind of stayed in this 85 to 95 range, I think it's been kind of telling you that this is the higher end of, this is the fear spot. We had kind of the pendulum swing to 120 and we've come back and we're now at like this spot where it's elevated and it's spooky and it's scary and volatility is very high, but it hasn't sustained anything above 100 for any period of time really since then. And so I think from a oil perspective, I think that's kind of our cap. And so I still think the short vol trade is in play. I don't think you missed it. You got a 90 IV in oil futures. I think you'll get swings in volatility on much smaller moves. Like if oil rallies $2 or $3 overnight, you're going to see that like the option that I closed, for $1 less just now is going to be $1 or $1.50 higher on a move that basically gets you back to flat. Like the volatility is still going to expand until this is over. I think tomorrow is going to be super telling. If we have oil sustain here or drift a little bit lower and volatility gets smashed tomorrow, like similar to what we're seeing right now, let's put a number on it. I don't know, let's say 85 on OVX. If you see that into tomorrow and a market rally, I think you can call this thing. And we're back to the good old days.
Wow, such confidence. Yeah, the good old days of AI, SaaS apocalypse, and private credit concerns bubbling up.
Listen, I'm not saying call it as in like everything's over. The war will probably continue. Will likely continue. But I mean, from a risk perspective, from a market perspective, it seems to be getting to the point where we're on the last leg.
I hope you're right. I have, volatility churning around here. You can see the market's not willing to take it up to the next level, right? We're sitting a cap in volatility futures at 26, 27 before we pull back in. And we're back down into 23 now. We haven't made the leap over 30 on a substantial basis, a significant basis in the VIX. So there is this sense here. People are holding out hope, Nick, right now. That's part of the reason why I'm not so confident.
I think the sentiment is about as bad as I can remember. I don't have a single person that is bullish. Not a single person. All morning today, war, inflation, Powell, all this stuff. Everybody is calling for 20, 25%.
What's wrong with Powell? He's never leaving.
I know, it's good. We got our guy. We got our guy. I don't know. I guess I don't know.
People think we're sarcastic. You and I love Powell.
He's been great. I mean, he's been great.
Yeah. Yeah, Nick, maybe listen, maybe my macro brain, my politics brain is getting in the way of my decision making, which happens from time to time. I'm a person.
And you got sectors, you got things moving today that are bullish. I mean,
yeah, telecom, XTL, look at that. I mean, if you want to be a bull in the equity markets.
Come on, what about the semiconductors? I mean, you had all the Micron stuff. The stock's basically unchanged. I mean, this is a nothing move. You have the semiconductors themselves all catching a little bit of a bid here. The AI story is still there. NVIDIA was kind of lower today. Some of the mega caps, you're talking like Meta down 9 or 10. I mean, it's the same thing we were seeing yesterday. Like, yeah, it's a down day. It's a normal down day. I don't see the panic. And I think yesterday we had our first underwater close. That was the first time in the last couple weeks where we've closed at the low of the session. And then we woke up today, you got vol spiking, you got a little bit of a washout. We had a washout in the morning that took us down, 80-ish, kind of to the low of the session. And then, if it doesn't get, I feel like this is the most hedged market participants have been. Like, I feel like with the way volatility has been sustained, everybody, and just the emails I get and the chats and the comments and the tweets and whatever, everybody's looking for this to be doomsday. And I just don't think it can play out like that.
That's so funny because the comments that I've been getting are people chastising me for being bearish.
Well, that's because you're my bull. You're my, you're my guy.
It's so much easier.
It's so much easier being optimistic.
I'm doing this whole Ilya thing. I am so stressed out. I'm sick. I'm eating Tums for like 3 meals a day.
I mean, listen, I still curse you for my gold and silver position, but it's okay. You keep size in check.
I'm cursing myself too. I mean, look, the technicals, at least Ilya and I were pointing this out. Like the technicals look terrible the other day. I still have 40 odd days into my current position, so I'm a sucker. Yeah. Ilya was short, so he's made out, much better than I have on this. So at least there's that silver lining. But Nick, I think the big picture here is if tomorrow is the day that really matters. The past few weeks since this started, it has followed a very familiar cadence. Markets are up a little bit on Monday, recovery. Tuesday, Wednesday, they peter out. Thursday, bad day. Friday, we close near the lows as everyone's afraid going into the weekend. That, I think, is going to be the important development. If you have another underwater close like we did yesterday, it's a totally different sense than what we're feeling right now. If tomorrow we're finding ourselves with a normal down day where it's like 0.2% and, we've recovered like 2/3 most of the day's losses, you're going to feel a little bit different and say it's not so bad. If oil volatility keeps coming in, then you think like maybe we've already started to benchmark this risk at its current levels, and you can start to digest it. But I'm still watching the supply chain issue. I want to see some tankers go through the straits, like a meaningful amount of tankers go through the straits to suggest this is over. And there's just no traffic still. So every passing day, the problems in a variety of sectors get a little bit worse, and that the kink in the hose, the supply chain, it grows bigger and larger and more difficult to dislodge and get things flowing normally again. Yeah, Powell said that yesterday, Nick. He didn't say the transitory word, but he did say that the Fed recognizes that inflation stayed around for about 2 years longer than they anticipated.
Was that a surprise to you, Chris? It wasn't much of a surprise to me.
I think it's a surprise, but if you're using that as a lens with which to view the future, it almost says the Fed is not going to understate or underestimate how long inflation could stick around if this war continues for a prolonged period of time. So the market gives us something fun today at the lows, Nick. I don't know if you noticed. There was a greater chance of a rate hike than a rate cut at every meeting from now through March of 2027.
Wow.
Ever so briefly.
Wow. And now you got bonds rallying. The speed is amazing. Two quick little PSAs before we keep going, but triple witching tomorrow. So you have SPY and the diamonds have dividends. If you have in the money calls, I don't think that applies to most people because we've had quite a little bit of a downside move here. So right now is your last chance to clean those up. So do that if you haven't. We also have tomorrow Fast Market, and we have a Fast Market right now, but put your trades in for us. We'll be happy to talk about them tomorrow. That's tastylive.com Fast Market /Fast Market, tastylive.com /Fast Market. Put your trades in so that we can put some new positions on, because I need some positions. Took some risk off. I'm excited to see what you guys come up with. Bullish, bearish, neutral, doesn't matter, anything.
You mentioned risk on, risk off. I did have a short-term oil call spread on here that was at 84% max profit, so I just took that off the 90-92 call spread with 1 DTE. I'm going to look for more ways to get long. 94.25 here. We're making a nice little bounce here off the lows. What's another squeeze to 100 between friends?
I don't think that's out of the realm of possibility. I mean, volatility is telling you that it's in the cards. If we get that, I'll be on the other side of your next trade. Be selling that vol.
Yeah, at 18 days to expiration, there's just not a ton of volume in the strikes I'm looking at right now, so I may have to tinker with this. That is one of the issues here, because when you go into one of these markets where it's a weekly expiration, one of these odd days, you find yourself looking at a market that's like 50, 60, 70 cents wide. And that if you want to get out of that on the other end, might be difficult. So I'm going to tinker around here. I need more long oil. You want to take vol in and give us a chance to reload? Please and thank you.
There is one earnings after the close, say FedEx. If you have an itching to play earnings, I don't know how you could in this market. A lot more liquid ways to be trading volatility here today. Another point I wanted to kind of throw out to you, if you were watching volatility futures this morning, we were pretty decently backwardated here. We've kind of flattened out, about as flat as it gets here. You got 24% implied volatility, the front futures, back months sitting, mid 23s. What would you say if tomorrow volatility comes in and we're back in contango? How would that make you feel? Is that not warm and fuzzy enough for you? I feel like I need a 150-point rally in gold for you to be warm and fuzzy again. That would help.
It would help. Yeah, no, I would feel a lot better. Nick, I think so here's the thing. We're working on a series right now that's going to be going up to our YouTube channel about how this isn't just an oil story. Okay. This is a physical supply chain disruption that has a molecular component to it because of everything that goes through the Gulf. It's a severe supply shock, and the ramifications we're still feeling. I mean, I look at what happens here in North American hours, and that's all nice and well. But when you look at the Asian markets with each passing day, and jet fuel spreads continue to push new highs, and the Brent, WTI spreads blow out, when those traders in local markets are assessing like their domestic needs and their company's domestic needs on a day-to-day basis now. U.S. recovery for a story that's going to mainly reverberate in Asia first and foremost. I have my doubts. You've known me for how many years? When have you ever seen me like this?
Never.
There's because usually everything else is passing by. It can be resolved. It's pieces of paper. But there's a kinetic chain reaction here where things stop and they can't just restart. So I'm very much operating out of the 2022 playbook. Rallies in stocks, sell rips, buy dips in commodities. The growthy things, not so much, but wheat, corn, soybean, they all look great.
I don't mind that. I don't mind that thesis.
But I got a spin to this too.
Okay.
I do want some equity exposure here.
Okay.
And if we're going to find any, I'm putting together some puzzle pieces. Okay. One of my neighbors is my county legislator, and I talk to her quite often just because I like to know what's going on. There was a conference a few weeks ago down in DC for the National Association of County Legislators. And one of the items of discussion, which Lee Zeldin, who is over at the EPA, brought to the floor, was that the Trump administration is trying to accelerate timelines for nuclear reactor deployment, SMR, small modular reactors, to about 2 weeks from application moving forward. Okay. And so then I was looking through the news on this recently and looking through all the public information that's out there. Lee Zeldin was on Fox News 5 days ago, talking about this very thing here. So given the fact that the Trump administration has done things like remove sanctions on Iranian oil, perhaps as a news item today, to help reduce costs, what would be better to help stimulate American energy independence and breed some faith, some belief that we can burden the cost of the war at home by announcing something that's like a big bang in terms of domestic energy policy. And so I am going to be using my time if I'm going to be dipping my toes in the market. It's a very speculative. It's just an idea I have. I'm just thinking about how these things go. But hey, the BTU idea for Peabody, right? That's worked out pretty well since last summer, and it's a $37 stock. We got long operating around 16 for the first time.
Yeah.
And it was near $40 today because, again, alternative sources of energy. The nuclear stuff has not performed the same way as the coal. And I know it's because it's more speculative. But on my shopping list, I'm looking at the nuclear names. I'm looking at the companies that would build these SMRs, assuming we have a new DOE program that comes down the pipeline. So my trading philosophy is like, look for where the dominoes fall later on. I'm looking for opportunities in, if there's high IVRs, and maybe like an Oklo or an
CCJ, URA.
Exactly.
Like ETF.
That's where I'm bottom fishing first, because if my thesis is correct that this is an energy issue still, then those are the names in a broad market rebound. You would think that they would rebound anyway, but these are names that may have a little bit more upside convexity and help me paper over some of my losses in gold.
Okay. I kind of like that. I'm trying to set something up in CCJ. That's probably the most liquid of the group. I mean, URA, I think it trades, but sort of by appointment. Not the most liquid thing. I'm gonna do a little call diagonal spread. I want to be earlier than you, Chris. So I'm gonna get this on now, and you're gonna tell me when it works. Okay?
No, I mean, there's SMR, Oklo, NNE, BWXT, which BWXT, they produce the reactors and the components. There's GE Vernova, Fluor. You mentioned Cameco CCJ, which is uranium mining, but also, Chegg, Constellation Energy, CEG. They have pretty decent volumes. So there are a number of ways to go about this, from utility and power generation, including one that did really well in recent years, Vistra Energy, which has been a big AI power play name along the way. They could be part of this equation too. So what's held up the past few weeks is my question, right? That stuff I would imagine is not going to suffer on the other side of a market rebound. And if it's energy related and industrial energy related, in terms of reducing dependence or concerns around a Strait of Hormuz closure, that to me that draws my interest right now, finding some opportunity there.
I like it. I'm going to keep that in mind. I mean, those stocks, they've got some volatility to them, like an Oklo or SMR has gone crazy in the past couple months. So when that time comes, I'll definitely be interested.
And I'll do you one better. I just forwarded you my list. We're going to put together a report on this, but I just forwarded you the list I had sent around earlier today to a few folks.
See, that's
about these names that I'm looking at.
Thank you, Chris. I appreciate that. It's a true friend right there. Sending around some alpha. We appreciate it.
Or a lot of beta, given how I perform. and like beta, I should say beta male, excuse me. Beta male.
No. You're an alpha. We got people in the chat saying they suspect that you'd be like the head of the HOA. Like you'd be on the HOA board, like you're like one of those guys. Or like you'd be, what was
to dissolve it. HOAs are fundamentally evil. And I'd like to give credit to my father for joining an HOA, becoming president, and then dissolving his HOA.
I like that play. You should do that to
Free the people.
To my HOA. Free me from that too. That's our bell. E-mini S&P 500 futures end the day down 19, NASDAQ down 60 and change. You got the Dow down to 180 and the Russell up 16 here. Oil down at 94.26, just bounce about $1 from the lows. And volatility futures sitting at 24, just a skosh off the lows of the session. I have a feeling tomorrow is going to be a fun day. What do you think?
Can't get more fun than today, Nick, which is why overtime is coming up next here at Tasty Live. See you there.
See you in the morning. Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Hope springs eternal. It's Thursday, March 19th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here to take you through the next 25 minutes or so as we wind down the trading session. A rocky trading session again here, and rocky as in swing one way, swing the other, because stocks were down, breaking through multi-month lows here, at least in the S&P 500. Until Bibi Netanyahu made an appearance. Guess he's not dead despite internet rumors, which is a ridiculous plot.
Was that a thing? I missed that one.
Yeah. Anyway, apparently Israel's taken full responsibility for hitting this South Pars gas field in Iran, or a gas field that's mainly used to generate domestic energy production for Iran. And so by attacking it, it really does prove to be a destabilizing force within the country. Iran, of course, overnight had responded with a missile barrage against the Qatari gas field, which now, given the damage there, $20 billion of damage to a facility that took $26 billion to build. What does that mean? 17+% of our Qatari energy production is now offline. That's 3.5% of global supply. So there was a tit for tat playing out, but Trump insists the U.S. is not involved in attacking Iranian domestic civilian infrastructure, and Israel's taking full responsibility for it. And with that, we have a market that's calming down a little bit in the second half of the day. Oil was up near 100 again, closes closer to 94, now 94.35 here, Ilya, on the chart. The session high briefly was $100.48. We see that natural gas is still moving up. That is not getting the relief that our oil is, up another 2.5% with some of that Qatari LNG news. But stocks here, to their credit, they did recover. The S&P hit a low of 66.11 and change. It's now back to 66.60, so nearly 1% off the low. The Russell even managed to squeak out a 0.75% gain today. So, Ilya, in light of some of the feedback that we've been receiving around here for being too bearish and concerned about what's happening in the world, pray tell, please make the case for why today's market rebound in the second half of the day is nothing to write home to mom about.
I mean, hope springs eternal, sure. And as the great Soviet idiom goes, hope dies last. So when you look at this, here's what you see and here's what you don't see. You don't see a break of the range bottom. You don't see a break of that swing low there, at least in ESM contract terms, ESM 6. Sure. You also don't see a bounce. What you see is a test. And we don't know what this test will bring. We don't know if it'll bring a bounce. We don't know if it'll bring a break. I am completely sympathetic to the idea that somebody might want to stand right here and go, okay, we're testing the prior swing bottom from earlier in the month. The risk reward is such that if I go long here and I'm wrong, then I'm wrong by a little because I get out fast. Whereas my upside need not be crazy. Let's just get back to a retest of the rounding top neckline. Let's call it 68 and change. Let's call it 68. Let's not be greedy. Let's get back there. And then I'll get bearish again for all I care. But opportunistically, there's risk reward in trading a bounce. Okay, I can understand that logic. I can also understand that if you've been short this thing from the top near 7, nothing has changed for you. I can also understand that this is moving at a feverish rate because the headlines are what's driving it, and people are attempting to glom on to tidbits here and tidbits there. Nothing is to say that you have to be wrong quick if you're wrong. And the trend is down. And the war's not ending. So I'm inclined to say, if you were looking at this opportunistically, under normal circumstances, I could see it, but the risk that it busts through that support faster than you can cut your losses and make this make sense is significant. And so I wouldn't take that gamble. I would instead say, if this thing is going to bounce, let's get back to 68 and I'll have dry powder. So if I get a mulligan to get back into this downtrend that's going to continue ostensibly because the inflation implied here isn't going anywhere in a month or two or a quarter or two, and that means higher rates, which is the read through to this entire thing, I'll just sell at a higher level and be smart and not sell here. I would approach it that way if I didn't already have exposure, but I do. And it's from around 7 because I've been looking to be short against October's highs. And so for me, this doesn't mean anything yet.
I don't think it means much of anything either. That's a really nice, it's a nice headline and sentiment from Netanyahu here later in the day. Does it fix the fact that now 3.5% of global LNG supply is now offline for the next 3 to 5 years? Can't put that toothpaste back in the tube. About estimating how much damage was really done to pars.
Iran is a huge global Bitcoin mining hub, which is obviously very energy intensive. There was nothing in Bitcoin that would suggest supply shortages, that would suggest, Bitcoin, you might say, is a commodity, right? Certainly in the US, it's regulated as a commodity. And so were there to be a major disruption at a mining center, you might think there could be a reaction, especially since Bitcoin's cheap relative to where it's been, even relatively recently. It's gone down quite a bit. You'd think, oh, well, they are going to hurt the energy infrastructure in the place where the mining center sits. That's a meaningful supply disruption. Surely Bitcoin should do something. Not a thing. Couldn't care less.
Bitcoin
and so maybe not so
here.
much of a supply disruption then.
Bitcoin is a really interesting chart because you can kind of see how first off, if we were to just take the downtrend from the October high and go where we were back here in January at its highs, we're still very much in the throes of that downtrend.
Yeah.
If we were to, take something a little bit less severe and go like this and call it a false breakout, okay, you could see a touch here mid-month. You see another touch here on the way down in March. Perhaps that's the view. Either way, a downtrend of sorts remains in effect. That's not, I think, of disagreement. Just a resuscitation of some facts because the series of lower highs and lower lows remains. What's interesting is the scale, the way this particular pattern has come together. I could literally just copy this triangle here, Ilya, and it feels like this is a mirror image of the price action we had a few months ago in the context of the same downtrend where now, where did we run into yesterday and fail from? And day before, the lows in April 25, the 50-day moving average. And now we have another one of these triangles that looks like Bitcoin has held up better than other things, in fairness and credit to it. It's held up much better than many other things in the market since the war in Iran started.
Largely because it had a large sell-off before then while everything else was holding up. So you might say the anti-risk sentiment came to Bitcoin first. The tops there are October. So, and it's a little bit preceding the top in stocks. And while stocks were basically idling sideways between October and essentially the start of this month, Bitcoin was falling.
It was. It does give us a pretty firm line in the sand, though, I think that we have to work with. Not only do we have that rejection near 76,000, it does give you the rejection at the April 2025 lows coupled with that 50-day moving average. So, if we're trading at 76 tomorrow, you do have a fair amount of technical evidence to think a bottom would be in of some sorts. But on the other hand, that still looks really dangerous. That's still without a little bit more. I know you don't going to catch the exact low and getting to 76,000 is nearly a 10% rally from here, like 8 and change. But this is a bad looking chart. So, crypto, gold, we have to talk about gold. Gold is my entire personality on this show, Ilya. What the heck happened today? Tell me.
So, without really getting too deep in the weeds, because that's what macro money will be about today, is getting into these weeds. What we've just witnessed, and I think what really speaks to the fact that you got to be careful buying stocks here, is over the past, let's call it 24 hours especially, because we had the Fed and then the Bank of Japan and then the Bank of England and then the ECB. But really over the past 3 days, because loop in the, overnight also Swiss National Bank, SNB. Let's take a few days, though, and loop in the RBA as well. The most hawkish of the G10 bunch this year. All of them were more hawkish. Every single one. The Bank of Japan was perhaps the least new hawkish because they've been hawkish all along. And for them, hawkish is not exactly a lot. They want a hike. We know that. They're not going to do it very fast. But whereas the Bank of England was due for 50 basis points in cuts this year, now they're looking at 50 basis points in hikes. Whereas the ECB was looking at nothing at all this year, is now looking at 50 basis points in hikes. The RBA already did 50 basis points in hikes. They're looking at least one more. The Bank of Canada is starting to look at a hike. So there is a global squeeze on the cost of money. Obviously, we just heard from the Fed. They're very reluctant to say that anything like a hike makes sense. So what do we see? A violent pullback in the US dollar, as you just brought up on the screen, and a big sell-off in gold. Because you know what does happen today. Those stocks don't break down. Bonds do. So yields are going higher, it would seem. And if yields are going higher, but the Fed is the least hawkish of the bunch, they're still on the menu for at least one cut, and everybody else is outpacing them by a mile, then expectations have just shifted dramatically against the dollar and also against an asset that yields nothing, gold.
FedEx earnings are out here after hours. The notable line that I saw across the screen, because share prices are up. Fiscal year adjusted EPS $19.30 to $20.10. The market consensus beforehand was $17.80 to $19. So you're getting FedEx jumping up a little bit, which one might think that fuel costs could be a problem for them. I'm curious to see what they say in their earnings call about how they're hedging these fuel costs, if they're properly hedged. At the end of the day, Ilya, is going to be a huge determining factor, right? If FedEx comes out and says, actually, this isn't going to impact us whatsoever, we're perfectly hedged for this, just going to cost us, the money laid out to buy the hedges, we're good. I don't think many companies are in that position, I would say. But yeah, Ilya, there's a few things here in the market where as you get into the second half of the day, the dollar was actually somewhat of a tell perhaps throughout all this. You had this weird asset mix earlier on Futures Power Hour with Thomas, where it was stocks were down, bonds were downish, but the dollar was down too, even though gold was off. So there was not really this huge reach for liquidity, or maybe there was. Maybe people.
Seems like you can do an almost stacking of near-term carry interest to see what does well, where you go, okay, the dollar is expected to see a cut this year, weakest. Gold is already at zero rates, down. Everything with a big shift, with a big hawkish shift in policy, pound, euro, outperforming. Australian dollar already had a hawkish outlook, so it bounces, but the vigor is not there like the euro or the pound, because they literally do an about face on policy. If you look at what's in the benchmark interest rate futures, so you can almost go along a spectrum where you go over the past 24 hours, which had the most dovish shift and which had the most hawkish shift, and where has the new ranking landed.
Yes. Well, that is something that happens over the course of today, which I think is noteworthy, because when we were on Futures Power Hour earlier, for every month from the April 26th through the March 27 meeting favored a rate hike more than a rate cut. At the end of the day now, that has mostly resolved itself when we take a look at the CME FedWatch tool real quick. We see ourselves now, yes, April, still more of a chance than a hike than a cut, and same thing for June. But then it goes back to normal, where it's like, okay, if the next move is probably going to be a cut. So the short-term vibrations in the market driving some of this. But Ilya, that was where we were at a point today in terms of how the market was reading through on oil and gas. And the BOE at a point today had 3 full hikes priced in through the end of this year after today's rate decision. So I think that this is also one of the issues that we are contending with right now. It's a very similar situation to 2022, which after the war starts, you get a few weeks of a market rally before it finally keels over. And then you get about 2 consistent months of selling into the summer. You get a summertime bounce, another leg lower in the fall, and the market finally washes out by September, October of 22. But you see this kind of episode at the front of the series of events. Not only just the issues in the front of the commodities supply chain, but then again, central banks changing their plans from easing to neutrality, or neutrality to hiking, or hiking to more aggressively hiking. This is a shoe that's going to drop because directionally, all market participants were expecting the cuts to come from a variety of places the next year. And the cost of money is now going to be more expensive, and it's going to take more of that more expensive money to pay for the everyday cost of living for keeping the lights on at your business. Yeah, so I know people are waving their little flags here. Some of the tweets and YouTube comments recently have been very endearing. I like reading them at night. They make me feel good about myself. Yeah, no, they really, you guys know how to whisper those sweet nothings to me and Ilya sometimes.
I mean, I love it in truth, because as long as I'm saying something that somebody has a strong opinion about, I know I must have said something of substance. It might have been something of epic idiocy, but at least it was epic, the idiocy.
They really don't know you're just like chaotic neutral. You're like, a view is a view. If I get 10,000 people booing me, that's 10,000 people saying my name. It's like, wow, that's very thick skin.
Hey.
So, Ilya, 66.72. We got to bounce. We got to break that out our triangle. We got to bounce into new lows yesterday. We have a little bit of a bounce back here. Notably, we're not into any sort of the consolidation again. What does tomorrow hold? Is tomorrow the end of this fear-driven market? The past few weeks, we've had this Monday bounce, crests into Tuesday, Wednesday, sell off on Thursday, peter out by Friday, and then we wait to see if things get worse over the weekend before a minor relief rally. And then is this week?
And then we go again.
And then we go again. Are we going to go again now? Or question, when the war force started on Futures Power Hour and here on Overtime, we talked about the conflict analysis run rate of munitions and floating storage, both onshore storage for Saudi Arabia, UAE, Bahrain, Kuwait, and then the offshore storage. And given what was available in the Asia corridor, and given our munitions in the region and what we have feasibly to deploy, the estimates look like 3 weeks, 24 days, maybe, of a potential war. We're now on day 19.
Yes.
Going into day 20, right?
Yes.
So are we looking at a constraint here that has always existed since this thing started, that may force the administration's hands to withdraw troops from the region, given the fact that Netanyahu today said himself, in all these comments about civilian infrastructure and Iran taking responsibility for the attack and not blaming the U.S., he doesn't have a stopwatch, but it's going to end sooner than people think. Is the munitions constraint, the floating storage constraint, is that something that we're underestimating here as bears in this market? Because that would have been something as a bull I would like to hang my hat on.
I think there are, as ever, two things here. And it's the same two things that we were talking about when we were discussing whether the U.S. would even attack Iran. Right? We were talking about, okay, the U.S. is massing forces here. It seems to be a show of strength. In the world of gangster negotiating tactics, we're putting the revolver on the desk, as it were. And there was a point there where it looked like maybe we're not looking to actually attack. And so crude oil prices unclenched, stocks unclenched, and the conversation was, okay, well, is this already over? And the argument I was making at the time was, it doesn't need to be over for oil just because the U.S. doesn't attack. Because the problem is greater than that. The problem is disruption of cheap oil to China. And there is a whole constellation of things that have come together to create a reality, be it the decapitation of Venezuela or the capture of shadow fleet tankers or Iran teetering before the U.S. got involved. One might argue the U.S. is involved because Iran started to teeter. And so there was opportunistically something to exploit.
I feel like we've been involved in Iran since forever.
Well, sure, in the grand scheme of things, but why bomb it now and not extend the bombing last summer if this was the intent?
Well,
there was a pause and a kind of wait and see, and then there were millions of people that came out to protest the regime, and then the regime killed something like 30,000 of them over a weekend, essentially. So you kind of see how this opportunistically starts to come together. But all of those things were occurring before we decided to use force. And so the issue with China's supply was going to be what it was. What the war is doing is it's obviously injecting tremendous momentum and speed into this whole thing. Now, let's say there is, as then, an off-ramp where we declare victory and the U.S. and Israel, you listen to Prime Minister Netanyahu's comments here, and you get the sense. Both him and Trump was speaking earlier today, saying this excursion, again, using the key word there, is going to be over soon. So they're looking for an off-ramp. Now, maybe they're just attempting to talk down oil markets, but it looks like they want to declare victory here relatively soon. Does that change China's oil price reality after all of this dust has been kicked up? Absolutely not.
No, that input costs are going to ripple through the global economy for a little while here, Ilya. FXI was able to recover some ground into the end of the day. A shares likewise, but still finish mostly lower. You know, the only thing that I'm really convinced of in this market here, even with today's rally, you know, Russell rallied back. I'm still short a call spread. Fantastic. Yeah. In fact, at 42 DTE, where have we seen the market turn? Ilya, right around 2,600. The 1 month is through there. The 50 days through there. That's where the market was previous holding up as former support turn resistance now.
Yeah.
This is a nice little rally to sell into something here. I could peel off a 2-to-1 or 3-to-2 rather risk to reward, risking 3 to make 2 at 65% probability of profit.
Not bad.
Sign me up. I mean,
not the worst.
Get me a little bit of that. Let's see if I can get filled before the end of the session. Crude, likewise, 8 days to expiration. I'm looking to be a buyer on dips. I want to do 2 legs here. So first 99, 100 today. I'll see you on the upside. Can
I interest you in some gold futures on the short side?
No, go. You know, don't do that to me. I'll put you in the note. I'll put you in the note.
It's had a nice little run here. It's had a nice little.
You're gonna be
I'm not mad at my futures short here now.
This is Detective Jones.
There were naysayers, as I recall.
There was a letter left here.
Flag in gold.
Chris disappeared. He just says GCJ6 scribbled all over the wall and in Sharpie with your name. What does it mean? No, it's just.
Don't worry when it rebounds into the next option cycle. He'll be back.
Vindication, though, insofar as, 2 weeks ago, for what it's worth, and maybe like intellectual vindication, because monetarily it's certainly not. But talking about how this war would impact the marginal buyer, because most of the gold that goes into the Middle East is ultimately shipped there via boat, and gold is a safe haven. So if you have to raise cash or capital, you're going to get rid of the safe havens first because they're not productive assets otherwise. Bloomberg ran a story today saying that Middle Eastern central banks have been selling gold hand over foot to raise cash.
Yeah.
So
that, by the way, that tells you, by the way, who's the real haven, right? Everybody's screaming about de-dollarization. Yeah, they're selling gold to raise cash in a crisis. What cash are they raising? Pray tell.
U.S. dollars.
Mm-hmm. Right.
Mm-hmm. Well, this also raises an interesting point that whatever happened in the past 48 hours was enough to convince central banks in the Middle East that they're going to have to get rid of some gold to raise cash.
Yeah,
that to me is a really important signal in this crisis. So, Ilya, I'm happy to take the haters in the comments and the mean tweets.
It's all good.
It's fine.
It's all good.
I was raised by 2 attorneys. You think this is going to get to me? Ilya, we were born in the Soviet Union. Come on. What do they think they're going with here? We'll be back next week, Monday, 4 Eastern, 3 Central.
Coming, folks. It's good. I
Monday
love it
through
all.
Thursday, right after last call. Ilya, have fun at Macro Money. We'll see everyone there.
the market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Crude oil stabilizes and stocks look at that with some cautious hope. But there is something strange afoot. There is a weird market here happening in gold, and we're going to try to get to the bottom of it because suddenly, of all things, gold has fallen out of bed. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we're going to see if we can't figure out exactly what is occurring here, because perhaps the last thing that anybody would expect with a war going on is for gold to decline. Now, there was, of course, some rhyme and reason to the logic that we have a crisis that's born of inflation. And for that reason, gold has a read through to interest rates. And if the inflation pushes up interest rates, well, then gold would decline as an asset that yields nothing. But there hasn't been that consistency. So we're going to try to figure out what's going on here and why, of all moments in this crisis today, gold prices decided that they're going to break down and what all of that might portend for the broader markets. But of course, as ever, let's start with a look at the bogey du jour. These are crude oil prices here. Of course, this has been the driver for this entire narrative. And what we see is we've kind of anchored into the range here. We started with a little bit of a pullback at the beginning of the week. That was around hopes that maybe the situation in Hormuz could be less bad than thought. That's after the foreign minister there in Iran, Abbas Araghchi, came out and said that the Strait of Hormuz was only closed to enemy ships, sort of hinting that if you're not the United States or Israel, then you can call Tehran and your ships will not be shot at as they go through the strait. Since then, we've kind of gone back and forth, but critically, we haven't continued to build higher. And today we get some favorable comments at the margin from U.S. President Donald Trump, who says that this, quote, excursion is coming to an end. Of course, shortly thereafter, comments from Israel's Prime Minister Benjamin Netanyahu saying that Iran no longer has the capacity to enrich uranium, that almost all of their rocket launchers have been destroyed, that most of the Navy is destroyed, most of the Air Force is destroyed, sort of running down a list of objectives met and seemingly suggesting that this thing is winding down, and even explicitly saying that this thing is going to end sooner than people think, which is a interesting turn of phrase, almost evocative of the president himself. So you get this sort of setup here where crude oil finds the top of its weekly range and then kind of settles into digestion to figure out what's next. And against that backdrop, you get a walk back from what looked like it could be a significant breakdown in overall risk sentiment. This is the current contract for the S&P 500, the ESM contract. And what you see there is we're testing the lows from November last year, but we pointedly run away from the break. We try to get under it, but we can't hold. And so while the downtrend that's defined this episode since the beginning of March is still very much intact, the market ultimately takes it back from the brink over the course of the day and doesn't give us the breakout that would then have exposed some sort of a March even lower, as we can see here, the next kind of bogey implied by a measured move that sort of takes the rounding top kind of setup that we have here and says, okay, well, here's the line in the sand, the kind of neckline for this rounding top. It's from this high to this low. And so if you project that out in a kind of crude way, then your next kind of reasonable downside objective would be somewhere over here, sort of 65.20 or so. But pointedly, we don't make the break. And there's a familiar logic here, of course, as we just said at the top of the show. It takes about a month on average for a move in crude oil to end up in headline CPI inflation. And of course, we can see from the way that this spike in crude has worked its way into break-even rates. These are the inflation rates that are baked into the bond market. They're the difference between nominal interest rates, so the usual things we quote, and the TIPS yield. When you take the difference between the two, you, of course, get the magnitude of the inflation adjustment to get from the one to the other. And so this is the inflation expectation that the bond markets have. This is the 5 and the 10-year, the two kind of liquid ones. And when you look at this, you see, as crude oil spikes, inflation expectations in the bond market spike as well. And so what that immediately tells you is that you're looking at a sort of read through to monetary policy from this. And in that you've had a pause in crude oil gives you that relief in equities. Where it doesn't give you relief, however, is on rates, because whereas the breakout in the stock market seems to have been averted, at least for now, the breakout in bonds does not appear to have the same sort of thing occur here. Looks like we actually did take out that bottom on the bonds, and of course that portends a further move lower, and by extension, a further move higher in interest rates. And it is this potential move higher in interest rates that seems to explain the weirdness that we then see in the price action today. Now, here's that break in the bonds, implying that interest rates are heading higher. And yet, the US dollar takes a beating. It pulls back hard from this range top that it was testing going all the way back to basically the middle of last year, which is a bit strange because, of course, since the beginning of this war, the story has been of a US dollar that's been going higher. There it is. As bonds have been going lower, that is, interest rates have been going up. So as the dollar's yield advantage, implied here, has been improving, it has, in a textbook way, gone up. But not today. And then, of course, gold. Gold started to move lower yesterday and started to have some momentum behind it. Of course, it gapped down at the start of the week, ostensibly because of those same positive comments from Iran that got this pullback in crude oil going. But this seems to be like something else entirely. We get the leg lower yesterday, again, sort of in the context of what's going on with the inflation expectations argument. So yesterday, stocks go down. Okay, that makes sense. We look at what happens with the bonds. Yesterday, they go down. Okay, so higher yields. So against that backdrop, okay, so then gold down. We're back to essentially the core tenets of what's been driving the price action around this war. Crude oil to inflation to higher rates. And then today, not only does this move accelerate, but it seems to break through the bounds of this much larger advance. And so the question starts to be, well, so rates are going higher, but the dollar is going down and gold is going with it. What's actually occurring here? What's the markets trying to say? These things seem to be at odds. And so what we've done here is try to peel back the sort of physical mechanics of what's occurring here. Here's obviously the baseline against which we're getting the squeeze in crude oil. The traffic through the Strait of Hormuz has been essentially zero since this thing started. And so, not surprisingly, you take a huge amount of oil and other things that move through the strait off the menu, and that's oil, it's natural gas, it's all manner of petroleum products, it's things like helium, inputs into fertilizer, inputs into smelting, inputs into petrochemical manufacture like plastics, all manner of things. You basically say whatever part of those markets moves through the strait, and it's quite a bit. It's double digits for most of the things we've just talked about. Well, obviously, their supply is constricted. So, the first natural thing that happens is the cost of shipping goes up. Obviously, there's a risk premium component. There is also a scarcity component. If all of a sudden everybody is scrambling for supply because a bunch of their ships are stuck in the Gulf and can't get out, or were en route to pick up cargo in the Gulf and now need to be turned, this has, of course, scrambled the supply of not only the stuff that needs shipping, but also the ships needed to actually do it. And so the cost of shipping, not surprisingly, higher. In fact, there's an ETF that actually tracks this. It's not the most liquid thing in the world, but you can always use it as an indicator and just take a look at what seems to be going on here. That's the BWET ETF, and we can see it is absolutely soaring since the beginning of the year. Now, most of the traffic through the Gulf is going to Asia. And we can see that even before we get there, overwhelmingly, it's China. This is why we constantly on this show harp about all of this squeeze in oil prices since the beginning of the year, even before the war began, is about supply to China. Here it is right here. And these are figures as of 2024, but obviously we can see they hold relatively steady year on year in terms of the substance. It's China, and then it's India, and then it's Japan, and then it's South Korea, then it's the rest of Asia, and only then do you get to Europe, the US, and assorted others, including Saudi. So you have a situation here where you would say, okay, well, if you close the strait, who gets hit hardest? Asia, then Europe. And you can see that in the squeeze on natural gas prices, where you can clearly see that there is a sharper move here in what's going on with the price of gas, the Dutch benchmark in Europe, and the NYMEX benchmark for Japan and Korea. Now, importantly, these are quoted in different currencies. So the Dutch one is quoted in euro. The benchmark for Asia is quoted in dollars. So as you look at this, the important thing is to pay attention to the reference points. When you look at the Asian benchmark, you're looking at the highest levels since January 2023. When you're looking at the European benchmark, you're closer to sort of the beginning of last year, maybe the end of 2023 or so. So it looks like the squeeze in Europe is perhaps a bit more modest, and why it is a bit more modest here makes sense. They're less impacted. They rely less on what moves through the strait than does Asia. But that doesn't mean they're by any means immune, because what we see here is that their natural gas inventories now coming up on the end of winter and going into the summer have been depleted to levels unlike we've seen since basically the onset of the Russia-Ukraine war. And so Europe is going shopping this summer. They're going to be looking to seriously restock their inventories. And so while there is maybe not so much pressure on European gas as on Asian gas, because they're less of a piece of Hormuz, when they go to restock their inventories against a global supply shock type of backstory, they're going to squeeze the price of European gas meaningfully higher, most likely, just on demand grounds. So we've got a breakdown in shipping, making those costs higher all across the system, not just for energy, not just for Hormuz. We've got a squeeze in energy costs, and of course, energy feeds into everything else because almost everything takes energy in order to work. And although most of the impact is Europe and Asia and disproportionately to Asia, there's a long tail on the situation in Europe because they're going to have to refill these inventories. Take all of that together against the backdrop of inflation that was already starting to perk up globally. This is OECD data here, and the key is looking at the top here. What this is the proportion of countries within the OECD that had a rising headline inflation rate and core inflation rate. And not surprisingly, these move in parallel. Now, OECD is a club of mainly rich countries, so a lot of the world's GDP is represented in these numbers. The majority of it, surely. So you look at this and you say, okay, between 2024 and 2026, we went from something like almost no countries seeing inflation rise. And that's after the shock post-COVID from 2022 when all the central banks started to hike in a hurry and inflation cratered. This is where it got stuck. And you can see then here, almost no country within the OECD has inflation rising. But over the past 2 years, now 50% of the OECD countries have inflation on the rise. What's key here is this chart takes us through January. It doesn't even include the war. That data isn't even available yet. And so what you see here is not just what is happening now and its impact. That's clear from looking at shipping rates and natural gas costs and all of it. But what the baseline was before the shock hit. Inflation risk was already bubbling underneath the surface. Now, what have we heard from all these major central banks this week? The RBA, of course, issued a rate hike. We knew that was coming. And now it looks like, whereas before they were set for 75 basis points for the year, their expectations are creeping. And maybe they're not just due for one more hike after they've already delivered two to make it 75 basis points, but maybe they'll get to 4 and make it a full percent. Expectations for the Bank of Japan were relatively steady. They were on the menu for 50 basis points. They still are. They announced policy overnight and didn't say very much other than they're watching the Middle East with some interest. Obviously, the expectations for the Fed have been significantly trimmed back. We heard that feisty performance from Fed Chair Jerome Powell yesterday. So now we've gone from expecting perhaps 50 basis points in cuts to almost none. Maybe there's the possibility that we'll get a cut, but it's maybe a 50-50 shot at this point. But there has been a massive shift in expectations for the European central banks. Whereas the Bank of England was looking at 50 basis points in cuts for this year before the start of March, it is now looking at 50 basis points in hikes. Whereas the ECB was looking to stay at 0 the entire year, no cuts, no hikes, nothing. They're now looking at 50 basis points in hikes. The overall trajectory here from the Bank of Canada to Europe to the US to Australia, with the sole exception of Japan, where interest rates are still less than 1%, we have more expensive money as a consequence of this war in the expectations across the board. Now, the first thing that does is it creates a sort of ranking. Where are the interest rates the highest in terms of where they're ending up at the end of the year? Well, the biggest swing is in Australia. But the biggest change in sort of thematic posture is, of course, Europe, because Australia was already on the menu for 50 basis points. Then it became 75, and now maybe a little bit more. That the RBA is hawkish was already in the market to a large extent. But these swings for Europe are complete about-face changes. If, of course, the central bank follows what the markets are starting to bake in. But is it really any surprise then, against this backdrop, that the euro is up 1.2% today, the pound up 1.3%, the Aussie dollar up only about 0.9596. But the European currencies are absolutely scorching on the upside. And it's because while everybody's outlook has become more hawkish, the yield advantage story between Europe and the dollar seems to have changed. Now, that seems to start to explain what we're seeing right here. But much bigger than that is the overall shift for gold. because gold yields nothing at all. And while the dollar is still going to yield something, even if there's a cut or two, gold yields nothing. And so if all of the world's central banks are suddenly starting to increase the yield on holding fiat currency of any major kind, well, then what appeal is there to holding gold, which yields zero? And in real terms. So you then start to see, well, if we're going to have a breakout in yields, as we seem to see right here, and if what that is going to mean, at least where that seems to be coming from, is from the idea that all of these central banks now have a major inflation issue and that they're going to have a very different monetary policy posture than anyone expected, even just a few weeks ago, well, then the appeal of an asset like gold is a very different kind of calculation in this environment than is really anything else that has moved. And that you're seeing this occur even as the overall sentiment story seems relatively anchored, because as we just saw, that continues to follow the ebb and flow of crude oil. That suggests whatever is going on here is perhaps a longer lasting thing. Needless to say, of course, we're talking here about a situation where central banks are expected to change course for an extended period. It takes time for all of this inflation to work its way through the system. And so if the markets are concluding that what this means overall is that central banks need to be here and not here, well, then the appeal of gold is diminished in a perhaps larger way. So if that's what's going on, then positioning wise, it makes sense to sit in this short in gold futures that we've been nursing here for a while. In fact, I added to it yesterday as some of those technical levels started to break down. I'm still sitting on the bullish side for the longer term. So I still have these puts that I sold. There's 57 days in them now. And of course, they're not doing well against this backdrop, but because of all of that duration, their exposure to underlying delta is significantly diluted. Whereas, obviously, the futures are essentially a delta one kind of instrument. They are the underlying for the most part. And so when you look at this, then you're essentially seeing a kind of a view of two minds. Obviously, we're losing steam here in gold near term, and that's working for this short. But also, gold has been ignoring a lot of these narratives and yields and the dollar since the beginning of last year, because as we've discussed here, it's really benefited from the deglobalization idea and the idea that you need some sort of way to move value in a non-sovereign way. Because if the US and China are going to be at odds and they're going to weaponize their economic systems against each other, third countries need a way to move through the world and not touch those things and be disrupted by them. And so I'm on the long duration side of gold with a bullish bias and with a view to diminished volatility. This is selling puts here, looking for that to ultimately reassert itself. Now, I'm also long the dollar, which is not working today, but I don't think we've crossed any Rubicons. And I think ultimately, if risk aversion continues to be the story of the day, as we see from the stock market, it hasn't overturned that bias, then the haven appeal of the dollar, I think, is likely to prevail. Obviously, it's had this run since the beginning of March, even as it's had the most bearish, or at least the most dovish policy outlook of the bunch. Now it's a different configuration. It's still the most dovish, but at different gradients. And so it hasn't broken down yet, but I'm watching it very closely and would be getting out of these in a hurry if it looked like the story had ended. Still short risk in the Russell and the NASDAQ and the S&P. Still long oil through these call verticals, expecting the up move to resume. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, please like and subscribe. Macro Money returns Monday next week. Happy trading.